number, so keep an eye out on that. Other than that, cues for today, we had a commentary that came in between India and European trade, which is at an advanced stage, is what Piyush Goyal has mentioned. Prime Minister Modi also spoke to the EU heads, and that is some positive cue there. India's forex and bond market, which was expected to be shut today, that is open, and now that holiday is going to be on Monday. Domestic economic data we'll keep an eye out on today is going to be the foreign exchange reserves. And Nifty implied open as of now, after that run-up yesterday we saw, and then by the end of the day, Nifty almost closed at the day's lowest point. Today, Nifty implied open, indicating almost a 60-point uptick. So that is something that we'll be watching out for in terms of cues from the market. But let's go across to Gaurav, who's here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Gaurav.
Well, good morning. First, let's talk about Zydus Life. This company has entered into an agreement with Synthen, a company which is actually an agreement for supply of the drug called Ozanimod capsules for the US market. Other than that, Biocon is also in focus, and the reason being that US FDA recently concluded its inspection at one of the facilities of Biocon, which is situated in Bangalore, and they have concluded with 5 observations under Form 483. NTPC, this is also in focus today, and the reason being that the company's operations at NTPC Tanda Thermal Power Station Stage 1 has been discontinued permanently. So definitely let's watch out on this stock. Aarti Truck, when we look at this company, they have started their manufacturing at one of the facilities in Gujarat. When we look at this facility, company has invested around 220 crores, and company said that the capacity utilization will be 1/3 for now, and over the next 12 to 18 months, the capacity utilization will reach its 100%. Other than that, Sanman Capital, this stock is in focus, and the reason being that company has appointed Mr. Himanshu Modi as Deputy CEO from 4th of September. Remember, Mr. Modi was serving as Group CFO at Suzlon. And lastly, let's also focus on RPP Infra, because this company has given an order for 134 crores for road improvement projects in Maharashtra.
Okay, Gaurav, thank you so much for that. But in the final leg of our, setting you up for trade, FNOQs that are going to be very, very important, Sudarshan is here to give us those details. Good morning, Sudarshan.
Good morning, Vinny. So yesterday we thought that it might be one of the best trading days in the last few months, but by the end of the day, we failed to hold the gains, and especially broader markets, we saw big downtick coming from the day's high. Nifty Bank, almost the intraday range was of almost more than 1,000 points, and at the end closed with a cut. And it was a similar picture for Midcap index, while Sensex and Nifty managed to close in the green, almost near flat line. For today, GIFT Nifty is indicating a start with a gain of 60 points, but the big question remains, will you be able to sustain the gains that we see in the start of the trade? We thought that after a big fall from the intraday highs, there would be like big selling coming in from FIs, but yesterday also in the cash market, FI's sell figure was just more than rupees 100 crore, while DIs continue to buy. They have bought more than rupees 2,200 crore in the cash market yesterday. In the index futures too, FI's sell figure was just around rupees 1,100 crore, and they have added long positions of around 500 contracts. But one just minor concern is of addition of short contracts. Yesterday we saw more than 6,200 contracts being added on the short side. As far as the long position is concerned, it remains around 8%. On the short side, it remains around 92%. On the option front, 24,900 and 24,850. Saw huge option build up at the same time. Premium has sharply come down from day's high, while 24,500 and 24,550 premium have moved higher. Now, lastly, stocks in support for Nifty, 24,600. Resistance remains around 24,900. Stocks in focus, one stock remains in the band, that is RBL Bank. One stock that might be in focus is BSE. Yesterday, despite market seeing a sharp fall from day's high, BSE managed to hold on to minor gains. So, keep an eye on the stock today.
Okay, Sudarshan, thank you so much for that. Keep an eye on those important cues in the world of FNO. But moving on to an Network 18 exclusive, Commerce Minister Piyush Goyal says that India and United States relation is the most consequential. Goyal also said that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with Trump administration. Listen in.
Till about July 6th or 7th, things seemed to be going fine with in our negotiations with the US. Then in a matter of weeks, we had a tariff of 25%, then another 25% on top of that. What went wrong in these few weeks?
Well, I think the US-India relationship is one of the most consequential relationships on the globe today. We are two very large democracies. We believe in the rule of law, We are allies and friends for long. We have had certain blips, like we had the sanctions post the nuclear tests in 1998.
Yes.
I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come.
And how soon do you expect things to resolve?
It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship where we contribute to each other's economies in different dimensions and will continue to do so.
It's comforting to hear these words from you. And we also picked up that you said somewhere that things could happen as soon as November. Is that a correct?
Well, if you recall when Prime Minister Modi and Honorable President Donald Trump met in February, they had tasked the two teams to conclude the first tranche of a bilateral trade agreement by fall of 25, which is about November 2025. And I'm sure we will continue to be engaged to try and find solutions to reach that outcome. If at all it's give and take a few days, a few weeks, a few months, in a nation's history, such small periods will not define long-term objectives and goals.
I think what surprised and even shocked some people was the erratic and incendiary language that was used by, some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
And more commentary coming in for Piyush Goyal. Well, he said that the GST reforms are transformational for the economy and the industry has committed to pass GST cuts to the consumers.
And industry has committed to us that they will make sure that the full benefit is net of input taxes is passed on to the consumers. So consumers are in for significant gain. And I'm very, very confident. Taxes, lower prices will give buoyancy to demand, and higher demand leads to higher taxes, and ultimately higher demand also promotes more investment because the demand leads to more manufacturing in India. So it's a virtuous cycle of growth, and the multiplier impact is what will give India a big boost. We are currently collecting nearly 2 lakh crores every month. And with this boost in demand, the revenue will probably go up rather than being a revenue. Fortunately, the timing of the GST reduction at such massive levels couldn't have been better. This will give a big impetus to domestic demand, which will help some of the exporters who may lose a part of their business. I'm very confident that this and the impact of this starting on the first day of Navratri on 22nd September will give a big leg up to the economy, to GDP growth, will ensure that Indian investments continue to power on, will attract more people to set up base, because ultimately when there is demand, there will be interest in investment to meet that demand.
Okay, that's the commentary that's coming in from Piyush Goyal. But on that note, we're going to step into a very short break. After the break, we'll get you cues from Wall Street. Stay tuned in. Welcome back to Welcome back to Power Breakfast on CNBC TV18. Now, let's move on and talk about the U.S. market. Wall Street ended Thursday's trading session higher. The Dow added 350 points at close, while S&P 500 closed at fresh record highs with gains of 53 points. Even the Nasdaq surged nearly 210 points. Let's go across to CNBC's Mackenzie Sigalos, who is getting us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes in Thursday trading, despite new private payroll data that came in below expectations. The Dow was higher by 350, the S&P 500 climbing 54, and the tech-heavy Nasdaq was up 210. Now, the private sector added 54,000 jobs in August, according to a monthly report from ADP on Thursday. Now, ADP's number is short of the 75,000 that economists were expecting, and it's down from July's revised gain of 106,000. The release is just the latest signal that there is softness in the labor market. ADP said the momentum the market saw earlier this year has stalled due to uncertainty and cited consumer worries, labor shortages, and the AI revolution for slowing growth. Now, the monthly jobs report from the government is due to be released on Friday. And the beer brand backed by football stars Travis and Jason Kelce reportedly claimed a roughly $200 million valuation in its first round of fundraising. According to the Wall Street Journal, light beer maker Garage Beer will get funding from the private equity investor Durational Capital Management. Now, the fundraising money is reportedly earmarked for marketing and expansion plans. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. Meanwhile, the big jobs report data is due later today. Economists polled by Dow Jones expected an increase of 75,000 jobs. These numbers could affect the Federal Reserve's next move and could raise more questions on the Fed's independence. Let's go across to CNBC's Steve Leisman, who's here to give us more on this.
Controversy surrounding Fed personnel, including subpoenas filed in the alleged mortgage fraud case of Fed Governor Lisa Cook, has markets leaning towards a more dovish Fed outlook. The probability of September rate cut rising to 98% and 56% for October for a second cut that had been in the mid-40s, and for sure a lot of confidence in a December rate cut at 92% probability for the second cut of the year. Looking out to next year, the Fed funds December 26 contract trades with a 293 yield, suggesting the Fed may have far to go, and that's one of the lowest yields for this contract. By then, 5 of 7 board members could have been appointed by President Trump. In testimony, Fed Governor nominee Stephen Myron told the Senate Banking Committee he supports Fed independence, but he also said he would only take an unpaid leave of absence from his job as CEA chair, returning after fulfilling the 4-month opening in the Fed job. Democrats saw that as a conflict since his job performance at the Fed could determine if the president wants him back as CEA chair. But Republicans, they did not seem concerned, and he could be confirmed before the Fed's September 16th meeting. On the economic front, ADP private payrolls came in at 54,000 versus an estimate of 75,000, and that compares with a non-farm payroll estimate for Friday of government and private sector jobs of 75,000. New York Fed President John Williams sounding a bit dovish in his speech, noting the cooling in the labor market, and said he thinks it's appropriate for the Fed to move rates more towards a neutral stance. Steve Leisman, CNBC Business News.
In fact, let's also listen into Federal Reserve's chairman nominee, Stephen Moran, who says that he will act independently, as the Federal Reserve always does if elected as the new chairman. Listen in.
The president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
Has anyone in the administration asked you to commit formally or informally to vote to lowering interest rates?
No.
Let's also listen into some opinions on what the Federal Reserve's next move could be from the market experts as well as economists.
Like many people, and unsurprisingly, we're expecting a rate cut in September. I think, the October side is up in the air. December, more likely. But I think people who are planning on a rate cut every meeting from now until, say, the midpoint of 2026 may find themselves disappointed, that we're likely to see the Fed pause and evaluate the data, and we're expecting macro volatility over the course of the next 6 months.
Look, the Jackson Hole speech was a pivot. It was, we're not sure whether to focus more on inflation or the jobs picture. After that, it's jobs, jobs, jobs. The job market is slowing, and I think that obviously raised the probability, and I'm in the camp just about like everybody else, that they're going to lower rates. It'll be interesting what they say around that. Is this a one and let's watch for a while, or is this the beginning of something more and the market's looking for that cue?
And US President Donald Trump has signed an executive order to implement US-Japan trade agreement. The deal lowers tariffs on Japanese automobiles to 15% and includes a $550 billion investment commitment from Tokyo. In return, Japan has agreed to expand market access for American goods across sectors, including manufacturing, aerospace, agriculture, food, energy, automobiles, and industrial products. So that's the latest update that's coming on the tariff front between US and Japan. On that note, we're going to slip into a very short break. After the break, we'll get you the cues from the world of commodities. Stay tuned in. Thanks for staying tuned into Power Breakfast on CNBC-TV18. Now let's go across to Manisha Gupta, who's here to tell us what's happening in the world of commodities this morning. Good morning, Manisha.
Morning, Vinny. Thank you for that. I'll start with crude oil prices, which have declined for a third straight day. And with this, we are heading for a weekly decline. What the markets are focusing on right now is the U.S. crude inventories, which have gained by 2.4 million barrels in the previous week. It is also about OPEC Plus meeting on September 6th, where there is a potential production increase on cards as well. And then it is the end of summer driving season in U.S. The U.S. trade tariff impact also continues to weigh onto the market. In the meanwhile, the U.S. president now seems to be urging Europe to hold a complete Russian oil imports there. So plenty happening in that space. But I also want to talk about the precious metal prices, which after hitting all-time highs have gone in some sense of consolidation. The markets are looking at now the U.S. Fed meeting, which is on in the next week. But ahead of that, it is going to be about the U.S. non-farm payroll data that comes in today, and the further direction would come in from that.
Okay, Manisha, thank you so much for that. Important updates coming in on the commodities front. And in some actually somber news that has come in overnight, Italian fashion designer Giorgio Armani has passed away last night at the age of 91. His net worth is estimated at around $12 billion, and his company turned over some 2.3 billion euros a year. Now, Armani is considered Italy's third biggest fashion group behind Gucci as well as Prada. A private funeral will be held on Monday in Milan. And with that, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, last day of the week as we go into the weekend. It's not a long one. I think the last one was, guys, right? The last Friday, I think Thursday was the last day.
No holidays in September.
No holidays in September.
And Monday, the money markets are closed. So rubbing salt in the wounds of all the equity players.
All RBI holidays, no, all stock market holidays are RBI holidays, but not all RBI holidays are stock market holidays.
Two of them.
A point to start the show on. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. Nigel and Sir will be with me. Guys, morning.
Well, good morning. Market's a little bit jittery, but good times, right? Today's Onam, I think, at the last day. Happy Onam, Prashant, to you, your family, and all our viewers as well out there. And it's Teachers' Day as well. So happy Teachers' Day to both of you. Learned a lot from you all over the last few years.
Likewise.
And all our viewers as well. We learn from each other. And in fact, wishing all the teachers, my teachers, all of your teachers as well, a very, very happy Teachers' Day. Let's keep learning.
Absolutely. And of course, the biggest teacher of all is the market, right?
Yes.
Which we learn from every day in ways that we don't understand, but we eventually do kind of understand. Accumulated body of knowledge. And of course, that Onam wishes, Nigel, thank you. Surabhi, thank you. And in Malayalam, we say, Ona Shamsagal, which means the greetings of Onam.
Oh, lovely.
I don't think I'm going to be able to get out of the studio to get a nice Onam Sadhya, but we'll figure something.
We'll figure. We'll keep reminding you that that'll happen. And by the way, guys, I mean, it's been an interesting week for the market as well. In the midst of festivities, the Ganpati festival will be winding up, Eid, Onam. The GST bonanza has happened. But despite all the talk, all the sound, all the festivities, market hardly changed.
No, absolutely. And I think we'll talk about that in just a bit. Let's just take it from the top, right? And U.S. markets, for what it's worth, because it kind of sort of has faded into the background, what's happening in the U.S. It's very much local-driven events which are leading and, sort of moving the market here or there. At least the expectation is that it's going to be a dominant driver. So far, that has also not worked out. So S&P ended about 0.8 higher, NASDAQ about 0.9, almost 1% up. So U.S. equities, by the way, hitting new all-time highs last night. There is the big jobs data tonight, and I think it's important. Remember the last monthly jobs data, we came out that Monday, and the market really had a big move on the back of that jobs number. It was a shocker. So this one, in that sense, is going to be important. The consensus expectation is 75,000, but I think the whisper number is about 85 to 90,000. We'll see how this is going to come out. It comes out right at U.S. market opening bell. ADP jobless claims data last night, it kind of sort of added to the evidence of a cooling labor market in the U.S. The macro markets, the 10-year yield was down about 5 basis points. You had the dollar index, which didn't make a big move. It was kind of flattish. Oil prices continue to drop a little bit, nearly 67. OPEC Plus is meeting on Sunday, and there is a concern that there's going to be more oil in the market, that they're going to once again increase supply, boost supply. Now I'll just circle and tie in the levels here. So the Nifty and the market broadly cooled off quite a bit, and so much hand-wringing and anxiety about why is the market not doing well, even though we've got the GST cuts, which were on anticipated lines. But I think, without getting, I don't think there's any reason to be pessimistic. This is long-term positive. We said this yesterday morning as well. Long-term is one thing, trading is another. In trading, what matters, of course, many times, more than, the news event itself is the pre-positioning. People were prepared for it. I mean, as I said yesterday, we reported point by point and down to the last T. Our colleague Timsy had reported on what items, what rates are going to come, and they all kind of were exactly the same what we had reported. Markets have done very well. The auto index was up 7%, consumer index was up 7%, the FMCG index was up 4%. That is 14th of August till the day before yesterday's close. So a lot of pre-positioning into events like this always is the case, but that does not mean that the event itself is somehow diminished or its importance in that sense is diminished. So, having said that, the levels are up on your screen. The Nifty resistance, let's just start with the support, 24,522. That's a support, immediate support for the Nifty. Resistance 24,878, which is the 61.8% retracement. Same level. Yesterday, that level got taken out and then we ended far under it. So that's the first one. And then yesterday's high, which is 24,980. So 24,878 retracement, and yesterday's high 24,980. And of course, support's up on your screen as well. For the Bank Nifty, the support is at the low of 53,561. You could look at retracements, you could look at hourly averages, but I think, the important one on a daily average basis is the 20-day. Bank Nifty, of course, the weaker of the two indices, has been for a while. 54,905 is the 20-day moving average as far as the Nifty Bank is concerned. So that's the setup. GIFT Nifty implying a 61-point higher start. Nigel is standing by with what the F&O stats look like. Nigel, over to you.
Well, we went through a phase where even bad news is being ignored. Now, what we have seen the last week or so is even good news is getting sold into. You've got a great GDP print. You've got that GST boost as well. And yet the market is not rallying big time. So that's the kind of phase we are in. But before we get to the trade setup, just want to point out to our viewers that, there are going to be a couple of settlement holidays. That's on the 5th as well as on the 8th, which is today as well as on Monday. And important to know that any share that you bought yesterday, today, or even on Monday, the settlement will happen only on Tuesday. So Tuesday effectively is a big settlement date because there are going to be 3 days where the settlement is going to take place on Monday. What that effectively means is when you buy any of these shares, you'll see it in your account only on Tuesday, that too in the second half of the day. So just want to put that, and that could create some kind of margin headwind just in the near term, because there'll be some kind of, margins that will be a little bit crunch. So just keep that in mind. The good news, though, is that tomorrow the banks are open. So at least there'll be some kind of movement. Moving to what kind of trading action we saw yesterday, the FIs went ahead. They had a short position to the tune of close to around 6,000 contracts, which took the short positioning in percentage terms at around 92%. And now you have the net short positions over the last few trading sessions, last 1 week or so. It's moved up by close to around 10%. So the FI net short positions are at around 1.88 lakh contracts, while the clients continue to remain net long. Short positioning at around this 1.9, around 2 lakh contracts, you'll be bracing for that short covering bounce. The problem is it's not durable and the FIs continue to pile on the shorts. Moving to the PCR, then that danced away to around 1.2. That's come back to around 0.8. And yesterday, there were 2 strikes that were very active. But the call writers, they came back into play. Just take a look at the 24,900 call. Massive open interest built up. The open interest built up was close to around a crore. While on the downside, the put writing is still a little bit jittery. You can just look at the kind of built up. You've seen only 20 lakh shares out there. But that's the important mark, with premium at around 120 rupees, which gives you a broad range that we're looking at on the Nifty itself. So the recent high, the recent low, that becomes the important mark. So that's the broad range, 24,405 and yesterday's high. That's the range. In the near term, today, by the end of today, you'll want at least to defend the 20 DMA. We're 40 points away from there, so you'll want to defend that mark. And then you'll want to move up. Yesterday's high as well as the 50 DMA around the same levels. The Nifty Bank, that needs to find its form now. It's been a bit of an underperformer. But those are the important marks you're looking at. For today's trading session, you'll want it somehow to get past that 54,500 odd mark. That's going to be the important mark. And the reference point on the downside comes up for you on the screen. In terms of stocks that I'm looking at, Aptus, there was a large trade yesterday. That got cleared out. The stock actually in the last 1 month was a relative underperformer. Post a large trade getting out of the way, and if the management can get their act together, I'll keep an eye out on this stock for today and for the next few trading sessions.
Okay, all right. Well, by the way, if you're looking at the market overall, 5 trading sessions, right? And we are better off than where we were on Monday. There's no taking away from that. The Nifty is up about 1.2% so far this week. The Midcap index has done even better, over 2.2%. And individual sectors, autos, metals, let's not forget, the rally is between 3% to as much as 4-5% on some of these sectors. So overall, it's been a good week. And let's see if Friday can add to the tally. Asian markets, by the way, are holding up quite nicely. Japan, China, all these markets are up. On Japan, the good news that came in was that those auto tariffs have been formally lowered, and auto is a big export for Japan. So that's what's driving the Japanese market. Hong Kong's up as well. Taiwan, mainland China. Most markets are up. So let's see if this rubs off on us. Let's pull up the implied open as we move along. Like I said, we've already added about 1.2% on the Nifty, and it suggests that the opening is going to be about 62 points higher. Okay, let's get to the equity call of the morning then. Yogesh Agarwal of HSBC says that the pro-growth initiatives adopted by the government and central bank this year have turned the environment more favorable for Indian equities. He says these GST changes combined with benign inflation, income tax cuts in February and accommodative monetary policy create an environment for sustained growth. He says a revival in demand should also provide a much-needed boost to private sector capex that has been sluggish for several years. That's a view from HSBC coming through. Cameron Brandt, Director of Research at EPFR Global, is joining in to talk about the direction of money and where it seems to be going. Cameron, good to have you in. Even last time when we were speaking, you were telling us that some of the other emerging markets like China, South Korea, they've been attracting a fair share of dollars. Tell us what's the latest flows data pointing out? How are EM funds overall doing? And India dedicated funds, any noticeable, change or reversal?
So the headline number is fair, but not particularly stellar for emerging markets equity funds. Inflows have been fairly consistent, but they've not been hitting peaks that we've seen certainly last year. That said, the interest is broadening, and that includes India. This past week, dedicated India funds posted their first inflow after 5 weeks of outflows. And there's certainly a lot of talk about emerging markets and the value they offer. And we've seen very steady flows now into the diversified global emerging market funds, which are usually the precursor for liftoff, but it still hasn't quite happened yet.
So that's good news. I mean, you're saying that there's some reversal. After 5 weeks, India dedicated funds are also pulling in the money. What about China? Because when we speak to a lot of fund managers, there seems to be a fair amount of interest, global interest in Chinese markets as well. So what's happening there? And any other, key shifts? What about US flows? They continue to be fairly robust because the market's been hitting newer highs on almost a daily basis.
Right. So starting with China, we're starting to see flows return there, but not exceptional. People aren't jumping in with both feet, at least not yet. What we have seen is a definite sort of reversal of flows to the previously quite popular GEMX China fund group, one that was growing quite aggressively last year, and is still adding new funds, but not seeing much fresh money. U.S. equity funds, in some ways, parallel China. They're seeing okay amounts of fresh money, but it's not what you might expect given the stellar rebound of the major indexes through this summer. We did see, since I last talked to you, a hiatus in the rotation to Europe story, though flows turned positive again this week. But there's definitely some investor anxiety that the fiscal stimulus, driven in part by the need to rearm that they were penciling in for Europe, is threatened by both the possibility of a ceasefire in the Ukraine and that markets may start to impose fiscal discipline through bond yields.
It's a pretty poor line, technical issue there. Cameron, we'll leave it there for now. Thank you very much for joining us. And we hope to talk to you on a better line and maybe with better news in terms of flows as well. Appreciate your time here on CNBC-TV18. Let me just quickly run you through the interactions which are lined up here on the program. 8:35, we have the management of City Union Bank to talk to us about their FY26 outlook. 9 o'clock, Hiten Mistry of Equitas will join us on the impact of GST reforms on the FMCG space. Sridhi Bhattacharya will be with us at 9:20. He's a market master of the day. 9:35, the management of Bata India. Footwear stocks all rallied yesterday sharply. V-Mart will be speaking with us. Again, another space where perhaps at the mass level there is a big impact, big delta. We spoke with him, by the way, going into the GST meeting. And of course, in our special segment, Indianomics, Lata will be in conversation with Neelkant Mishra and Ashish Gupta on macros markets and how they stack up after the GST cut.
Time to slip into a short break. On the other side, we go full tilt on stocks that we're looking at for today's top 10. HDFC Life, ICICI Pru Life, SBI Life, Sri Digvijay Cement, Saman Capital, Aptus Value Holding Finance, Zydus Life, Aarti Drugs, and Bharat Forge. All of them will be reacting to positive news flow, while we have Biocon that will be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Qs are actually pretty good this Friday morning, and it's been a good week, all said and done. We are up between 1% and 2% on the indices, Midcap, Bank Nifty, and the Nifty itself. And the implied open is telling us that we'll start another 60-odd points higher. Let's see where it is now, 64 points higher. So the bills will want to continue with the momentum and close Friday on a high. So let's see if that happens or not. But there are, of course, individual stocks to take note of as well. And our team is standing by with the list of top stocks to watch for the day. Guys, morning to all of you. And finally, thank God it's Friday. So let's start with the insurers. They were dominating the news action yesterday, trying to figure out a live post the GST changes. And we had some exchange notifications from some of the companies. So tell us more.
So yesterday we saw that all these insurance names have slipped in trade, and they were like down almost 3 to 4% from days high, and that was on the back of GST Council announcement. GST Council has exempt all the premium that you or I pay on our insurance from GST. So it might be a relief to customers, but the big question was, will this impact on embedded value of life insurance companies? So now these companies have released statements. So first, HDFC Life is saying change will spur demand over time, and that will be accretive to value new business, and it sees less than 0.5% impact on embedded value, and it maintains its target to double its VNB over next 4 to 5 years. Next is SBI Life. It sees an impact of less than 0.2% on its embedded value due to transition in this tax regime, and ICICI Prudential, because it's ULIP heavy, it sees an impact of 1% on its embedded value. So I won't be surprised if we see a recovery in all these insurance names in today's trade.
Okay, all right. Thanks a lot for that, Sud. Well, I'm looking at Sri Digvijay Cement, and there are two pieces of news. The first one, the promoter entity True North Fund, they have gone ahead and they've agreed to divest 50% of the 55% stake they held in the company to India Resurgence Fund. That's the platform that's backed by the Pyramid Group and Bain Capital. The sale will take place in 2 tranches. The price is around 85 rupees that their deal will be done, implying a deal value of approximately 630 crores for the 50%. That translates to around $80 on a per ton basis, based on the company's integrated cement capacity. The transaction obviously will trigger an open offer for the additional 26%, and that will be at around 92 rupees per share, which is around where the stock price is. The second piece of news is Sri Digvijay Cement has also approved a 10-year exclusive cement distribution agreement with Highborn Cement. That's going to further strengthen their presence in Gujarat. As part of the agreement, Sri Digvijay, well, they'll extend a refundable deposit of around 400 crores to Highborn, and the distribution agreement will be valued at around 600 crore rupees annually with some kind of provisions for revisions. Now, Sri Digvijay Cement, they have the option to go ahead and acquire 100% in Highborn within 8 years. Together, both the companies, well, they'll become a larger entity. The grinding capacity goes to around 6 million tons odd in a very, very competitive Gujarat market. But since this deal is out of the way and since they have a strategic plan going ahead, going with green on Sri Digvijay Cement. But, let's go across to Gaurav, who's here. Gaurav, good morning. I think they dressed us up alike today. Inch pinch. But you're tracking 2 companies. Tell us more about them.
Yeah, 2 NBFCs in focus today. First is Sanman Capital, and the reason being that Mr. Himanshu Modi has been appointed as Deputy CEO here. Now remember, Modi comes from the background. He was CFO, Group CFO at Suzlon Group. And when we look at Sanman Capital also, fundamentally, there are a few changes that we have noticed. From FY29, we have seen AUM has declined almost by 50%. But at the same time, when we talk about AUM growth from here on, we see some kind of green shoots. And the reason being, management has said that by FY27, they want to reach this AUM growth at around 1 lakh crore, which implies more than 20% CAGR growth. And at the same time, they are also saying that the legacy book will come in single digits. Currently, it is at 37%. So definitely some green shoots we are seeing in the fundamentals as well. Other than that, Aptus value, this stock is in focus. Yesterday we saw a block deal where Westbridge offloaded almost 8 crore shares, but we saw some prominent investors in the likes of Eastbridge Capital, and at the same time some mutual funds like Aditya Birla, ICICI Pru. Along with that, when we talk about fundamentals here as well, we are seeing that the company is eyeing for 25,000 crores of AUM by FY29, which implies 24% growth from here on. So definitely both the stocks fundamentally as well as some news flow which is positive, which can impact the stock today.
All right, so 2 financials, right? And we'll dig deeper a little while from now on both these names with Gaurav. So that's Saman and Aptus. Well, Biocon and Zydus Life are the next ones we want to focus on. Vinny's here with details. Vinny, good morning.
Hi, good morning. So keeping an eye out on Biocon because there's some bit of a subdued or a somber news coming in here, as you could say. The US FDA has completed inspection in its Biocon Biologics facility. They've given 5 observations with the Form 483. The observations, the company said, is going to be procedural in nature, doesn't pertain to any data integrity or anything related to compliance front. And the company is also highlighting that they don't expect an impact coming in on the supply front, but an important facility for the company. So that is why we could see red on the screen for this one. Zydus Life now, that one has signed an agreement with Synthon, and this is an exclusive agreement, licensing agreement. In this, this is going to be for ozanimod capsules. This is in the US market. The market size of this capsule is around $637 million in the US, and this is according to the IQVIA MAT July 2025 data. Now, in this, Synthon will actually be obtaining all those final regulatory approvals. They will be manufacturing it as well as focusing on supply as well, while Zydus will manage the commercialization of this drug in the US market. One advantage that comes in for them in the short term is that they are one of the first filers for this drug, and that is why they will have that 180-day exclusive period as well. So in that short term, they could see a lot of benefit on this front.
Okay, all right, Vinny, got it. So we'll keep Zydus Life on our radar as well. Let's get to Ria. Ria, you're watching out for Aarti Drugs and Bharat Forge. Morning.
Good morning. First, taking a look at Aarti Drugs, the company's new manufacturing facility in Gujarat has commenced commercial production with effect from the 4th of September. Now, they have a capacity of 60 metric tons per day with the current utilization at 1/3 of the capacity, and the plant is expected to reach full capacity utilization over the next 12 to 18 months. Now, this unit is going to manufacture MMA as well as TMA and their derivatives, and this is going to cater to domestic demand first and then go into export markets based on their potential. The next stock that we're looking at is Bharat Forge. The company's step-down subsidiary has inked an agreement with Andhra Pradesh's infra agency to buy 950 acres of land, and they are going to undertake the development of an end-to-end defense energetics manufacturing complex, and this is going to include high explosives manufacturing plant, an ammunition filling plant, and a gun propellant facility, as well as provisions for future expansion into energetics for rockets, missile systems, space launch vehicles, and this will also be followed by advanced energetics. So positive news flow for both of these stocks expected to open in the green today.
Okay, all right, Ria, got it. Thanks very much for those few names. Let's quickly recap our list of all the stocks that we should be watching out this morning. The ones that have positive news flow would be HDFC Life, ICICI Prudential Life, SBI Life, Sri Digvijay Cement, Saman Capital, Aptus Value, Housing Finance, Zydus Life, Aarti Drugs, and Bharat Forge. Biocon is the only stock with slightly negative news flow around it today. Okay, so that's the stock list for the morning. Let's figure out what's happening in the world of commodities. Manisha is joining in with the latest. Hi, Manisha. It's all eyes on the US jobs report, right? The private sector report was a little weak, but I guess I'm sure this mega jobs report will even weigh on the commodity markets.
Oh, yes, it will. So it is going to be the U.S. non-farm payroll data that comes in today that would, make base for the next U.S. Fed policy meeting, which is also in this month itself. So, well, absolutely all eyes onto that one. And we have seen some strength in U.S. dollar ahead of that. And that is the reason you're looking at some profit taking coming in for gold and silver. In any case, that was expected because we've seen all-time highs and a string of that for both gold and silver. So slight declines here at this point in time. The markets also will watch out for expectation of lower interest rates by the U.S. Fed, and that is what would set course for further price moves. In the meanwhile, you have the crude oil prices as well declining for a third straight day, and with that, we are headed for a weekly decline. What also the market will watch out for is the September 6th OPEC Plus meeting. A potential production increase is on cards, and that's weighing onto the markets right now. The U.S. crude inventories also have jumped, and that's also weighing. And then the markets also are watching out for the latest statements coming in from U.S., where the President Trump has urged now Europe to halt completely the Russian oil imports. So there still is a lot of sentiment, data, and events continuing. But today is a day when you have seen commodity markets under pressure.
All right. So Sunday, working Sunday, Manisha, then, right? Manisha, can you hear me, Manisha?
No, she's silent now. She's chosen not to respond.
She's disconnected. I'm sure I'm going to get a call later. Thanks very much, Manisha, for that. If you can hear me, that is. We'll take a quick commercial break here. We're going to come back. Okay, I think, apologies. What we'll do is, before we take a break, we'll get you the brokerage calls of the day, and you've got a couple of interesting ones. So take it away.
So first one is insurance. CLSA has come out with a note. It says that GST changes could result in up to 1.5% hit on embedded value of life insurance. Drag on fresh book can still be managed by price hikes and commission cuts, but the problem is the back book, which has the less flexibility, and initial assessment indicates impact on EV in the range of 0.5 to 1%, which all these companies have also announced. HDFC Life sees less than 0.5% impact, SBI Life sees less than 0.2% impact, and ICICI Prudential sees 1% impact on EV due to change in tax regime. Next on ACs, Jeffrey says GST rate cut on AC could help boost volumes and liquidate existing inventory, which would be positive for Voltas, Blue Star, Amber Enterprises, and Havas. So it has raised FY 27-28 estimates for these companies in the range of 4 to 8% due to volume boost. It has a buy call on Voltas and Amber and hold on Blue Star and Havas. Last one, Motilal Oswal has done on QSR companies. It has upgraded Swiggy to buy, and target has given is of 560. Maintains buy call on Eternal, and target is 420 per share. It says there are multiple tailwinds going forward, and it has raised food delivery growth estimate for both these companies for FY 26-27 in the range of 21 to 23%, and now values food delivery business at 35 times FY 27 adjusted EBITDA versus 27 times earlier.
All right, so thank you very much. So those are some of the brokerage calls on Sud's radar. There are more which we will get to you in a bit from now. We're going to take a quick commercial break here. We'll come back and Parag Thakkar of Fort Capital will be with us for some fundamental stock conversation. Stay tuned. Coming up.
Well, moving on to a Network 18 exclusive, Commerce Minister Piyush Goyal says that the India-United relationship is the most consequential. Goyal also said that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration. Let's listen in.
Till about July 6th or 7th, things seem to be going fine with in our negotiations with the US. Then in a matter of weeks, we had a tariff of 25%, then another 25% on top of that. What went wrong in these few weeks?
Well, I think the US-India relationship is one of the most consequential relationships on the globe today. We are two very large democracies. We believe in the rule of law. We are allies and friends for long. We have had certain blips, like we had the sanctions post the nuclear tests in 1998.
Yes.
I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come.
And how soon do you expect things to resolve?
It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship where we contribute to each other's economies in different dimensions and will continue to do so.
It's comforting to hear these words from you. And we also picked up that you said somewhere that things could happen as soon as November. Is that a correct?
Well, if you recall when Prime Minister Modi and Honorable President Donald Trump met in February, they had tasked the two teams to conclude the first tranche of a bilateral trade agreement by fall of 25, which is about November 2025. And I'm sure we will continue to be engaged to try and find solutions to reach that outcome. If at all it's give and take a few days, a few weeks, a few months, in a nation's history, such small periods will not define long-term objectives and goals.
I think what surprised and even shocked some people was the erratic and incendiary language that was used by, some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
All right, well, let's welcome our guest, our fundamental guest today. We have Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good to see you in. It's a long time since we spoke, but happy to reconnect. Parag, we've got a lot of stocks that are in focus. Top of mind is going to be these insurance names. That the GST rationalization has put those stocks in a bit of a tizzy. Now, HDFC has come post-market hours and, in fact, put out a clarification as well.
Yes.
What's your view on these names?
So I completely agree with what HDFC Life has written in the BSE announcement, that it is going to be a structural positive for long term. Because if you are a customer, for example, your IR improves and the persistency ratio for insurance company also improves. They might have to take some price hike, 4-5% to offset for input tax credit. But I think that's a short-term negative, which I think they have captured it well by saying that the impact will be 0.5% or lesser than that in embedded value. So even if we say that short-term impact is, say, 1% of the embedded value, but long-term structural tailwind has come in the sector. So I would say that it is a positive, and I'll be a buyer of HDFC Life at least on any dip if market has some confusion around it.
Parag, good morning. Good to see you. I think we're speaking after years. And hope this is the first of many interactions.
Thanks, Prashant.
Parag, in the consumer space, so insurance we touched upon, in the consumer space, on the back of GST, are there any durable themes? I mean, it's a combination of durability and what is already in the price. So are there any companies which match both buckets?
See, I'll tell you, for example, we had HUL, Dabur, Marico, Havells in our portfolio in consumer names. And I would say that, just to conclude that because they had, or even we have, for example, Mahindra, Maruti on the auto side, Motherson Wiring, Sept. These are some of the names which are in our portfolio, which represent this consumption theme, plus which benefit from GST reductions. And let's say yesterday's selling, I will not look too much into it. Market is always like that whenever news is out, market sells because everybody books profit. So, but the benefits are very structural in nature, and you will see as we begin the festive season, in some of the things like small cars, I am anticipating good demand come back, and I am also playing banks like HDFC Bank to play that theme. See, remember, HDFC Bank is one of the most undervalued Nifty stock at 2 times price to book on FY27 at a PE of 15, which and from next year they'll outgrow the system because now their CD ratio has come down. And don't forget that they are deeply penetrated into rural and semi-urban areas, and very, very deeply penetrated into auto dealerships and consumer durable shops. So they will surely benefit in my view, and valuations are absolutely comfortable. So I would say that I am playing this theme through many names, and I would love to do so again because I feel that yesterday's reaction, profit booking came. It is very simple, normal thing for the market nowadays.
Yeah. So Parag, hi, morning. Parag, within consumer, and there are different parts to it, right? You could pick an AC company like maybe a Blue Star or a Voltas, or look at apparel, small ticket size apparel, something like V-Mart, etc. What are you most convinced about when you're talking about urban consumption, a slightly lower level urban consumption? Which is the best stock play? There could be trend as well, I mean. But you tell us, say top 3 picks for urban consumption.
So I told you how I'm playing it in my portfolio. In large cap space, I'm playing it through HDFC Bank, Reliance.
Through the banks, yes.
So Reliance, for example, don't forget Reliance is a large retail business. And
Absolutely.
nowadays, out of the SOTP, large contribution is from retail. And if Reliance Retail also benefits in the festive season, the definitely value accretion will happen. So I would say that I'm playing it through HDFC Bank, Reliance kind of names, Geo Finance kind of names in the large cap space, Dabur, Marico, HUL, as I said, Maruti, Motherson Wiring, Sept Tires, Havells, all these names are in our mid cap and small cap space. Of course, some of them are very large, but these are our consumption themes which we would like to bet on. And see, I'll tell you, the other thing is there are some consumption themes which will benefit straight away from this festive season, like small cars and hence Motherson Wiring. And there are some structural beneficiaries like tire companies. For example, tire companies, 70% sale happens in replacement market, right? And now GST has come down. So they will have some margin tailwind also going ahead. Same way insurance. Right now, there is a confusion regarding input tax credit and so embedded value. But structurally, long-term perspective, if you ask me, it's a very big benefit for the consumer.
Okay, Parag, stay on. We'll have more questions for you in just a bit. Let's also get a conversation going. We are, looking at how banks perhaps stand to benefit from the GST cut and the whole consumption thrust as well. So the next company on our radar is actually City Union Bank. Mr. N. Kamakodi, MD and CEO of the bank, is with us to take the conversation forward. And we're focusing on 3 key points. Of course, we want to understand whether the MSME segment will keep firing for the bank as well as it has in the last quarter. Their margins have been sustaining and they've been guiding for margins above 3.5%. So is that still on track? And of course, a quick check on the asset quality as well. They've said that it'll be negative net slippages for FY26. So they're still as optimistic. Let's find out. Mr. Kamakodi, thanks very much for joining in. I want to start by first getting a sense from you as a banker with such a big, change happening on GST across the board. And then there are second order effects and, third order effects. Does that improve your overall projections for the growth of the book? I think earlier when we spoke, you said that you're looking at a loan growth of mid-teens. Could it be higher? Could it be the high teens now, given what has happened?
See, there is definitely there is a possibility, and we are evaluating that, and we will give the exact strategy along with our second quarter results. We are in the process of making that happen. Looks like overall you are getting some oil into the growth engine for the economy as a whole, which would also directly getting involved into the improving overall growth of both GDP, also getting translated into the credit growth. So we are evaluating, and the initial estimates looks positive, and exact numbers and how we are going to do, we are in the process of making our things to take a proper shape. We will be in a position to announce that along with our second quarter results. We will take some time to crystallize that, how we are going to execute that and what we are going to do. And we will overall, this is extremely positive compared to whatever we started the year with.
Sir, I understand that you can't give us a specific number for your bank right now. You'll only get to it in the next couple of days. But system-wide, credit growth has been pretty anemic. It's been either high single digits, about 10% odd. System-wide for this year, FY26, across the banking system, what should be the loan growth expectation? There are RBI cards which are flowing through the system, and now there's the big GST change.
Yeah, overall, our expectation for the system as a whole, it should be improving to maybe to start with teen, maybe lower teen. Earlier, it was just 10 to 12% was the number which was getting repeatedly spoken about. But now it looks we should be in a position to see that slightly another 1 or 2% incremental thing because of both in terms of the the loans given to the businesses and also the loans given to the individuals. So overall, we can expect that, and our strategy always had been to have 2 to 3% over and above that of the, growth of the industry. I think we should be able to have that. We had a very decent growth in the first quarter, and that momentum is continuing. We hope it will be sustaining, and probably it will inch up is what we expect on growth front now.
Mr. Kamkodi, good morning. And this is exactly what Sanjeev Bajaj told us as well. He actually mentioned exactly these two segments, MSME and consumer segments, personal loans in that segment. These two are what percentage of your book?
See, the MSME sector is close to 40% of our book, and we are not very active in consumption. And we also have a significant portion in, the MSME, commercial trading, wholesale and retail, agriculture and gold loan together constitute about 80% of that. In our overall loan book, at least 50% of our book is in the segments which is expecting a boost because of the recent announcements.
So within MSME, which is 40% of your book, you said, and anyway, I mean, in the first quarter, it showed a lot of traction. For the full year, what is your expectation from your MSME growth?
So that's what we had given is that our target is to maintain about a couple of percentage point over and above the growth rate of the industry, and that expectation, whatever we share, it continues. And as we expect the industry also to take at least 1 or 2% more because of the announcements, the same level of, transformation or transfer may also happen in our case. And we are in the process of working out the nitty-gritties.
Okay. Quick word on margins, sir. Again, you've done better than most banks in terms of curtailing the pressure. And you've been talking about 3.5%. Are you on track with those projections?
Yeah, absolutely. As we shared during the, first quarter results, that could be a few basis point pressure in the second quarter, but the repricing of the term deposits gets complete from the third quarter onwards. It will get offset in the third and fourth quarter. Year as a whole, as we had conveyed, our expectation is that we are very well on the track, and we are very much positive on maintaining the margin for the year as a whole.
Mr. Kamkodi, we'll leave it there, sir. Thank you very much for joining us. It's a pleasure, and good luck to you. And I hope not just for you, but for the industry as well, what's happened lifts system-wide growth. Sanjeev Bajaj, we spoke with him yesterday, chairman at Bajaj Finserv. There's, of course, the consumer business, there's the insurance business, but just want to play out the soundbite on the consumer side of things in terms of how he thinks this will, benefit the consumer segment, especially. Actually, he started by saying that, the first disproportionate impact, positive impact, is on financials themselves. Listen in.
Some of the rationalization moves beyond the rate cut should just also help in formalizing, getting more MSMEs to come in, sign up under GST, so formalizing the economy as well. Even the operationalization of the GST appellate tribunal and simplification of structures should strengthen compliance and trust in the system and broaden the overall system. Any such dramatic change in the economy first impacts financial services disproportionately, because it ends up supporting or enabling so much of the real economy. And that can work both ways. In this case, naturally, it is the positive step. So there is a hopeful positive move. I would directly look at both on the consumer side. Consumer spends should go up dramatically in the coming quarters. In addition, we have a large lending portfolio to MSMEs. That should benefit as well.
Okay, well, MSME, consumer, across the board, benefits should show. Stock was up 4%, as you saw. Bajaj Finance there. Parag, of course, is with us, but we'll also get you some technical setups and some technical trading ideas. So take a break. Srikanth and Mitesh on the other side. Stay tuned.
Welcome back. Well, let's hop across to Hormuz. He's here to tell us about all the big movers in trade yesterday that moved on rather large volumes. Hormuz, take it away.
Morning, Nigel. And some news-driven names, of course, and some not so. I'll start off with Sri Digvijay Cement, of course, the one that is in the news today. But the trading activity over the last couple of weeks has seen a significant increase. Now, take a look at this. In the 51 trading sessions that we compared before the 18th of August, the average daily traded volume was anywhere close to around 3.5 to 4 lakh shares. But since the 18th of August, we have had 13 to 14 trading sessions. And during those, the average daily traded volume has increased to 15 lakh shares. Even yesterday, we had almost 22.5 lakh shares traded. And courtesy of this heightened trading activity, the 20-day average volume has also increased to around about 14 lakh shares. Now, even for the delivery front, almost 8 lakh shares were marked for delivery, compared to a 20-day average of close to 5 lakh shares. And during this period from the 18th of August, the stock had also hit a 52-week high of in excess of 100 rupees recently before correcting. Now, the other one is Atul Auto, and the stock was up 18% in yesterday's trading session. And the volumes that were had on the stock yesterday were the highest that it has had on record. And 38% of the company's outstanding equity in terms of the total number of volumes that changed hands. And the total turnover yesterday of 530 crore is also almost 38% of its total market cap, which comes up to around 1460 crore. Now, yesterday's session, the volumes yesterday, almost well over a crore shares. That was almost 106 sessions worth of volumes put together. And that was also higher than the 20-day average, which is only 61,000 shares. Now, from the delivery front as well, almost 8 lakh shares were marked for delivery. And the 20-day average here is only 23,000. Now, that's Atul Auto. Of course, the one theme that made headlines yesterday was insurance. And HDFC Life, ICICI Pru and Niva Bupa, all of them saw heightened trading activity. HDFC Life and Niva Bupa saw excess of 1 crore shares being traded, all of them in excess of their 20-day average. And even on the delivery front, HDFC Life had around 42 lakh shares, Niva Bupa had almost 70 lakh shares, and all of them were marked for delivery well above their respective 20-day averages as well.
All right, Hormuz, thank you very much. Very, very interesting sort of link there and data really coming through. Let's just, Parag is still with us, and we have more that we want to talk about, Samman, Aptus, etc. Parag, of course, already ran us through his views on insurance, long-term positive and some of the short-term hits perhaps manageable in that sense. Yes. You heard, two financial companies, Parag, City Union, of course, and of course, Bajaj Finance and Bajaj Finserv, Sanjeev Bajaj there. Yeah. Any thoughts? What are the best plays here?
So I've been playing it through HDFC Bank, I said, as the largest weight in the portfolio. Another thing which I would like to add, apart from the fact that Mr. Sanjeev Bajaj said that this GST cuts will lead to significant buying in festive season, and there will be good credit growth which will happen, which will benefit HDFC Bank also, and of course Bajaj Finance, Bajaj Finserv also. I would say that another thing which needs to be noted is already there's a liquidity surplus of 3 lakh crore in the banking system. Plus the CRR cut will unleash another 60,000 crore into the system, which is a durable liquidity. So as we move into the festive season, banks are flushed with funds. So any bank which has a prudent lending practice will see a good growth. And so from that perspective, I like HDFC Bank, as I said, the most, followed by ICICI, SBI, of course. For example, if you look at SBI's portfolio also, there is an express credit loan portfolio which was not growing. It is mainly lended to government officials, right? And these guys will spend money now, now that the small cars and ACs have become cheaper. These guys are going to spend. So this book, I'm sure SBI chairman will allude to this fact that after some time during this festive season, that express credit loan book of 3,30,000 crore will start growing now, and which is a slightly higher yield for them. So I would say that definitely it's a big boost to the economy. And yesterday's market reaction was not that great, but I would say that structurally, and I'm expecting even more reforms from government, one after the other, which will stimulate the Indian economy without compromising too much on fiscal side.
Tax cuts have happened, rate cuts have happened, at least the first one. We'll see if there's another one, and now there is GST cuts. And you're saying perhaps there will be more in terms of focusing and stimulating consumption especially. So Parag, stay with us. There are two more names, right? Samman Capital has got a new person on top, and we want to highlight it for a specific reason. And Aptus Value Housing is the other one. Gaurav is here with more details on both. Gaurav, take it away.
Well, yes, when we talk about Sammaan Capital, two reasons to focus. First is that when we look at the news flow, Mr. Himanshu Mody has been appointed as CEO from September 4, 2025. Remember, he was a group CFO in Suzlon Group. So that is a news flow. But other than that, when we look at fundamentals, we are seeing some kind of shift. And the reason being that when we look at the AUM, remember in FY29, we saw IL&FS crisis and Sammaan Capital, which was earlier known as India Bulls Housing, took a huge hit. After that, we saw AUM almost declined almost by 50%. Other than that, the legacy book after that was brought down to 37% of the overall book. Even when we look at debt to equity, that declined almost by 8.2 times to 1.9 times in FY25. From here on, we are seeing some kind of green shoots. In first quarter, we saw AUM increasing very marginally on a sequential basis, and at the same time management also indicated that by FY27 AUM is expected to grow at around 1 lakh crores, which implies more than 20% growth on a CAGR basis. Other than that, management also said that the credit cost is going to be just 1% on a steady state. So definitely two reasons why management also seem optimistic on the company. Remember, when we look at the stock performance in the last 5 years, the stock has not done well. It has, in fact, declined almost by 18%. But over the last 5 days, we have seen some rally. Around 11% is what the stock has grown. So definitely, there is a positive news flow. Management is also optimistic. So it will be really interesting to see now how it pans out for investors from here on.
Okay, all right. Thanks a lot for that, Gaurav. Well, let's go across to Parag. Parag, any view on these names? Sammaan Capital, new person at the helm, and Aptis, it pointed out today as well that could possibly be the stock in the near future. However, if you look at it in the last 5 years, it's absolutely missed out this bull market. Your view on both these names?
Sorry, because I'm not holding the stocks in my portfolio, so I'll not be able to give my view. But affordable housing is a theme which I focused earlier and had various other stocks in my portfolio. But of late, I don't have any stock in the portfolio, but it's a good space to be in. Of course, in lending, as I keep saying, you have to be very, very prudent. And economy was not in a great shape in last, I would say, from election till now. And now I think economy is getting its act together with normal monsoon, with income tax slabs going higher, and as we discussed, GST cuts. So I would say that from here on, I would like to, but right now, as we speak, I am not going beyond HDFC, ICICI, SBIs of the world in the financial space.
Absolutely. In many of these cases, Parag, what seems to be happening is the market is, someone put it, and I thought it was well put, re-rating based, the thesis is going from very bad to bad. And maybe we'll wait for it to go to good. Yeah, I mean, sorry, you want to add something?
No, so I would like to say, see, we remain focused on large cap players mainly. In real estate, for example, we own DLF and Oberoi. So I would say that, basically the economy has to start growing rapidly and this tariff tensions has to ease a bit for us to take a slightly more risk and go into slightly lower down names. For example, you just took interview of Mr. Kamakodi, whom I have a huge respect for, and they are one of the most conservative and prudent lenders, and we always used to own City Union Bank in our portfolio. So I would like, and at a price, definitely will be a buyer in that particular name because they are one of the most prudent lenders. They remained on a below 10% growth from after COVID till last year. Then last year they saw growth and they started growing at 13-15% with decent margins. But it's a name which I would love to add on a dip. Or if I see really economic growing rapidly. But till then, I would like to hold on to the known names where we have a complete balance sheet comfort, and of course the stocks in large cap space. Generally, the stocks have not done that well because of FII selling, and that is where I see the major opportunity.
Okay, got it. All right, good to chat up yet again. Wishing you a good day ahead, Parag, and we look forward to chatting up rather soon. By the way, keep an eye out on the bottom of your screen. Prime Focus, a stock that's up, I think, 40-50% in this year itself on the last 6 months. Though in the last 1 month, the stock actually is down close to 10%. There's a large trade. I think Nimesh had alerted us that was likely to take place. See, from those highs of around 167, It came down to around 140. 6-month chart tells you the stock is up 50%. We'll try to get you further details on that particular name. We take a break, come back. Pre-open rates will be with us. We'll also be joined by Hiten Mistry of Equirus Capital to focus on the FMCG sector. Stay with us.
Welcome back. This market pre-open session is kicked off, and we'll look at it in 2 or 3 minutes once things start to settle down. Srikanth is with us, as always, on Fridays, and Mitesh is with us as well to run us through trading ideas and how's the setup looking. Gentlemen, coming to you a little late today. Mitesh, let me start with you. How things set up? I mean, cooled off from the highs, back in the ranges. So expect, a steadier kind of day without too much excitement. What's your sense?
Morning, Prashant. In fact, the idea that the markets will be contracting and in range, I think, has been there for the last few days, and I think I still maintain that view. What is important is that the weekly indicators which depict volatility are also turning flat, which means that there could be another 2-3 weeks before we actually have a very decisive kind of a movement on in either direction. But for the time, it looks like 24,400, 350 broadly on the downside, and 25,000 to about 25,150 on the upside would be the immediate range.
Got that, and you're absolutely right. I mean, that idea broadly, the thinking has been that, and it's been it's kind of played out that way. Srikanth, what about you? Indices at a headline level, what's the call?
Good morning, Prashant. Good morning, everyone. For indices, it is very clearly visible that the market is stuck between the broader range of 1,000 points. It is not crossing 25,200. It is not breaking 24,300. So till the market is not crossing this range, I think we are going to see range bound sort of activity. And maybe that's the reason FIs are heavily short on the market. They are not at all thinking about whether the market will cross its 25,200 or not. While looking at the entire setup in the near term, we can see some activity towards 25,000 sort of levels, because at 24,600, 700, the market is having good amount of support. And since the last 2 days, we are seeing some buying activity in Bank Nifty. And today, on the back of fall in the bond yield, we may see some activity in technology companies. So maybe banks, IT, both this help the market to move higher towards 25,000 sort of levels.
Yeah. Got it. Mitesh, stocks, what are the trades?
Yeah. On the stock side today, I have a mix of buys and sells. On the buying side is IDFC First Bank around 72, tried to buy with a stop below 70 rupees 90 paisa. Look for a short-term target of 75. Similarly, on a mild pullback, tried to buy National Aluminium. The stock has had a very good breakout, and yesterday was the first sign of some kind of a pullback. So if you get around 204, 204 half, buy here with a stop at 199 for targets of 215. Two sell calls. Delivery, after a big rally, is showing first signs of profit booking, so can give a pullback. Sell here with a stop at 478 half for targets of 455. And SBI Life is a sell with a stop at 1811 for targets of 1750.
Shrikant, what about you?
See, based on the news flow, we feel we may see some activity in technology companies. In that, we like Coforge, Tech Mahindra, Infosys. But for the day specifically, we should look for adding Infosys at current levels with a very short-term view. We can keep a stop loss around 1445 for the same. And we can expect again 1490, 1500 sort of levels on the higher side. So we like Infosys at current levels. Also, we need to focus on Bajaj Finance. There also the stock is showing a lot of strength. Yesterday also there was news flow, and after that the stock has managed to sustain its gains. So based on its current formation around 910, we should look for keeping stop loss. But at the higher side, we can again expect the levels of 1000, 1020. So Bajaj Finance as well as Infosys should be on the watch list.
Okay, all right, gentlemen. Thanks very much for your trading advice. We'll come back to you a little closer to market opening. For the time being, we're going back to the big story. GST regime kicks in with all the changes, and now we have two key slabs, 5% and 18%, providing relief to several sectors, including, of course, electronics, consumer electronics, and FMCG. We have Hiten Mistry, Vice President and Sector Lead Consumer at Aquarius Capital, joining in with some thoughts and perspective. Hiten, good to have you on. You know, I was just taking a look at stock price movements. So if you're looking at major consumer durable players, like a Voltas, a Blue Star, or even if you're looking at some other, consumer stocks like a Trent, V-Mart, the gains are between 5 to 10% already in the last 1 month in the anticipation. The question is, what are you most convinced about now from here on, where this GST benefit will lead to a more durable rally, a durable appreciation in stock prices and earnings?
So, morning, Surabhi. My senses would be I would like to talk about the sectors more, where we can see the significant potential in the sectors where GST becomes 0% and has a massive room to grow in terms of the market size. So likewise, I would like to give an example of insurance. As we all know that we are the lowest health insurance penetration globally, only 37% population covered, and GST becomes zero here. Healthcare again become a 0%, massive room to grow. Stationery, as a father of two school-going kids, I know what we are spending in the stationery. This three category becomes 0% now in a massive room. Second would be about as you mentioned, about the consumer durables, household appliances, consumer durables, vehicles, construction materials, which were coming under 28%, now became straight down to 18%. Third piece would be about the large chunk of the FMCG, which will cover the household items, food and beverages, which were covering approximately on 18%. They came down straightly to 5%. In fact, services also, like salons, fitness, yoga, those were coming on 18%. So straight away came down to 5%. So certainly, consumer durable, as you mentioned, will be contributing a lot in terms of the entire growth of FMCG.
You know, when you hit in morning, when you said as a father of two school-going children, I looked up. I think I can. There's stationery, but there's also all the iPads and the, that pad and this. It's a lot of electronic stuff as well, right?
Yeah.
So DOMS, Hiten, is the is the one? Which kind of is sort of a play on that?
So, see, again, I would say entire stationery segment will become zero. So, while I would stay a little averse to say about particular stock, but with respect to category, I am very, very bullish on the entire stationery segment also.
So, what do you have coverage on there, Hiten? Stationery segment?
Stationery segment, okay, if I talk about the product wise, then entire stationery product like pencil, notebooks.
No, I'm saying which are the stocks you have coverage on in that segment?
Okay, so I am from the investment banking team, Prashant. So,
Okay.
I generally cover the sectors. Our research teams covers the stocks a lot. So as I mentioned that I would like to speak about the sector a lot, where I am very, very bullish on the insurance. I am very bullish on the consumer durables. And thirdly, I am very bullish on the services segment, where salons, barber, fitness, which were fetching like 18% GST, which came down to 5% now.
So, sorry, which one? Which last one was what?
Okay, so yeah, so in the FMCG space, there is a subcategory of services, health clubs, salons, barber, fitness, and yoga centers. All were coming at 18% GST. Now they came down straight down to 5%.
Okay, okay. And we from a listed universe for our viewers, there are companies here. I'm not asking you for companies, but
Very, very few companies, but there are high chances to grow for the companies also to come in the IPO category now.
I see.
Yeah.
Yeah. So so insurance and consumer durables, which places exactly?
Yeah. So in consumer durables, as we see that household appliances, which are very large in average order value too, right? Like air conditioners, dishwashers, etc., fridges. Those average order values like 35,000, 40,000 per product, right? Which came down from 28% to 18%. I would certainly consider the vehicles also in a consumer space, where auto components were also at 28%. We can see fuel, which was coming under 28%, which came down to 18% now.
Okay, all right, Hiten, we'll leave it on that note. Thank you very much for joining in with your thoughts and perspective. Thanks very much. So we've come to about 9:10. Let's take a look at some of the movers and shakers, and we should get Sudarshan back up quickly because insurance is the sector to watch. The companies themselves have said this, brokers have said this, that the hit because of the fact that there is no input tax credit available for insurers is between 0.5% to about 1% of embedded value in most cases. So the analyst estimates and what the companies have said, it's largely matching. And the other sort of argument is that in the longer term sense, this is really positive. If GST goes down, generally it's good too, good for boosting demand even for insurance. So you can see the reaction. A lot of these stocks had fallen yesterday afternoon, but they seem to be in recovery mode this morning. Speaking of other stocks, just very quickly from actually even Niva Bupa, everything is up on insurance. There is some buying on, Voltas, Swiggy. These are some of the other names. Let's look at Sri Digvijay Cement as well. That's a stock in focus. Nigel's been telling us about that big, gigantic promoter stake sale that's happening, up 1% at this point in time. Sammaan Capital, we should pull that up as well. Management change and some of the markets fairly optimistic on coming back in. But remember, Sammaan had rallied when our colleagues had put out this news earlier a couple of weeks back. It still got about a 2% up on it, and Aptus value is also 1.5% higher. So that's how it's playing out. Overall, the Nifty in the pre-open session has now settled with an 84-point gain, 24,818. Good time to go back to our technical experts for their key call. Mitesh, 9:10, what's the one stock you'll pick?
So one thing, before that, SBI Life for the short call, I think that will not work out because it's opening with a gap up. But on the call for the day, I think Nalco, if you get it around 204.5 or those levels during the day, that will be a good buy with a stop at 199 for targets of 215.
Okay. All right. Thanks for that. And we take that point on board as well, that you're changing that short call on SBI Life, which actually gets us back to the insurers. All of them in the pre-open are up between 1 to 2%. So it's back with us. And Sudarshan, you explained it really well, right? That now I think the hit is not that big. So let's revisit the numbers again.
So insurance stocks are indicating a start in the green. All the names are higher in pre-opening session. So remember, GST Council has approved an exemption for the premium that everyone pays on their life insurance. Now, after that, there was a concern that it will impact on embedded value of these insurers. So now all these companies have disclosed to exchanges. STFC Life says that impact on EV will be less than 0.5%, but it maintains that it will double its VNB over next 4 to 5 years. SBI Life says the impact would be less than 0.2%, and ICICI Prudential says the impact would be less than 1%. And just now, Axis Max Life also has come out with its disclosure, and it says impact also would be less than 1%. That's the reason you are seeing a big recovery from yesterday's fall that we had seen in all these names.
All right. Thank you very much for that. That is the insurance names which are going to be in a focus on the back of at least two companies for now. And by the way, we'll try and speak with HDFC Life, in particular the largest company, the largest private life insurer, to understand some more explanation about how they see the impact playing out. 1.25% higher. Yesterday, of course, from the highs, they all came off. Even a name like PB Fintech, by the way, ended pretty much sold off, I think 6%, 6.5% from the day's high to close absolutely flat, or maybe even slightly in the red. 0.6 higher this morning on PB Fintech. I think we could just a couple of seconds away from the market open. So we will look at rates, and then we'll sort of get down to business with regards to individual stocks, etc. So what do we have in terms of first rates, which will kick off in a bit from now? I think in terms of news flow, there isn't very much, at least nothing big. There are a bunch of these brokerage calls, but those are important to keep an eye out on as well. So 85 points on the Nifty. The Sensex is up 295 points. And we've got the first rates on your screen now. 24,800, 54,170, 54,200, just about finding its feet. The small cap index is yet to open. That is yesterday's change, which you see on your screen. But that'll start to, it's opened up about 1/3% now, the small cap index, the mid cap index. So it's all across the board, 1/4% higher on the indices. Let's look at the Nifty heat map. I think gives you a quick sense of where we are on the Nifty 50 stocks, up and down, mostly all higher this morning. So Mahindra, once again, for the second day running on the Nifty, of course, the top gainer, ITCs on the other end. Surabhi.
Okay, let's take a look at the individual movers and shakers then. I'll start with the insurers. It's all about insurance. HDFC Life, ICICI Pru, Niva, Bupa, all of these stocks are up and about, as many of the life insurance companies have given out the extent of the impact. Aside of that, Mahindra & Mahindra is in pole position once again after a 6% move yesterday. M&M is managing another 2% today, so looking good. There's Trent with a 1% gain, Bajaj Auto, Eicher, Asian Paints, SBI Life, HDFC Life, like I've been saying. So it seems the residual GST impact continues to play out. This is what it is. Beyond all the GST consumer insurance sort of names, you've got something like a Power Grid that stands out. Reliance is actually up 0.5%. Though, as our earlier guest explained, that of course even Reliance is a huge retail business, so the GST cuts are going to help it in a big way as well. On the flip side, ITC, Nestle seeing some profit taking. Apollo Hospitals, which is up 2%, also slightly lower, but not much beyond that. The rest of the Nifty is quite okay, and 24,800 is on the board. Nigel.
Well, a few stocks that are moving around actually. Prime Focus, the 1.5% large trade took place. That stock is probably one of the stocks in the broader markets that's flying away up close to around 8%. Jai Bharat Maruti, that's another stock that's doing very, very well. That's up close to around 5%. So big up move is what we're seeing on that name. BGR Energy, something's going on there. Financials don't justify this sort of a move. But in the last 3 months, the stock has actually doubled. So that's another one, in fact, that's moving up. I think it's up close to 4.5%. It was $100 odd just 3 months ago. Sterlite Technologies, that one as well is up close to around 4% as we speak. And moving on large volumes, a good up move is what we're seeing on that particular name. One Mobiwick stock that we had highlighted at around 240 rupees, that the supply overhang is out of the way. The stock had pulled back a little bit. Now it's moving higher on large volumes. RBL Bank, is trending higher. That one keeps going into the FNO band. So that's another name that we're looking at. And Aptus, yesterday there was a virtual clean out trade. Stock has been an underperformer for the last 5 years. Now the street is getting a little bit optimistic because the names that came in that large trade are, quite solid names. So the street is optimistic that they can deliver the numbers that they've spoken about in terms of growth, in terms of operational efficiency. For the time being, that one's holding with a gain of around 1.5%. And Electronics Smart, that's a company that we'll get later on in the day here on CNBC-TV18. That's up close to 3.5%. So pretty okay start, guys.
Absolutely. And, it's looking good overall. And 70 points still holding, about 24,800. Yesterday, of course, from the top, the market sold off about 200 plus points. So kind of sort of recovering some of it. Clawing back some of it, at least in the first 10 minutes or so of trade. Insurers are at the bottom of the screen, and we'll have other sharp movers as well out there. Trideep Bhattacharya is with us, CIO, Equities, Edelweiss AMC. Trideep, great to have you with us here. Appreciate your time. Do you believe, Trideep, with the three things which have happened so far, the tax cuts, the interest rate cut, and of course the GST cut now, ingredients are in place for a bit of a revival? Markets, of course, they can be lead lag, but do you think it's a much better setup, supportive setup for consumption to take off? What's your sense?
Absolutely. If you put the math behind it, then the total impact of tariffs arithmetically is roughly about 0.5 to 0.6% of GDP. And if you look at the consumption stimulus that we got yesterday in the form of GST cut, tantamounts to broadly the similar sort of a number. So dollar for dollar, I think it has been matched to the extent that the demand deficit or the impact that could come through on the back of tariffs is actually negated by the consumption stimulus. The thing to keep in mind is these two, of course, affect different stages or different parts of the economy, and those impacts will be there. But if you combine this consumption stimulus along with rate cuts and a possible rate cut going forward, lowering inflation, I think the ducks are lining up for a consumption recovery post-festive season in a meaningful way. Last time when we saw such a cut in that was in GST cut in back in 2017, we saw a meaningful price elasticity of demand, meaningful pickup in volumes, particularly in areas like autos and FMCG. I think it'll probably kind of happen to a similar extent over the next 2 or 3 months, and that's hopefully ends the earnings downgrade cycle that India has been for the last 12 months, and that should mean better days for markets over time.
I just want to make and point taken through the pull up MOSCHIP, MOSCHIP. A MOSCHIP is and the reason I'm mentioning it never comes up, but it's the biggest volume-led gainer on the NSE. It's up 7%. There you go. And this week it's up 40%. Exceptional volumes. I think this is the highest weekly volumes ever on this company. It's a Hyderabad-based company. It's got chip at the end of it. And by the way, it is in semiconductor design and sort of system design and in that area, and maybe Hormuz can dig in a little deeper in terms of why this one is getting so excited. There is, of course, the backdrop that Semicon Week, which happened, a 3-day event in Delhi, but I'm not sure if this has got something to do with it. Prime Focus, I think we mentioned, it's limit up now. It's up 10%, Prime Focus, so 158 rupees on that one. And MobiKwik is another one which is starting to come up a little bit, 1.5% higher. SKF India is up about 5.25%. So just want to highlight that as well. And Quality Power is up 5%, 906, 907 as we begin the session right now. Niva Bupa is up 3%. And so, more and more stuff coming into the front as we go through the motions. Just first, still about first 5, 6, 7 minutes of market open. Surabhi.
Okay, that's how it's playing out. Trideep, hi, great to have you on. So obviously consumer stocks have been benefiting from this run. But, I was taking a look at the fine print, and actually even for industrial goods, for a lot of defense equipment, there are substantial rate changes and things like, small things, walkie-talkies, or even big things, components that go into drone manufacturing, etc. There are cuts across the value chain for industrials and for defense. So just tell us, in terms of across the board, how's positioning now on sectors? Where are you on industrials? Where are you on consumer? And if you will be tweaking or changing anything in a more meaningful way, in a more structural way, because of the GST reform?
Sure. So I think overall, I'll start with consumption to answer in the true honest. So if you sort of divide consumption into three segments, one is luxury, second is mass, and third being rural. We have been overweight in luxury consumption as well as rural consumption for a good while now, in the last 3-6 months. The part of consumption that we were underweight were mass consumption. I think that's where we have added leading on to this GST announcements. And I think we're going to stay put in that direction. And if there are any weaknesses that might come through, we'll kind of add to that. So if you put that in context, then various aspects of consumption, large ticket and small ticket, we are clearly overweight. With regards to other sectors, the other areas that we are betting on were specifically on government capex. Now, while earlier in Modi 2.0, if I may call it that way, it was fairly widespread with regards to government capex and hence industrials. This time around in Modi 3.0, it will be a lot more specific. Areas like defense, railways, and power are the three such segments where I think the spending with regards to government is likely to be focused, and that's where our portfolios are oriented towards at this point in time. The third area that we like are the rate cut beneficiaries, which could be kind of NBFCs in the context of financials at reasonable valuations have come off of late. We need to calibrate a couple of impacted industries like textiles, etc., and the impact on the same, and also the floods that have come about recently. But net still, they offer decent valuations along with growth prospects going forward. So that's the third area that we have that we are overweight. And what's funding these overweights are broadly commodity-related sectors, whether it's oil and gas or metals and mining. Tactically, they could be in and out, but broadly speaking, we remain underweight in those spaces. So that's been the positioning as we speak. Of late, we have added to mass consumption, and in the weakness, to a certain extent, in financials is what I would say we've added on to.
Okay, all right. Hi, Tradeep. Good to see you, Win. What about autos? Maybe in the near term, we'll have some kind of uncertainty and some pause of buying, but otherwise we could be bracing for very good times with the vehicles getting a little cheaper. What's your approach to the auto segment, autos, auto ancillaries?
We've been overweight. That's part of consumption. When I say consumption, maybe I should have specified it a bit clearly. But we've been overweight auto OEMs, to be precise, particularly in two-wheelers. And off late, given that the four-wheelers are coming off of a lower base after having underperformed for a good while, we've added to four-wheelers as well. But autos is an important part of consumption and would be overweight in our portfolios as we speak. And we've increased weightage over the last 3 to 4 months as well. Global focused auto ancillaries is something that we have taken a dim view of. We are underweight in that segment. We probably continue to remain that way. But domestic focused ancillaries and OEMs is something that we are focused on at the moment in the context of autos.
Okay, got that point. Pradeep, the wider question, do you think from an earnings perspective, anyway, US tariffs were not going to have a very direct impact on earnings because it was more focused on specific areas like textiles, etc. But for what it's worth, I mean, to what extent does the GST cut offset the impact, first order or second order impact, that the tariffs would have had on growth and earnings?
So two aspects to that. One, dollar for dollar, it does. So if you look at the total impact of the tariffs so far, including the 25% tariff that have come through, is roughly about 0.5 to 0.6% of the GDP directly. And if you add up the consumer stimulus itself that came about in the form of GST cuts, that itself tantamount, they are equal in amount, without adding on to the tax benefits that were given early in the year, and also the loosening of the purse driven by lower interest rates. So net-net, we have value for value, we have sort of masked the impact, whatever it was meant to be in the context of tariffs. However, The areas that will kind of get impacted, which include textiles, gems and jewelry, and seafood, are specific industry-specific impact, whereas this is more broad-based. So the areas of impact could be a little different, and that's what we as an economy will have to contend with. But dollar per dollar, so far, in terms of direct impact, it's been massed through. And I think in that context, one must compliment the government that they have done whatever they could do in the form of giving the boost to consumption, and that hopefully in a second-order impact, maybe sometime next year, could kickstart the private capex cycle, which has been missing for a good while.
So, I mean, to translate that into earnings growth, and usually this is a question that we ask the sell-side fellows, the stockbrokers, but let me ask you. I mean, the street was hopeful for 12-13% kind of growth. Then Q1 was patchy. So then we said, okay, maybe cut it down by 1%. But as things stand, how much earnings growth are you expecting this year for at least the stocks that you own, or for, it could be any wide index, BSE 500, anything that you choose to benchmark by?
Sure. So the background has been that in FY25, we started forecasting about 13% growth, or we ended up being a low single digits. So we are sitting on a good amount of earnings cut so far. So with that lower base, I would expect the Q2 also to be lackluster because that will kind of go a bit like lost in transition. Q3 onwards, we will see a pickup in growth rates meaningfully come through with regards to India earnings forecast. And given that in mind, somewhere between 10 to 13% is what I think my expectation could be. I think the last round of cut might happen along with Q2 earnings. But if the outlook for from the corporates that we hear in the Q2 earnings season, which is the upcoming season, turns out to be positive, the stock prices might have a different story to say. Given that the last 8 days for the month and then onwards, we could see a pickup in demand driven by GST cuts and whatnot. So fairly critical earnings season coming up, I would say. But remain hopeful that this will be that makeover quarter, or the transition quarter from earnings downgrades to upgrades overall for the back half of the year.
All right, Trideep, we'll leave it there. Good conversation as always. Thank you very much for coming on. Appreciate it. Have a good weekend and speak to you soon again. 1,500 stocks are higher. You got about 900 stocks which are lower, and the Nifty's now got about 50 points on it. Lots of new stocks into the mix from the last time that we checked. Ixigo is a new one. Ixigo is up about 4%. And there is Vimta Labs, which was not there 10-15 minutes back when markets opened. Vimta is up about 4% as well. Jaycorp had a very large move yesterday. It's up another 3-4%. Second largest volume-led gainer coming through right now. And there is Sterlite Tech, which I think got a bit of a knock recently. 5% higher on Sterlite Tech coming through as well. So things are picking up from a stock-specific basis. Some more stocks in terms of what the street calls are looking like, with Sudarshan, who's back with us, Eureka and Voltas. So take it away.
So MK has initiated coverage on Eureka Forbes, and target price it has given is of 725, implying an upside of more than 20% from current levels. It believes that over next 4 to 5 years, there is a potential of stock to double from here. And it says under new management, companies transforming services and unlocking growth. And it is recorded 7 straight quarters of double-digit growth, and service momentum is reviving. With in Q1, company has recorded double-digit AMC bookings. And despite rising R&D cost and marketing expenditure, margin has risen more than 400 basis points in last 2 years. And on the back of these factors, it expects revenue, EBITDA, EPS CAGR of 13%, 20% and 24% respectively over FY25-28. UBS has a buy call on Voltas, and target has given is of 1,770. It says lower GST on room ACs raises affordability and also demand hit by unseasonal rains. But there is a festive season ahead which may improve the demand, and channel remains upbeat on festive season, and it has raised revenue and earnings by 2% for FY26 to 28.
All right, so very, very interesting. Voltas and Eureka there coming in as far as brokerage links are concerned. Well, let's just get to a Network 18 exclusive. Commerce Minister Piyush Goyal says GST reforms are transformational for the economy, and the industry has committed to pass GST cuts to consumers. Listen in.
And industry has committed to us that they will make sure that the full benefit is net of input taxes is passed on to the consumers. So consumers are in for significant gain, and I'm very, very confident. Taxes, lower prices will give buoyancy to demand, and higher demand leads to higher taxes, and ultimately higher demand also promotes more investment because the demand leads to more manufacturing in India. So it's a virtuous cycle of growth, and the multiplier impact is what will give India a big boost. We're currently collecting nearly 2 lakh crores every month. And with this boost in demand, the revenue will probably go up rather than being a revenue. Fortunately, the timing of the GST reduction at such massive levels couldn't have been better. This will give a big impetus to domestic demand, which will help some of the exporters who may lose a part of their business. I'm very confident that this and the impact of this starting on the first day of Navratri on 22nd September will give a big leg up to the economy, to GDP growth, will ensure that Indian investments continue to power on, will attract more people to set up base, because ultimately when there is demand, there will be interest in investment to meet that demand.
Okay, so the implications of some of the major reforms that have been announced, including, of course, GST. For the time being, just looking back at the market, it's holding that 24,800 mark at least as of now. Let's look at some other stocks in focus. Varun Beverages, by the way, is still falling. So it was the one stock from the entire FMCG universe that was weak yesterday. And we know why. Carbonated beverages, on that, the tax goes higher. So it's about a 1.5% reduction now. A lot of the other FMCG stocks are cooling off. Colgate, Nestle, Marico, Britannia, Dabur, everything's down between 0.5% to about 2.5%. So that's on the lower side. RBL Bank has made a good move in the last, I think, 10-15 minutes since opening.
Yeah, and that's in the FNO band.
Okay. 3.5%. Suddenly it's, rising higher.
Just one more word on RBL Bank. 2 sessions ago, we had mentioned that it had reached, normally a stock goes into the FNO band when it goes above 95% of its market-wide position limit. And it had gone on that day to around 100%. Now, from there, it's gone deeper, into the FNO band. So the street clearly is sensing something. And that's why you cannot take a fresh position, in the futures market. But that's the one on the radar, because actually the Nifty Bank has been underperforming in the last 1 month or so. But this one actually has done a relative outperformance. So I'll keep a close eye on it. We saw it periodically go into the FNO band even in August, but there was no news that came about. Now, September, again, in the first two or three sessions itself, it went into the FNO band. So that's one name that we'll keep on the radar. It's gone into the FNO band. So, yeah.
Yet it's, still building and rising on those gains. So let's watch out for this. Also, Lee Travenues Tech, 4% higher. Remember, just around earlier this week, I think this was not yesterday, but day before, a lot of the travel tech stocks like RateGain and even Lee Travenues, Ixigo, they were doing very, very well. And Lee Travenues is building on that 4%. It's been a good week for this one. RateGain, not so much today. Ixigo is up about 10% this week. What else? Edelweiss Financial has suddenly moved higher. 4.5% on Edelweiss Financial, Sterlite Technologies. So there's plenty moving in the mid-cap market this morning. Let's do one thing. We'll take a quick break, come back on the other side. We'll put the spotlight on a couple of the stocks and get a couple of management conversations going as well.
Welcome back. This is Corporate Radar. Well, Lalit Agarwal, the founder and MD of V-Mart Retail, joins us on the show. V-Mart Retail, well, the impact of the GST rate cut incremental sales due to the lower rates, festive demand, outlook, all of that is what we're going to discuss. Hi, Mr. Agarwal, good morning and good to see you in. Well, let's get to the first question. What proportion of your sales value and volume come in below that 2,500 rupee mark? If you could help us out with that.
We are a value retailer and largely catering to tier 2, tier 3 towns. So our customers don't have that kind of money to buy things which are above 2,500. So almost zero.
Yeah. So it's a widespread portfolio-wide impact, sir?
No, I mean, so for us, almost 85% of products that we used to sell was below 1,000. So it was already in 5% GST criteria. So now only 15% of those product lines which we were sold, which was being sold above $1,000 are getting impacted. And that is a good news for all of those consumers. And it is also a good news for us because we don't have to segregate these pieces and while pricing, we need to keep those in mind and have multiple GST framework. But it is definitely a very good invited and very good perspective. And beyond this, I also see it as a good perspective where there are a lot of integration. There's a lot of consolidation of product lines and GST which has happened, which is in terms of the man-made fiber and the yarns, the entire value chain, which was earlier at 18%, where an inverted duty structure also was getting erupted. So overall, we believe that the apparel cost to the consumer will go down and will go down beyond what the GST rate has gone down.
Yeah, so 85% under 1,000 rupees, 15% above 1,000, but of course everything under 2,500. That's the breakup. So this 15% perhaps gets a bit of a booster for now.
Yeah. So
any way to put any numbers to it? What kind of volume impact?
So 15% also used to contribute 25% in value sales. So it was not just 15% is the quantity, but the value which used to come down from there was almost 20-25%. So now that should definitely go up because they will get a little more cheaper. And it's just not apparel, but then also footwear, where entire footwear has brought down from 12 to 5. And it is also a lot of FMCG products, where a lot of those. So I believe there should be a delta growth in these festive times, and then there may be a lull in these 15 days till the time of the launch, and then by till 22nd, because people will wait and want to have the new GST regime and then purchase in that new GST regime. But yes, we believe there should be a delta 5 to 7% delta growth than what we were expecting from these consumers which were buying above that particular limit.
That's okay. You answered partially my first question, Mr. Agarwal. I was exactly trying to come to that. So how much more is the GST-related flip? So you said 5 to 7%, which means if you talk overall festive season sales, so let's talk third quarter, because I mean this last few days of September will settle here. So either you can tell us third quarter number or this festive over last festive. What is the total growth that you would expect now? In terms of, let's say maybe revenue, or you can say volume or value, whichever way you want to,
No, so I think we are definitely eyeing ourselves, and then the way we are trying to open up new stores, as well as the way we are driving our capability internally, so as to get a little better like-for-like store. So we believe we should be on an overall company level growth perspective, we should be touching around 20% growth, and we should be driving that kind of growth, overall growth. Year on year, and that is a little more ask from the team, and that is what we believe we should be able to do, and that is what we are gung-ho and we are planning for.
20% growth for FY26.
20% growth in this festival period.
In the festive period, okay.
Festival, yeah.
Okay, all right. So festive to festive, 20% growth thanks to the added GST flip that's happened. Now, sir, I want to get back to the point on pricing, and what you said is 85% of your products anyway were under 1,000. But now that the 1,000 cap goes away, it's been moved much higher. Won't you look at undertaking some sort of maybe price changes as well, maybe slight up trading with your customers? You don't have to keep products at say 999 now. So should we expect any, gradual, not immediately, but gradual, upward pricing tilt?
No, I don't think, because see, value market and value fashion is also becoming very competitive, and there are a lot of other players which are also coming into this market, and then I think we are able to deliver better value. So a 999 or these 999s are psychologically also some 3-digit numbers and 4-digit numbers also drive a lot of consumer going into this particular basket or driving into that basket. So I think there is always a pricing policy that we follow. The GST rates definitely in those times wanted us to put some lower margin if we want to keep it at 999. But yeah, that may go up, but it is very marginal, very, very small. I don't think that will impact. But yes, we definitely want to bring in more consumer who can consume or who can actually use better product, which are better designed product. Because as we are seeing more Gen Zs and we are seeing more fashion coming in, so we definitely believe that better acceptability of better fashion and better product is something that we want to drive, and that will come, and price shouldn't be a barrier. But yes, largely our consumers are those consumers who do not have that kind of money to spend. So we also want to keep an eye on their pocket, and their pocket doesn't go up because their incomes are not going up too much, and that is what is very important, and that is what is the major criteria for us to take up the ASP or the price of the product. So if the country does well, if the economy does well, if their income grows and the per capita income grows, then the higher price or elevating the prices could come in. But we are not expecting any profitable jump on from these lines on gross margins.
All right. Mr. Agarwal, the next big cue is going to be the Bihar election, right? And from a market perspective, the street is divided whether or not we'll see a breakthrough with the United States before the Bihar election, or maybe some believe that maybe, Mr. Modi will not want to make that call to Trump ahead of that state election. So we'll have to see how that goes. But from your perspective, that's a large market for you. Ahead of the elections, traditionally, what have you seen? A bit of a boost, consumption goes up, there'll be a lot of movement?
So ahead of the election, normally it is not a great news. Normally there are disturbances and local disturbances which comes in. But yes, once the elections are over, we have always seen some bit of growth coming in, and that is what we are expecting again. That in every election brings in some money in the economy, brings in some movement and some mobility. That definitely drives a lot of business, and the sales generally goes up after the election. So we are expecting some bit of disturbances during the election period. But yes, the expectation of having a better business after the election is definitely there.
Okay, all right, Lalit, we'll leave it there. Thank you very much for joining us, and we wish you all the best of luck for this festive season and beyond. And we'll talk again soon. Thank you very much. That's V-Mart with some pointers with regards to what this GST cut can do for their portfolio. 25% of the value. I mean, that perhaps gets a bit of a bump. 20% growth in this festive season overall is the guidance coming through from V-Mart. Just one name which has climbed to be the top gainer, volume-led gainer on the NSE right now is BSE. It was not there in the morning, but BSE has now seen a sharp spike. It's up about 3% or so. And Sud was telling us yesterday, and maybe if he wants to come back in, that yesterday, this week we saw the first time these new expiries happened. Tuesday for NSE and Thursday for BSE, and volumes turnover on the option side was still extremely high, close to earlier highs. So I'm not sure if this is the reason. But we'll have more as we kind of go along. But it is now on NSE the biggest volume-led gainer coming through. RBL Bank is up 3.5%. Some other names, NetWeb, we've been highlighting all week. NetWeb is up 25% this week so far. What a move it's had. It's up another 3.6%. This is the third day in a row, by the way, NetWeb. And of course, the other one is E2E, which has also done extremely well. Last few odd trading sessions.
Just one more stock, MobiWik. I remember, I think on Tuesday morning, post that large trade, we had highlighted in our morning chart that sometimes these stocks, which are big underperformers, they wait for a large trade to go out of the way. And I think Abu Dhabi investment got out of the way. Yeah. And post that in this week itself, from around 240 to 45 when that large trade took place, the stock is now at around 300 rupees. Keep in mind, if you pull up a longer, price chart, you'll see that the stock is still half from the peak. but a good bounce back is what I say. This is probably the stock of the week.
Absolutely. I mean, 30% plus. Even a lot of the GST stocks haven't moved as much as this one has. MobiKwik having quite a quick move in the last 7 sessions. But for the time being, we are putting the spotlight again on GST and how that impacts various companies. You just heard from an apparel retailer, a value retailer. Let's talk about footwear now. GST on footwear, which is priced, up till 2,005 rupees, has now been lowered from the earlier levels to just 5%. So how much of a boost could this be for Bata? Gunjan Shah, MD and CEO of Bata India, is with us. Mr. Shah, thanks very much for joining in. So we want to sort of understand a couple of things, 3 key points. First, we want to understand the impact of the GST rate cuts. Then, of course, we want to understand, what happens to incremental sales due to lower rates and the overall festive season demand outlook. So if I could start with the first, if you could break down currently your product portfolio, how much is below 2,500 and how much is above 2,500? So to that extent, what sort of a benefit do you envisage at this 5% rate now?
Great. Lovely to be here. Good morning to the viewers. Answering your question directly, basically it should be roughly around, I think we are still working out the details, but about 80% of the portfolio is below 2,500. So that should see the benefit passing on to consumers, and we are obviously committed, as has been spoken by me in the past also, to pass on the benefits to the consumers. We do expect this to have a significant impact on the momentum, which had obviously got negatively impacted when it had moved from 5 to 12. So I think this reduction is very, very welcome. And obviously, thank you to the government, Prime Minister and the Finance Minister on taking this bold decision.
So Gunjan, help us map that in terms of sales growth. So let's say like to like, if you talk about like to like, what were you expecting this festive season? And now with this bonanza coming in from the 22nd, what is your new estimate for festive season sales?
Yeah. We are still working out the details, but what we are looking for is definitely a significant boost driven by volumes, right? So we have been working over the last, I think about 4 to 6 months on driving affordability and therefore volume back growth. We have already taken a lot of, pricing decisions on that front over the last few months. We have, in fact, last week launched a campaign which is already preempting this entire piece on GST, which is live right now across all the 2,000 store network. So we are looking for obviously a significant delta driven by volumes. We will have to see how this pans out over a period of time, but I think the festive season and this is timed perfectly well for a significant jump ahead.
So what, 15% growth, less than that, more than that, like for like?
Yeah, I wouldn't want to comment on specific numbers to you, but as I said, I think a large part of the portfolio does get positively impacted, and as we are in the process of making sure that we pass it on, we should see a significant boost on it. That's the expectation.
All right. Hi, Gunjan. Good to see you, Ben. Well, is September 22nd enough time for you to go ahead and adjust stocks at the new rate? Because there could be a problem in the interim, right?
It can be. So we are working overnight on this. Already there is, as I said, we had preempted some of this. So we already launched a campaign. It's across all our stores even now as we speak. So I think I'm pretty confident the team is working on the back end to make sure that this gets done, both from a consumer facing perspective as well as from a technical perspective as well as taxation. So I'm pretty confident we should get this implemented.
Gunjan, hi. Below can you break this up? Below 1,000 and 1,000 to 2,500?
It's basically, as I said, below 2,500 is roughly around 80% of the portfolio, right? I'll hazard a guess, but it should be about 50-50. So 40% below 1,000, 40% between the two.
Okay. The reason I asked that is because, our margins on cheaper under 1,000 and, 1,000 up to 2,500 also different in that sense?
Not materially different. There are, depending on the category, etc., right? Because, but not very material difference. There is obviously about 2,500 is a slightly higher delta on margins for sure.
Okay. Where do you see this? Okay, so you're saying, and you're not putting numbers to it right now, right? How many, what is the volume impact? But I'm assuming it'll show up more in the under 1,000 priced products.
Even more so, because just to give you a perspective, that is what went through a significant jump on taxation about 2.5, 3 years back, right? That's when moved from 5 to 12, and that did take a toll on it. So below 1,000 was more than 50% of our portfolio. That has dropped to less than 40, as I just mentioned. So we are expecting obviously a lot of bounce back happening on that direction also.
And unorganized to organized, I mean, that is a shift which should also accelerate because of this?
Obviously, that should be a natural conclusion of this, right? We will be able to offer, better experience, better quality products, etc., to the same segment with more affordability. And as I mentioned, we have already, initiated a lot of those corrections already over the last few months in reaction to the consumer stress. And I think this GST welcome is a very welcome announcement. I think will only aid this going forward.
Off the cuff, do you have any numbers with regard to how much is the unorganized market for the industry on the whole?
There are several estimates on this, but roughly around 60 to 70% of the market is unorganized.
Oh, so then it provides a big opportunity, this rationalization of GST. What about store expansion? If you could tell us, what's the plan out there, even the e-commerce plan? How do you see both these two going ahead if you have some goals, some targets?
Actually, just to give you a little perspective, e-commerce as well as a large part of our store expansion has been a large part of driving growths in the last few years, right? On store expansion, first and foremost, I think a large part of the focus has been driving, expansion into tier 3 to tier 5 towns, right? That's where you see a lot of urbanization and therefore a desire for a much better retail experience. The franchise model of us is now almost about 650 odd stores, right? And we are expecting, there's no reason why we should not be pushing for, 1,000 stores over the next, let's say, about 2 to 3 years. So there is a lot of action that's happening on that front. On e-commerce, I think it's been a fastest growing business channel for now multiple years. It's now more than double digit in terms of contribution. So we expect that to continue. There is no reason why we should have any difference in terms of momentum on that channel.
Okay, all right, Gunjan, we'll leave it there. Thank you very much for joining us. Really appreciate your time here on CNBC-TV18. That's Bata with perspective on their business. So significant impact, not quantifying the actual numbers. Of course, I mean, these things, of course, will evolve. And, of course, cut time perfectly as the festive season. I mean, it's the Shraddh period gets over and you get into the festive season. So this is definitely going to give a bump up. Stock did very well yesterday, by the way. Metro Brands and Bata, etc. So today it's taking it a bit easy in that sense. BSE is up 4% now, just FYI. We'll take another quick commercial break here. But as we do that, just want to leave you with some sound bites on the automobile space. Here, of course, there has been a big change which has happened, and across the analyst community, this is one space where I think there is a fair bit of excitement as well in terms of what can happen to demand. Listen in, take that break, see you on the other side.
Ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption. And this is something that should in some ways create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall. So that is the reason why we feel it is a very important milestone for our economy and sets it up in the right way.
If I have to summarize what's happened for the two-wheeler industry, I would say it's a tactical hit. This GST reduction is a tactical hit, but it's a strategic miss. It's a tactical hit because, obviously a big fillip for, let's say, almost 98% of the domestic industry with this significant reduction in GST. But at the same time, the 350cc plus motorcycles, where Royal Enfield and Bajaj are the biggest players. This is on the one hand just 1% of industry, perhaps about 4% by value. So both Siddharth and I had appealed to those concerned, that this is just 2% of the industry, and let's have a uniform rate.
Certainly, the small car segment is the big beneficiary. It will, I assume, from the 22nd of September onwards, our expectation is that we will start getting into about 10% growth a year instead of the current stagnation and decline.
Okay, all right. Well, let's get Vinay Rajani, Senior Technical as well as Derivative Analyst of HDFC Securities, back on the show. Hi, Vinay. Good morning. Good to see you, Vin. Well, markets are holding on mildly onto the gains. The problem yet again is the Nifty Bank. It continues to underperform. What is the fresh trade you'll make on both the indices? And then fill us in with a couple of trading calls.
Yeah, good morning and thanks for having me on the show. So definitely there has been some profit booking in the bank nifty since morning, but the breadth of the market has been quite good. Some of the auto stocks, some railway stocks have been performing well since morning, and breadth I can see the small cap index and mid cap index have been doing well despite the mute performance after opening in Nifty. But overall, I still feel that though there was a selling from the higher level in yesterday's session, but still we can say that we are down but not out from yesterday's high. But yeah, 24,500 is a very strong support for the Nifty, and unless that we see a close below that, we have a hope that again the resumption of an uptrend. On the upside, the momentum will be back in the Nifty once we see close above 50 days EMA. 50-day EMA is placed at 24,800 odd level, so above which we can expect some momentum to come back. Overall, FIs are quite heavily short, and I think 24,800 is a resistance above which we can expect a sharp short covering. So that is a conditional view on the market. 24,500 on the downside, 24,800 on the upside, and overall bias is positive. Stock specific bullish move could continue to do well. So as far as bank nifty is concerned, bank nifty is also finding support around its 200 days EMA. No doubt it is not performing as of now. We are waiting for the breakout, and breakout level is above 54,450. So 54,450 is a resistance, which is yesterday's high, above which we can expect momentum to come back. But overall, yes, it might happen that after some underperformance, bank nifty will also come and participate in the market. As far as trading calls are concerned, I can see some strength building in the auto ancillary space. So Endurance Technology is looking quite good, placed around 2990. One can go long around 2930. One can keep stop loss. On the upside, I'm expecting a target of 3100. The second pick I would take is the KEI Industry. KEI Industry is placed around 4100, around which one can trade long. 4,000 should be the trading stop loss. On the upside, I'm expecting a target of 4250 on a couple of sessions.
All right, Vinay, thank you very much for that. So that is the calls which are coming through at this point in time. Vinay, just a quick, it's got enough trading history. MobiKwik, is it coming up to important kind of levels here? What's the view if you have?
Yeah, so I cannot open the chart of it, unfortunately. I have to check it, so I won't be able to help in that. Sorry for that.
Okay. What about Ola Electric?
Yeah, so after a stellar rally, it is facing some profit booking. The 200 days moving average is placed around 58. So it has run up a lot, and buy on dip should be the view. There has been a buying with a huge amount of volume in previous days, but now it is into profit booking mode. 58 is a very strong support around which one can again look this particular stock for going long.
What about BSE, Bombay Stock Exchange?
Yeah, so BSE has taken support at very crucial moving average and bounced back. I see some strength building up. Today's stock is up by almost 5%. Volumes have been quite good. The next resistance around 2400. But yes, there is a pullback rally, and I'm expecting it to continue. So yes, with a trailing stop loss, one can go long. So it is not into a positional uptrend, but definitely with a stop loss of 2227, which happens to be the today's low, one can go long, and we can expect some good gains in the short term also. So trailing stop loss should be the strategy, and overall we can expect the extension of the pullback.
Okay, all right. Thanks a lot, Vinay, for joining in and giving us your quick take on a lot of those stocks as well as on the index itself. By the way, before we slip into that break, pull up Brainbees Solutions. The stock in the last 1 year is still down close to around 40%. But you know, earlier this week, there was massive delivery-based buying that we saw on the stock, both in percentage terms as well as in absolute volume. And in fact, as we speak now, that stock is up close to around 7%. Doesn't take away from the fact that if you pull up a 1 year chart, you'll still see that the stock is down 38 to 39% or thereabouts. But in today's trade, massive volume is what we're saying. And we saw delivery-based buying earlier. Vascon's another big underperformer. But the volumes today are extremely high on that counter as well. A smaller company, big underperformer, seeing a bit of a bounce in this morning's trading session, up close to around 7.5%. 1-year chart will tell you the picture. Stock is still down 25, I think, or 30% or thereabouts. So keep an eye out on a couple of these names. Well, we'll slip into a short break. On the other side, Manisha is waiting. We'll turn our attention from the equity markets to the commodity space.
Welcome back. Let's shift focus to the commodity markets now. Manisha is with us in the studio. Manisha, what's on your radar?
Well, I'm looking at sugar prices because, while gold and silver are trading near all-time highs, metals doing well, energy has continued to decline, and that in some sense has put pressure on the sugar prices. So when you look at the international raw numbers, we've seen 5% of a decline come in for the raw sugar prices on a week-on-week basis, and we are down by 18% in this year so far. Last year also, it was a negative year for the sugar prices, where we saw a decline of around 14%. The reason for this constant pressure on the prices is, one, that there is selling pressure from funds. So that perhaps, if that turns around, you could be looking at some support. But currently, we are trading below 16 cents a pound in the global markets there. The second thing is about expectation of an ample global supply going forward, especially for 2025-26 as a season in the global markets there. You're looking at higher production, not just from Brazil, but for the Indian markets, where we are anticipating an year-on-year 18% of a surge in sugar. And Thailand, which is the third largest producer of sugar, is also looking at very strong numbers this time around. For Brazil especially, which is the biggest producer and exporter for sugar as well, this time around, instead of ethanol, they have increased sugar production from 49.15 in the last year to 55%. So there is that much sugar coming into the global markets from Brazil as well. So when you look at the global sugar production, the overall numbers there, last year was around 186.6 million tons. Of course, there are various ranges from agencies, anywhere between 180 to 189 on the higher side as well. But this year, we are looking at the second largest sugar production. These are USDA numbers. They are anticipating 189.3 million tons of global sugar production this time around. The consumption numbers also, by the way, have continued to gain up. These are the International Sugar Organization numbers. So while we are looking at a sixth year of deficit in case of sugar for the coming season as well, but last year, the deficit was 4.8 million tons. This time around, just about 230,000 tons. So we are looking at a considerable increase in sugar production and inventories in the global markets there. When you look at the Indian markets, well, as I said, 18% higher sugar production anticipated this year. This is on the back of favorable monsoon, increased acreage, and higher sugarcane prices. The FRP, remember, was increased 4% previous year, and the last 3 years, we've seen constant increase in the fair and remunerative price when it comes to sugar there. This is what we're anticipating in sense of sugar production. ISMA has put out a number at 34.9 million tons. National Sugar Federation puts it at 35, and so has Crystal Ratings as well, saying that around 35 million tons of sugar production is what we could be looking at in the coming season there. Interestingly, while you have 5% on sugar and mithais, 40% on carbonated drinks is something that the industry really seems to be working on right now. So the expectation that you would be looking at demands increasing for mithai this festival season, but sweetened drinks is something that could see a decline, as we've been talking in the last few days.
Okay, all right. Manisha, thank you very much for that. Well, with that, let's move to some individual stocks that are in news. Vinny is joining in with the latest on Zydus Life. Vinny.
Hi, good morning. So we're seeing Zydus Life that's buzzing in trade today. Why? Because Zydus Life and as well as Synthon has entered into an exclusive licensing and supply agreement for ozanimod capsules in the US market. Now, what is the treatment of these capsules? This is mainly used where there is going to be some immune system damages in nerve cells. This is what this capsule is used for. What does this agreement, or what is the total addressable market size of this? First, let's talk about that. That's at around $637 million in the US, and this is as of July 2025 data by IQVIA. Now, Synthon BV will actually be responsible for obtaining all those final regulatory approvals that is required for these capsules. They will look at manufacturing and supplying as well. What will Zydus be doing? Zydus will manage the commercialization of this drug in the United States market. Now, do not forget, what is the positive that comes in here is that Synthon is one of these first filers for the generic version of these drugs, and that is why they will have a 180-day exclusivity period. So in the short term, Zydus Life will also see the benefit of this coming in from the agreement.
Okay, all right. Thank you very much, Vinny, for that. That's Zydus Life in focus. Swiggy, Eternal are something we want to put the attention back on as well. Mangalam is here with reasons. Mangalam, over to you.
Well, last couple of days, there were a lot of news and regulatory announcements that have come by on all these delivery platforms, including the likes of GST and increase in platform fees, etc. Set all that aside, Motilal Oswal believes that the next few quarters are actually strong for all these companies, because they believe that a perfect storm that these companies went through over the last few quarters has now given way to strong tailwind. So they've upgraded Swiggy to buy. They have a target price of 560 rupees on the stock, implying a near 30% plus upside from current levels. Eternal too, they have a target price of 420 rupees. They've raised food delivery growth estimates for both these companies from earlier 19 to 20% to about 21 to 23%. And not only have they raised their growth estimates, they've also raised their target multiple from around 27 times EBITDA earlier to about 35 times. So that has caused them to raise their expectations and the stock price return targets as well. But more importantly, even for quick commerce, they have brought forward their profitability assumptions. They believe that contribution margins for both Instamart and Blinkit will recover meaningfully over the next few quarters. So they are betting big on the food delivery and quick commerce space.
Well, markets have cooled off. Mangalam, thank you very much for that. These are stocks in focus. 24,750 is where we are at, which means there's about, 14 odd points left. Not very much at all when you look at where we started yesterday. So same kind of trend, a little higher, but eventually a market not being able to hold on as we go into the next few hours of trade. We're going to take a quick commercial break here. On the other side, it's our special segment, Indianomics. My colleague Lata will have Neelkant Mishra and Ashish Gupta joining her. They talk macros, markets, and the implications post the GST cut. Coming up in just a bit.
Welcome to a very special Indianomics. India's macros and markets have been flooded by a torrent of big changes, a substantial cut in personal income tax and indirect taxes, putting in about 1.5 trillion at least of rupees spending power into the hands of consumers, plus a 100 basis point cut in repo rates in the past few months, plus a 100 basis cut in cash reserve ratio due in a couple of weeks. But countering all this is one big bad news, the 50% tariff on Indian exports to the US, accompanied by, frequent acrimonious tweets by the US president. And to add to all this, we got a GDP number for Q1 that was way above estimates, making many people wonder why then so much stimulus. Well, to answer all these questions, I have with me my best, experts or expert teachers of the market. I have with me Nilkant Mishra, the head of strategy at Axis Capital, and Ashish Gupta, who is the CIO at Axis Mutual Fund. Gentlemen, thank you very much for joining me. And first up, happy Teachers' Day. I can't tell you how much I learned from the both of you.
Thank you. You're very kind.
Nilkant, to start, first, this immediate boost. Do you think that this is enough to turn the wheels and push us to a better rate of growth?
I think so. I think so. I think the decline. So I'm not too worried about the US side and all the drama that they're doing. That's his style of negotiation, and frankly, by hyping it too much, we give it too much importance. I think the main reason the economy slowed over FY25 was not just the fiscal consolidation that was scheduled, but it was mostly because of the inadvertent monetary tightening. So if your credit growth goes from 16.3% in March 24 to 9.8% in May 25, that's a 6.5 percentage point of slowdown. And given that the system is about 56% of GDP, banking system credit, we're talking about more than a 3 percentage point drag in credit growth. Now, there is bidirectional causality, so slowing economy also drives this. That's a slower credit, but I think the catalyst here was the infamous LDR letters. Okay. I think the aftermath of the pegging USD INR at 83 and how it broke in the October-December quarter. So
many signs of tightness.
Yeah. So So now all of that is reversed. Now the problem with just easing monetary is that it's like pushing on a string. It takes time, and I was expecting that by November, December, some credit growth pickup will start happening, and that is absolutely critical for the economy to revive. I think what the GST changes do, while the primary objective, I think, is reform. It was not supposed to be a catalyst primarily, but it ends up being one. And so there is some destocking before 22nd September. But then when the restock happens, there are. It's like billiard balls. So you have a momentum going downward, then you have something hitting it the other way, and it starts to become. So what is a vicious cycle where the economy is weak,
become a virtuous.
Then quickly starts becoming a virtuous cycle, which is what we were into FY24. Some of it had to be tightened, but I think they ended up tightening too much. And so I'm quite confident that the measures taken so far are sufficient to lead to a growth revival. Whether they're sufficient to sustain growth over 10, 15 years, do we need more reforms or not? I'm sure you'll have questions on that.
Yes, I have. But before that, Ashish, the market thinks like this. The market is supposed to think forward.
Yes.
We have not seen that kind of positivity.
Sure.
So how would you explain the market's kind of placid reaction to what I would say are, very strong steps?
So I think the market has various facets to take care of, right? And there has been facets around what foreign investors have been doing. There's been the facet of so much equity supply, IPOs coming to the market. So the market reaction actually gets defined by multiple factors. And actually, if you see since the announcement of GST rate cut came, so that was on nearly 15 days ago, actually many of the consumption stocks are up 20 to 30%. So when the final announcement came, it was not totally unexpected.
Yes.
Right?
If you look at August 18 and if you look at yesterday,
yes, right. So there has been a big move.
Level is the same.
Now, the market also has a memory of last 4-5 years where the consumption has dragged for multiple reasons. Real wage growth has been poor, etc. So I think to really fully reflect this, market will not just wait for the impact of the stimulus, but how it translates into real demand, how it translates into corporate earnings. And as Neelkanth mentioned, we will probably not see that in the September quarter because of the destocking, but in the third quarter and the fourth quarter, there should actually be a sharp recovery. And I agree with him on both counts. You have...
On the credit flow?
Yeah, the monetary stimulus takes about 6 to 9 months to kind of feed through. And on top of this, the stimulus that's come because of the GST rate cuts.
Fair point, fair point. Now, before the market beats me up, they want to know from you what to buy. So I will have to ask you that directly. What would you bet on? Is consumption still worth betting on, Neelkanth? What would be the top 3-4 bets be?
Maybe on the discretionary side. See, remember that the fundamental drivers of the economy have not shifted. So you have a one-shot cut
Fundamental, I thought, has shifted. No, we were a capex concentrating fisc.
We are still that. So that is the message which I think is absolutely lazy thinking. Okay. That because see, the objective of GST reform or the catalyst for GST reform was that compensation cess was ending this year.
Yes.
Constitutionally, it couldn't have been extended beyond FY26. Because of that, then you had some room to cut some rates. The group of ministers recommended cancelling 12%. And then the Honorable Prime Minister decided let's get rid of 28 as well.
So you don't believe you're going from capex to consumption?
0% probability of that, right? Because I think the priority remains to build infrastructure. It will all be, from the government side, it will be primarily supply side interventions.
Okay.
It's not going to be consumption boost. So, and remember that we are still in a stage where labor is in excess, capital is in shortage. And therefore, the pricing power of labor is not changing. So beyond the 8-10% boost that comes from reduction in prices and growth in volume, I don't think there is anything more to be read from what is happening.
Okay.
So it will remain...
So to come to the sectors...
Yeah, so it will remain an investment-driven recovery. I would look at credit providers because when credit growth starts to pick up, it kind of feeds on itself. I would look at construction proxies. I would look at high-value discretionary items. So I would any day prefer cars over FMCG, for example, if I have to play the consumption theme. So so those would be my bets. I think on global exposure, I would continue to remain very worried. There are very negative, very bad signs that are now coming out. So, and what I fear is that when the Trump administration begins to understand that tariffs don't work, and I'm reasonably sure they won't work, they will start solving some of the other problems that they have to solve, like high debt to GDP, like an excessively strong dollar. And once they start doing the drama around that, we are headed for a very severe period of uncertainty. So fundamentally, I think global exposure is something that I would stay clear of. And the big change in the next 12 months is going to be a revival in credit growth, revival in discretionary demand, and revival in construction, etc.
Okay.
Those are the places.
Okay, that's very useful. Would you agree, Ashish, or would you want to add to some of the sectors? I mean,
so I think,
for instance, e-commerce. You can see a paradigm shift in the way people are consuming.
Yeah.
So UPI, any of the other ideas?
So I think what I'll want to add is that not just sectors, but you actually have to look at which are the companies, right, which are gaining market share, which have the products that are actually more desirable. So if you look at the math, right, you said the number that with the GST rate cut, maybe there's 1.5 lakh crores of more purchasing power, right? So total private financial consumption expenditure is about 20 odd lakh crores, right? So it's about 5-6% impetus, right? But this 5-6% excess volume growth, value growth will not go equally across all categories, across all companies, right? So clearly, incremental income is going into different kind of spending, right? And that's where I agree, sectors like auto, consumer discretionary, white goods, etc., will benefit, right? Health insurance is another sector. But even within that, there are companies that have products that are now more desirable. They are gaining market share, right? So whether people are going towards retailing or people are going towards quick commerce, right? So those spends will actually increase faster, right? And then you have the second order beneficiaries like the financiers, so banks, NBFCs. So if health insurance goes up, then hospitals also do better. You have wide.
So you're positive on health insurance and
yes,
hospitals.
And hospitals. You have, for example, white goods doing well. So certain EMS companies who are actually manufacturing for them also benefit. So you have to look at direct as well as indirect beneficiaries.
Fair point. Now let me come to the economy again. We have seen GST reform. As you said, it was inevitable because compensation cess will end. And by the way, as that ends, that's another 1.2 trillion rupees available. So actually the stimulus for spending is maybe more than 2 trillion. What is your sense in terms of the next gen reforms we should expect?
So, see, the government has so far, through its fiscal discipline, brought down the cost of capital for entrepreneurs. Yes. So a AAA 10-year bond at 7%, AA at 7.2%, cost of equity capital, courtesy folks like Ashish, is already quite low. And now I think that the need is to improve ease of doing business. So all that, Team Lee's RegTech keeps putting out 65,000 regulations, so many filings, so many with criminal penalty.
Yes.
I think all of those need to be brought down because when you've created this and you have low corporate tax rates and you have, even in FY25, in the BSE 200, operating cash flows, investing cash flows are only 80% of operating cash flows. This was despite significant jump in acquisitions. So the larger firms, while it was initially frustrating to me that why aren't they taking more risk, history says that the incumbents generally try to protect their turf. They don't try to take risk. All the challengers will come from the small and mid caps and so the smaller firms, which will make use of this environment. To help them grow, I think deregulation has to be among the most important things. That seems to be the government priority as well. How quickly the state and the central governments can resolve that becomes very important. I also think that, and here I'm being more prescriptive, that I think simplification of government structure itself is required. Like there's no need to have so much, so many departments looking at like power and oil and gas and coal and new renewable energy. This energy.
Rural development.
Or think about the fact that there is convergence of technology, but we still have a Ministry of Information Broadcasting, Ministry of Telecom, Ministry of...
all separately.
Yeah, so they're all doing it separately. In electric vehicles, traction is done by MHI, heavy industry. The subsidies are handled by Ministry of Road Transport. Electronics come from Ministry of Electronics. Yeah, so that I think...
So your accent is that it will be more deregulation and simplification.
Simplification, because that's because the government role in the economy is actually shrunk. And the last point I must say is that I think unlocking some of the... Again, I'm being prescriptive. I mean, one thing you learn advising the government is that there is acceptance of ideas, but the pace at which it happens is determined by opportunities. So like the GST simplification, we've been pushing for at least 5 years. But it was when this opportunity came that suddenly things fell in place, right? So we have to keep pushing for it. So I think land, and especially so much of land that government entities hold, as we think about the next 15, 20 years of India's GDP, a large part of it will come from real estate construction, housing construction. And to bring down the costs of that, I think a lot of the land easing, regulatory easing will be required. So these will be, but that's more prescriptive at this stage.
Well, I have to take a break, but lots more questions lined up, especially earnings growth, GDP growth. How do we face tariffs? All those questions lined up after the break.
The Indian market pairs opening gains. The Nifty hovers around 24,700 actually as we speak. The IT index is the top loser, while FMCG also sees some profit booking. Autos remain the top gainers following GST rationalization for the second day running.
Insurance companies clarified that the impact of GST reform on embedded value. HDFC Life sees the impact of 0.5%. SBI Life sees an impact of around 0.2%, while ICICI Prudential expects the impact of approximately 1%. All stocks are higher in trade.
Block deal in prime focus sees nearly 1.5% equity change hands. The stock on the back of that is up 10%.
MK initiates a buy call on Eureka Forbes with a target of around 725 rupees a share. The brokerage said that the stock has the potential to double over 3 to 4 years with an expected revenue CAGR of around 13%. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And the markets, as you can see, the Nifty, after dipping closer to 100 points, it's more or less flattish as we speak because it was up closer around 70, 80 points. Then it saw a sharp correction. But some kind of stability is what we're seeing, holding at around that 24,700 odd mark. Mangalam, yet again, the key batsman for the team is not able to perform, the Nifty bank. And that's the problem pocket. However, at around 53,500, we have seen that there is some kind of support. So let's see whether or not that's the case even today.
Yep, there is consolidation. The good part, however, today is that the broader markets are doing well. Yesterday, they took a bit of a back seat. We had more stocks declining than the number of stocks which are advancing. And today, as we speak, the crisscross lines haven't crissed or crossed. We have 1,500 stocks which are in the green, and that compares with close to around 1,100 stocks in the red right now. They did come close at one point, but that has actually been bought into. So that's a positive. The other thing we'll be looking at is whether there is some sort of recovery coming in from the levels where we are on the Nifty right now, because we're very close to the 20-day moving average, a level that could prove to be a bit of a technical support. But we're not the experts here. We have Manas Jaiswal joining in to give us a quick technical view on the market. Manas, the problem for the market has been that rallies are being sold into. But the good part is that at lower levels, we are finding buying as well. So do you believe that this consolidation continues? What are the triggers that you're tracking?
You're absolutely right, Mangalam. Good morning. So Nifty is still trading above this support of 24,500. I think Nifty has a lot of support in the range of 24,500 to 24,600. So till Nifty is trading above 24,500, I think one can hold a long position. Yes, Nifty could not sustain on high levels yesterday, but since Nifty has a lot of support at lower levels, you can hold your long position, keep the stop loss below 24,500. However, if you have to create fresh long, then I think you should wait. I think one should create fresh long only on a breakout above 24,850. If it breaks 24,850, then it can go up and test 25,200. So I'm not bearish at current levels. I think one can hold long position in Nifty. However, in Bank Nifty, here the trend is definitely negative. But here also, Bank Nifty has a lot of support near 53,500, where the 200-day moving average lies. So if you're long in Bank Nifty, keep the stop loss below 53,500. However, here one can create long position only on a breakout above 55,000.
Okay, all right, got that. Manas, I wanted to ask you about the tech index. There are some rumors that are floating around. It'll be difficult actually for Mr. Trump to go ahead and do something to the IT space, given the kind of dependence they have on IT services. We'll have to see how that goes. But after the index saw a sharp pullback, suddenly it's seeing some kind of buying at lower levels. On the charts, how's it looking? That's an index has been a rank underperformer, and the street was hoping that it forms some sort of a base. Your take?
Yeah, good morning, Nigel. So yes, we saw some bounce back just, I think, 4-5 days back in the Nifty IT index, but it could not sustain on high levels. It is making lower tops and lower bottoms. So now if this index breaks 34,200, you may see almost 1,000-point crack in Nifty IT index. So one should be very much cautious. Stock specific, I think one can definitely look at SL Tech, where stock is making lower tops and lower bottoms, and we have seen a fresh breakdown. So if you're an aggressive trader, you can create short position over here. Stop loss should be around 1445, and here the target would be around 1385.
All right, Manas, thanks a lot for that. Let's speak about the jewelry and consumption space now. Shilpa spoke with Titan's managing director Ajay Chawla on the sidelines of the launch of their new collection under the luxury brand Zoya. She spoke to him about the potential of the Zoya brand and the impact of GST reform on the jewelry sector.
The goal for the brand is 500 this year.
This year, okay.
Yeah, not in NSV terms, not in net sales, but in consumer price terms. Maybe by next year, by FY27, I think it can certainly be a 500 crore net sales value brand.
Right. So then this year about 400?
Certainly. In consumer price terms, last year we did around 365 crores.
Okay.
So certainly if you're seeing a 30-40% growth in consumer price, it should get closer to 500 this year, and here, I think about 85% of that is a net sales value.
Yeah.
So it's certainly come of age, and it's a profitable brand.
Yeah.
And it stands on its own 2 feet. So there is no hurry to make Zoya a big brand as much as a very aspirational, desirable brand.
Right. I have to ask you though, today we're talking at a time where we've just seen some major GST reforms coming in place. While for gold or jewelry, it's pretty much status quo. But I wanted to understand, because this is so many other, especially consumer items, are now going to be taxed lower, and that's going to put a lot more money in the hands of consumers, right? Do you see like an indirect impact, especially ahead of the festive season? Do you believe that, now that consumers will have more discretionary spending, saying that'll sort of spill into jewelry sales also ahead of the festive season. How are you now looking at the festive season demand?
I believe this is a great timing of this move. It sends the right signals, and it will genuinely actually increase the money in the hands of the customer. Therefore, discretionary spends will go up. Now, how well we are able to leverage it for jewelry or for Tanishq or Zoya depends on how imaginative we are with our plans and how we are able to attract the customer.
You know, lastly, I want to talk to you about tariffs also. You know, now that the tariffs have come in place earlier, you know, Titan had spoken about how it's probably going to look at shifting its manufacturing base to maybe UAE to sort of offset the tariff impact. Currently, how are you looking at this entire situation now that this 50% has come into effect?
Across the industry, people are exploring different ways to kind of offset this. For the time being, we are in a way covered for season because we had exported a fair amount of inventory for the US market. And in fact, we've also seen in the US, the customer has been very savvy and they've been buying up a lot more ahead of these tariffs. So they're also not sure where this will go.
Yeah.
So to be honest, I don't have an answer about manufacturing. We are certainly exploring all options, sourcing, manufacturing, and also there are possibilities of other mechanisms by which this can work in partnership with certain firms in the US, and whether there can be some possibilities of job work, etc. The other important thing I'm seeing, what I hear from our teams, is that the American customer today, at least to whom we are serving, is actually very comfortable buying in the US. So if they don't have other options, it's not that they're going to come and buy from India and go. I think those days are gone.
Okay.
So I would think they would also be willing to, in a way, you know, understand the reality, because they are just not buying for investment value. They are also buying for their adornment needs. So I think even the customer there, especially the Indian customer there who's doing fairly well, will be open to, you know, shelling out a little bit more if it requires.
Understood.
All right, that is the management of Titan speaking to you on CNBC-TV18. But what we'll do is take a short break. On the other side, we'll discuss the GST rate cuts and the impact that it can have on a multitude of sectors. And this time around, we have the hotel space as well. Chalet Hotels joins in to discuss the impact of the lower GST on hotel rooms.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific.
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Welcome back. Just keep an eye out on a couple of stocks. ICICI Bank is at the low point of trade. The other one which is seeing some profit booking is HUL. The FMCG stocks have done well largely. And ITC is the other one which is down about 2% as well. No incremental negative coming in from the GST Council meet for ITC. In fact, a few positives in terms of lower rates for FMCG as well as stationery. But speaking about the GST, let's focus on the hotel space. GST on rooms equal to or under 7,500 rupees will now be at 5% without the input tax credit, as against 12% with input tax credit earlier. And for rooms above that, we have 18% already. Sanjay Sethi, who's the Managing Director, CEO at Chalet Hotels, joins in. Thanks a lot, Mr. Sethi, for joining in. The key discussion point is that of GST. But I'm looking at your average room rates over the last many quarters. They've been upwards of 12,000 rupees. So does this really make a difference to you? That's point number one. And secondly, how significant is the input tax credit element, 5% without input tax versus 12% with input tax? What is the delta that it makes?
Sure. Thank you. Firstly, I want to say that I've been watching the CNBC-TV18 coverage for the last 2 days. It's been fantastic. I mean, it's been so informative and so helpful to all of us in the industry. Look, it's been a great GST announcement. I think the GST 2.0 has really reset the vision and focused more on the nation building. And I think Sabka Vikas is pretty much the theme in that one. This will definitely spur growth, give an impetus to the Indian economy. And we believe consumption is going to increase multifold from here onwards. For Chalet itself, as you rightly pointed out, we do not get either negatively or positively impacted from a GST perspective, but the positive story for us and companies like us is that it'll create a huge amount of liquidity in the market, and people who like to spend on experiences are likely to visit hotels more often, both F&B and to stay. So from that perspective, a very strong positive for the industry. Coming to your point regarding the 7,500 rupee tax GST bracket at 5% without IDC, look, it's a welcome move that we move to 5% for the lower end of the market. ITC is, I believe, a miss, an anomaly that still needs to be corrected. This is how we look at it. Look, I think the number of 7,500 is incorrect. It's been there for many years now, and we need to sort of move it upwards. So there are my three recommendations are, get back the ITC for hotels that are in the slab of 5% GST. 2, increase the 7,500 limit to 12,000 rupees limit. And then, because we don't want to go on big, talking about it every year, I think the cutoff limit of room rates should be linked to CPI, and therefore an annual adjustment can happen automatically without needing a GST council meet, because this can then be directly linked to that. But look, overall, very growth-friendly budget, very excited about the times ahead for all of us. And this combined with the demand and supply arbitrage that the industry has been facing, I think the next 3 or 4 years continue to look very, very strong.
Right, Mr. Sethi, as Puneet Chatwal also earlier said, that anything in the right direction would be great. Obviously, how much better could it have been with the removal of ITC and increasing of that 7,500 limit is everyone's conjecture. We'd always want more, but for now, any step in the right direction could boost some bit of hospitality. But Nigel.
Well, hi, good to see you, Mr. Sethi, and you're sounding very, very optimistic about prospects. Let's get a couple of more details from you. How would you treat F&B revenue under the new GST regime? Could that as well see a boost?
No, so look, as far as Chalet is concerned, it doesn't affect us, because if you sell even one room over 7,500, you're taxed at the old GST of 18%. So that'll continue. So no changes in that. But again, I want to come back to the point that there's going to be a lot more liquidity in the hands of the consumers, and that should spur F&B as a whole. And we are very excited about that. See, another thing I do want to add here, Nigel, is that at our category of hotels, our focus is not to sort of squeeze the ARRs down and remain under the 7,500, 10,000, 12,000 mark. Our focus is always going to be to grow the business and grow the rates. With that in mind, whilst I wear a double hat of the Hotel Association of India, NCI, Western region, and I need to highlight this anomaly that's happened on the ITC side for 7,500 rupees and below room rates. At Chalet, we're not concerned at all. Our focus is going to be continue to improve the RevPAR of the hotels.
We understand that. But, just to build on to Nigel's point, when he spoke about F&B, I just wanted to understand, for Chalet hotels, what proportion of the revenue comes in from F&B, and how much of that would be F&B because of the resident guests, and how much of that would be external? Because restaurants are all at 5%. So if I just were to go to any of your restaurants and eat, would I be charged 5% or would I be charged 18%?
So it is 18%, as was the case prior to this reset here. So there's no change in that. You asked this question about what's the mix of residents and non-residents. Roughly 60% of the business that we do is non-resident because we also include the banquet business, the MICE business in F&B. 40% comes from residents. Largely the all-day diners and specialty restaurant is very resident focused, whereas banquets and bars are non-resident focused.
And on the input tax credit itself, could you give us an example, say, for instance, for every other hotel, and I'm not speaking specifically on Chalet hotels, for all the others, which say, for instance, spend about 100 rupees, earn about 112 rupees, how much would the input tax credit component be? Now they would earn 105 rupees, but they wouldn't get that extra input tax credit. We just wanted to understand from a layman's standpoint, if you could help us with numbers,
Let me look at it like this. So let's talk about the room revenue because this is largely impacting the room revenue parts. I'm going to take that one segment from the P&L of the hotels. So if you were getting, say, 10,000, okay, let's take 1,000 rupees as a reference point. If you were charging 1,000 rupees for the room, at a tax of 18%, the guest would be paying 1,180 rupees as a whole, but the company would get the credit for that 118. So it was beneficial for the hotel company over there because ITC was allowed. Now, because ITC is not allowed, for the 5% tax range, what will happen is the consumer's cost will come down from 1,118 to 1,050. But now this 50 rupees will have to be paid out by the hotel company. And therefore, there's a marginal increase in the or reduction in the profit margins. This, however, is now going to be set off on the cost side because a lot of the consumables in hotels have had GST reduction, right from linen to bath towels to toiletry supplies like toothpaste and dental kits and all of that. And of course, food items, televisions, etc. So all of that has come down. And therefore, combined together, I don't see a negative impact. It will only be positive. It would be far better if we brought back the ITC for the hotels in the 7,500 and below category rooms.
All right, very quickly, sir, before we let you go, I've been quite impressed with the facilities you'll have here in Powai. It serves as a good staycation, actually. But on the whole, for business, how has occupancy been? There have been heavy rains in various parts of the country. Has it got affected?
So, Nigel, while we don't give numbers that have not been disclosed in the market, yes, I think all India, we've seen the havoc that monsoons have played this year, whether it's in up in the mountains or down in the plains. And there have been days when hotels in specific cities have suffered on account of that. We've also had frequent flight cancellations, etc. So all of that combined has had its impact. We still expect to grow overall in the quarter. How much it will be determined in the next 3 weeks or 4 weeks or so.
All right, we take that point. Thanks a lot, Mr. Sethi, for joining in and giving us an outlook on the hotel industry, but more importantly, telling us how this has been a step in the right direction. And you've given your wants. Hopefully the government and the others are listening because they want to boost tourism in the country as well. Take a short break, come back on the other side. More on the markets and stock-specific action. Stay with us.
Welcome back. Well, the markets are still down close to around 50, 60 points. The saving grace is that the number of stocks advancing, number of stocks declining are almost even, Stephen. And that's why you have the Midcap index actually that's holding more or less flattish. Well, we'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra and with me are Hormis Vatakia and Reema Tendulkar. For the markets, we saw that sharp fall from the opening highs. The open number was 24,818. We saw lows of 24,632 as well. So that was almost a 200-point fall from the highs. But then there was a recovery, and now we have recovered around 50 points from the lows of the day as well. And right now at that 24,686 mark, very close to that 24,700 mark right now. Auto is doing well. Pharma is also batting it for the bulls. There was some impact on the IT names, and that's because there were some forwards going around which spoke about how there is a possibility of Trump's plan to impose tariffs on Indian IT, and that is something which led to that sharp fall in the IT sector. But now there is there's a response coming in from Bloomberg. We wrote to them and they replied indicating that there's no such news piece that there has been on the Bloomberg terminal, and that is the reason we have seen some recovery that has come by as well. So it's an important clarification and indicates that there has been no such indication of any tariff on Indian IT as of now, and that explains the recovery as well that we are seeing in the markets right now. But you know, there have been so many conversations around tariffs that maybe markets took it for real, but there is an important clarification now.
Indeed. I think there's just fear in the markets, right? There's so much panic every time you hear. And, the IT services is such a price sector. It's about what? Overall, the Indian IT services must be $250, $300 billion in size, right? A chunk of it goes to the US. I mean, there's BPO, there's IT services. In IT services, there are various geographies, and then US. But that's an important clarification. But just the way the markets are getting whipsawed. When the news broke, the Indian IT, the Nifty IT was down close to about 2.5% at the lows. And from there, you are seeing that recovery. Pull up intraday charts, pull up the large cap names like an LTI Mindtree, HCL Tech, Tech Mahindra. Some of these large cap names took such a beating when the news broke out. And now you are seeing that intraday pullback in these names. I was talking to a few analysts and, I asked them, I said, just hypothetically, right? Is there a possibility of a tariff? He says very, very little. And if it comes through, 35, 40% can be wiped out instantly from the Indian IT companies. But what if he has to penalize the Indian IT services sector? What can he do then? He said he might look at increasing the minimum localization requirement. So in his first term, he said that, Indian IT companies will have to staff 65%. 65% of the work has to be localized. Got it. And that was introduced by Trump in his first term. And because of that, IT services margins took a hit because offshore cost of employees is a lot higher than onshore. And then there is a scramble to get talent. Right? So he's like, if you have to penalize, then maybe you would try and further increase 65% to another level. Indian IT companies, in response, because of the visa issues, they tightened the visa norms, anyway increased the localization. Minimum is 65%, they made it 70, 72, 73%. So they said, let's just keep a comfortable buffer. But at least from a market point of view, I think tariffing, putting tariffs on Indian IT is not something which is in the base case at all. But that's an important clarification, and you saw the market's getting whipsawed. But let's talk about stocks, right? The Nifty is now closer to 24,680. What about individual stocks? Harmis is at the big wall, and he's putting the spotlight on the movers and shakers.
The IT has been in the news over the last half an hour, but there are some movers that have been hogging the limelight all through this week, and Atul Auto is one such name, and it was up 17% yesterday. It's up another 6.5% in today's session, and look at the volumes that you've seen in the last two trading sessions. We already had almost 1.2 crore shares change hands yesterday, and today, within the first 2 hours, we've already had half of that, or almost 55 lakh shares already change hands. And you take a look at the 20-day average in comparison to the 55 lakh shares, that's only 71,000 shares for Atul Auto, and courtesy of this move, the stock is broken above its 200-day moving average. And for the week, the first 5 days of the week has already made it the best month that the stock has had in 2025. The other one, of course, is Brainbee Solutions. The stock was down yesterday, but it's up 11% in today's session on very strong volumes. We've already had anywhere between 30 to 35 lakh shares traded. That stock also had over 1 crore shares being traded yesterday. Today's 30 lakh shares, comparison to a 20-day average of around 5.5, and it's broken above its 50-day moving average of 369 and a 100-day moving average of 362 as well in today's trading session. And almost 24 lakh shares out of the 1 crore shares that were traded yesterday were marked for delivery. Moltech Packaging is the other one. It's up in 4 out of the 5 sessions this week. The highest volumes that we have seen since the end of July. We've already seen almost close to 3 lakh shares that have changed hands today compared to a 20-day average of just 27,000 shares. And after 2 negative years, the stock is up 30% this year. So it's poised to be the first positive annual returns that the stock might deliver in 3 years. And the last one on the list is Vascon Engineers. The stock is up 15% so far this week. The best possible week that the stock may have since May of this year. Over 1 crore shares have changed hands here as well in the first week, in this week so far. In today's session itself, more than 55 lakh shares have traded compared to a 20-day average of just around 2.5 lakh shares. So Vascon Engineers almost 8% higher on very strong volumes all through the week. Back to you guys.
All right. Thank you so much, Harmis. Some interesting names there. And the delivery data also indicates what's happening in the markets. But let's get in an important conversation going. We have been talking about that big GST rejig that has come by. Let's put focus on the textile space. Dinesh Nolka, Chairman and Managing Director, Nitin Spinners, and Atul Ganatra, the President, Cotton Association of India. They're joining us now. And the discussion will be around, of course, the big news, impact of GST rate cut, scrapping of import duty on cotton till 30th September, and growth outlook for the industry and the company as well. Gentlemen, good morning. Thank you so much for joining in. Mr. Nolka, let me start with you first up, because there have been various rate cuts on man-made fiber from 18% to 5%, on man-made yarn from 12% to 5%, and on finished products, the GST rate has been cut from 12% to 5%. Can you explain what the impact would be on the entire value chain because of this cut that has come about?
Good morning, and thank you for having me on the show. Basically, what has been done, we must first congratulate the Finance Minister and the GST Committee to have rationalized our inverted duty structure. And most of the demands of the textile industry have been met over here. So what they have done is that they have made it fiber neutral. Earlier, we used to have additional higher duties on the man-made fiber than the cotton fiber, and also correspondingly in the yarns. However, the fabric duty was more or less same. So what was happening was that all the man-made fiber producers used to have an inverted duty structure, and they used to have some duty remaining on their books. So with this change, what happens is they are able to pass on the duty immediately, and their working capital flows are improved a bit. Although they used to get the refunds earlier, but that used to take maybe 6 months to 12 months time. So that is the major change. Secondly, on the ready-made garments, also we had requested that they should have a uniform rate, that is 5% for all the kind of ready-made garments. However, they have chosen to increase the limit from 1,000 to 2,500. We have still request pending with the Finance Ministry to increase this to at least 5,000. So we would request that it would be better if it is at the same level, but definitely if it is, we are thankful that it has been reasonably increased at least.
Mr. Nolka, just one follow-up question then. On account of the changes, by how much would prices come down by on an average? Will you look to pass on the entire benefit, or will the industry, look to retain some benefit on your margins, considering the hit that the industry is also already facing on account of the tariff front?
Over here, there is no changes in the margins. Actually, the GST used to be, GST was 18%, which used to be, and when it comes to the fabric, it was only 5%. It is still 5%. On the ready-made garments, up to 1,000 rupees, it was 5% only. So there is no incremental margin which is going to come to the manufacturers. Only their working capital cash flows will improve, and their ease of doing business will improve.
Okay, so no impact on the P&L as such, but the balance sheet will improve because working capital will be available, because earlier refunds would come in 12 to 18 months. So that's the impact for companies right now. Let's get in Mr. Ganatra as well in the conversation. Mr. Ganatra, a lot has happened in the textile space. One is the GST cut. Second has been those 50% tariffs that we are talking about. And the third point has been that the government has scrapped duty, import duty on cotton till 30th September. Can you tell us what are the on-ground impact? What is the on-ground impact of all these updates that have come by?
Yeah, good morning. We welcome this decision of GST cut. It was actually a long demand pending from the industry, and it has been fulfilled now. And regarding, as you said, tariff, we from Cotton Association of India, we were having mainly three demands we have done to survival of the industry. Number one, import duty to be removed. That has been done. 11% duty extension given up to December. Second, our demand was export, yarn export and cloth export to USA. There should be a 15 to 20% incentive. That demand is pending. Third demand was CCI cotton rates are much higher than global prices. It has to be reduced for the benefit of Indian industry spinning mills to survive. That also CCI in last 15 days has cut a 5% rate, almost 2,500 rupees per candy. So out of the three demands done by the Cotton Association of India, two has been fulfilled, and it will be a benefit to the industry. But still we are waiting for some more relief.
What kind of relief are you waiting for, and how has the tariff scene impacted the demand overall? Is there a big cotton export that we're seeing to the US already?
See, as you are aware, our total textile export is around $40 billion. And out of that, 1/3 is to USA. So definitely tariff has hit to the industry, and mainly to the garments which was about to be made for USA or dispatch. Everything is become standstill. And that impact of the garment industry is slowing down. It has come to the spinning mills, where the yarn demand has been slowed down. The prices of yarn also has been reduced to 10 rupees, 15 rupees a kg, and still there is no much big buyers. So definitely this tariff has hit to the industry, but government is kind enough to look after the demands of the industry to survive, and most of the demands is given by the government, and we are looking forward that within another 2 weeks of time we will have a further relief from the government. We feel that there will be a incentive will be given, and also there will be a CCI may reduce further rate of the cotton as looking to the big stock what they are having it.
Sure. Mr. Ganatra, morning, just some numbers. What would be the value of exports to the US in the month of August? You said it's come down significantly. What's the number now?
No, I don't have a correct number, but the export to USA has come down, and we may see coming months also the figures will come down, because I have heard that USA buyers are asking big discount, 30%, 35%, which is not possible for Indian exporter to give at present. There is no that much gap or profit is there. There is a big competition India is having from the country like Vietnam, Bangladesh, China.
Okay.
So it is not possible to give discount, such big discount.
So just one more point about the flow-through impact. You said yarn demand and prices have also been impacted. Would we have numbers? Yarn prices today, how much lower is it compared to what it was, say, 6 months ago?
Yeah,
and even demand.
I will tell you the example. In Gujarat, 30s hosiery yarn was 245 rupees 2 months back. Now today it has been traded at 228 rupees. So almost 15 to 17 rupees down mainly due to tariff. So mills who were doing good for the spinning from last 6 months.
Okay.
To 15 rupees a kg loss in the cotton yarn spinning. So we feel this GST cut, the spinning mills may shift from cotton to man-made fiber, and experts say 5 to 7% shifting from cotton to man-made will take place this year alone.
Okay. Mr. Nolka, do you want to comment on that? Do you think that shift will happen? Would you see that in other spinners as well? And you do also have sizable exports going to the US. What has the conversation with buyers suggested? And do you think the UK FTA could help recoup some of the losses that we are seeing?
Let me first tell you that we are primarily yarn and fabric manufacturer, and we have very limited exposure to the USA. Our direct exposure to US, direct and indirect, all put together is less than 10%. So definitely there is an impact, but that can be mitigated by exporting to other countries, at least for our company. But for industry in general, we have a total exposure of about $11 billion of exports are happening to USA. And with this additional 25% tariff, is completely unbearable for any of the industry, since even our customers and even the manufacturers don't have this kind of margin to bear this kind of tariff. So definitely there is a lot of hue and cry, and that led a lot of issues related with tariff. And as Ganatharaji told, there is also stoppages in the industry, especially on the garments and the home textile side. So that is one of the major concerns as of now. As far as yarn prices are concerned, definitely yarn prices have come down, and that is primarily due to the pressure from the international market. Everybody knows that India is in a peak spot at this point of time, so there is a pressure from the international market on the prices. Even the cotton prices has also fallen, and also here Indian prices have.
All right, we take that point. Mr. Nolka and Mr. Ganatra, thank you so much for joining in today and telling us what the impact of this big GST rejig be on the textile space and the other aspects of macros as well, especially the tariff that has been levied right now. With that, we'll slip into a break. Up next, we'll put focus on the crypto market with Manisha Gupta on the other side. Stay tuned for that.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner today, we are joined by co-founder of Chainlink, Sergey Nazarov. Sergey, hi, thank you so much for joining in. And congratulations are in order because the White House has endorsed you, highlighting Chainlink's crucial role as a decentralized Oracle network, also acknowledging the kind of importance that you are really bringing into stablecoins.
I'm seeing a lot of adoption in DC of blockchain technology generally, and because Chainlink is the leading provider of a type of that technology called oracles and oracle networks, I think it's very natural for the U.S. government to start, adopting our technology as well. Also, we've been very active here in DC in terms of helping create various legislation, guidance from a regulatory point of view, trying to work with the regulators, the new ones that are very pro-crypto and pro-blockchain. So I would say that we've just been very involved in DC, both from a perspective of providing guidance from the industry's point of view in a way that it helps both the US grow and the blockchain industry grow both in the US and globally. And then we have basically the best-in-class technology to solve certain key problems that financial institutions have, but also governments have.
Sergey, as you mentioned, Oracle has been the technology that's making blockchains more connected and compatible, also paving the way for new digital finance use cases, would you say?
Yes, absolutely. I think our industry is at a crucial inflection point where it's going to go from being about cryptocurrencies, which are highly speculative, into the tokenization of equity, commodities, funds, and basically the entire financial system. So I think the amount of value that's going to be tokenized from the traditional financial system into the blockchain-based financial system will surpass the total value found in cryptocurrencies. And so our industry will naturally become not about cryptocurrencies, but about the tokenized version of an equity, of a commodity, of a fund. And it'll be a similar shift to what you saw with the internet, where at a certain point in the early days of the internet was synonymous with email, because email was the first use case of the internet. And that's kind of what cryptocurrency is. It's the first use case of blockchain technology and Oracle networks. But now what you have moving on from there is the tokenization of these financial products, which I think will by the numbers define our industry more than cryptocurrencies.
Oh, well, absolutely. And moving on to tokenization, as you said, is going to be a game changer. But would you also say that it is about institutional adoption of digital assets that we've seen in this year? That could be yet another thing in game changing for the industry.
Yes, that's exactly what I would say. I would say that it's a complete redefinition of our industry, and that redefinition is now being massively accelerated by the US government as a priority for their economy. And because the US economy and the US financial system is the largest financial system, when it accelerates a certain type of financial product, that naturally accelerates it globally as well. So I would say that we are definitely at a key inflection point where we're now going to go straight into massive tokenization, but not of more cryptocurrencies. I mean, you'll have more cryptocurrencies, but it'll be much more about the tokenization of these traditional financial products, and the tokenized versions of those financial products will be much better than the traditional financial products.
Sergey, the other feather in the cap clearly has been Chainlink and MasterCard connecting, and that partnership that you guys have taken off. It is also connecting the off-chain payments world directly to the on-chain DeFi world in close partnership. Would you say the traditional finance and the DeFi convergence is clearly coming at fore now?
Yes, the MasterCard partnership is a very good example of how Chainlink is able to synchronize between the traditional financial world and the new decentralized finance Web3 blockchain world. Basically, we were able to allow MasterCard transactions using traditional MasterCard payment rails, together with a number of partners, to be converted into a transaction on a blockchain for the purchase of something in the Web3 public blockchain ecosystem. So this means that a MasterCard holder was able to use their MasterCard. They didn't have to deal with the blockchain, but they were able to interact with the blockchain through that MasterCard purchase. And so that's very powerful because you have over 3 billion MasterCard holders. And that is kind of the other thing that I'm seeing is that people assume sometimes that the blockchain and the Web3 world will destroy the old systems. I personally don't believe that. I think it'll be like the internet, where the existing systems choose to adopt blockchain technology as the new environment in which they conduct their transactions.
Sergey, I have one more question, and this is a forward-looking one. If you look at 2025, it has been a very strong year, whether it is about adoption levels or even the price moves that we have seen in various cryptos. What is it that you're looking at for the rest of this year, and what are the plans really that Chainlink has going forward, especially when it comes to central banks across?
I think it's been a historic year for our industry for sure. I think thanks to the Trump administration and their massive push for our industry to have, not only leeway, but to have a lot of corrections done to what was unfairly done to our industry previously, which artificially depressed what our industry was able to do. So I think the Trump administration has done an amazing job getting our industry into a completely new place, which I and many people in our industry are grateful for. From our point of view, the institutional side is where we see a lot of new adoption. We've been working with institutions basically since the start of Chainlink, including Swift and large banks, large asset managers. And in the process of working with them, we've kind of seen the evolution of their thinking and how serious they are about going on chain in production. And what I'm seeing now is that they're going on chain in production live now this year. And the ones that are going live this year are looking to scale it next year. And I see many, many more on track and with approved budgets and approved launch plans to go live and into production next year. So there's a lot of institutional adoption that we're dealing with at Chainlink because we're the leading provider of various critical capabilities to create that next level of tokenization, the equity, commodity, and fund tokenization. And then we're also now seeing more and more interest from governments because the institutional adoption makes the governments pay attention. Government adoption takes the form of government agencies choosing to use blockchains for certain things, like together with Chainlink, the US Commerce Department put data on chain for the first time, various key economic data, and also central banks. So we work with a number of central banks. We've been working with them before 2025. Central banks in Asia, where I would say the most active. And the central bank level of interest in blockchain technology, especially around stable coins and payments, has also massively accelerated. So we're also doing a lot of work there.
All right, so there's lots to expect as we go ahead from this year as well. Thank you so much, Sergey, for joining in. It has been a pleasure with that conversation with you. But with that, that's all the time that we have on Crypto Corner. We'll head for a break, but come back with more news and updates.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Still 40 points lower on the index, 60 points off the lows, but still, of course, 150 off the highs of the day as well. So very choppy moves we are seeing on the index in the last 60 minutes or so. Aditya Agarwala from Invest for Edu joins in for a quick chart check. Aditya, good morning. Thank you for joining in. You know, at one point we were close to 24,850 just a few minutes earlier. Now we are below 24,700. What do these distorted charts look like for the index? Now you still continue to remain in the range, and what are your stock calls for the morning?
Good morning, Hormuz. Thanks for having the show. It's a complete flat market, I would say, and a range-bound move as well. As you look at the VIX as well, it tells you that markets are absolutely flat and in a range, and that holds true for both the Nifty and the Bank Nifty. After a bit of a correction, it's more of a consolidation on the Bank Nifty that we're witnessing on, and similar kind of a move on Nifty as well. On the upside, clearly, as you mentioned, we were somewhere around 24,800, 850 on the upside. And from there, we again clawed back to levels of 24,600. So my sense is till the time we don't take out 24,800 decisively on the upside in trade today in the second half of the session, markets will remain in this range almost. I won't read too much into it. I don't think so. You will see a massive correction as well on the downside. 24,600 should hold for the day. And fresh longs can be taken if market takes out 24,750, 800 on the upside for another 100, 150 point rally on the Nifty. Bank Nifty somehow continues to drag. That is where the real pain lies. And once Bank Nifty starts to trade above 54,400, that is when you will see a real short covering rally. Till the time almost we see a trade above 54,400 on the Bank Nifty, you will not see any real move on the Bank Nifty, and that is where the real drag is. So my sense is traders should avoid trading the indices as of now, both the Nifty and the Bank Nifty, because both look little choppy and in a range. Only on Nifty, if it manages to cross levels of 24,750, 800, then a fresh long can be initiated with a stop loss at 24,650 and look for a target of 24,900 to about 25,000 on the upside. Then there are sector-specific activities which are going on. That I think one should clearly focus on those areas almost.
Okay. What are some of these individual names that you're looking out for?
Couple of them, Sonal, I've got buy recommendations on. We're clearly seeing a good traction as far as these new age companies are concerned. So Eternal is looking quite interesting on the chart setup. It's a fresh breakout into an all-time high territory. My sense is this up move is likely to continue even from here on. So at current levels, I'll be a buyer for a target of 360 on the upside, place a stop loss at 323 on the downside. So Eternal is the first stock on my radar. The second one is KPIT Technologies. That is also looking quite interesting after a decent bit of a consolidation. Stock is now showing an upside potential from these levels, and a good volume action was also seen in morning trade. So I'll go long on KPIT Technologies at current levels, look for a target of 1350 on the upside, place a stop loss somewhere around 1170 on the downside, Sonal.
Thank you very much for that. We will slip into a very short break. We'll come back and discuss market fundamentals. Ashi Anand from IEME Capital will join in next. Welcome back. The Nifty is hovering around 24,700 after that volatility that we saw about 1 hour back. Things seem to have stabilized over the last 30 minutes, just mildly lower on the benchmark indices. Ashi Anand from IME Capital is now joining in to talk about the markets, individual stocks and themes that he likes right now. Ashish, the big story that's dominating headlines is the GST reform. So based on what we've seen and heard so far, have you made any changes to your portfolio?
Yeah, hi. Firstly, thanks for having me on the show. The GST reform is actually quite interesting, and it does kind of change, I think, the sectoral and market outlooks a bit, because it's not just the GST reform. You have to look at the GST reform in conjunction with the fact that there was a decent kind of stimulus coming in terms of income tax cuts earlier in the year. And you've also had kind of a cut in interest rates. Now, a combination of these three together does actually lay the foundation for a consumption recovery. This is consumption as a sector has actually been kind of fairly muted over the past couple of years. You first had continued weakness in rural. This was followed by kind of weakness kind of creeping into urban consumption as well. Now, with all three of these kind of coming together, I think we are fairly well poised for a recovery in consumption as we go into the second half of this year. And given the fact that a number of these companies have been actually laggards in terms of stock performances, there is kind of a space for consumption to actually start to participate and also kind of be a driver of the markets going forward. So consumption is a space that we have been increasing exposures to a bit. But it is important to just kind of understand that it's not that valuations of the high quality franchises are still very attractive. Room for substantial valuation re-rating is fairly limited. So you are going to be dependent on earnings growth. And we really have to see how much these various measures kind of come together to kind of propel consumption as we go into the second half of this year.
So when you're talking about how much it really reflects into consumption, Ashi, some of the sectors or specific stocks that you think will benefit the most if these cuts are actually passed along?
Yeah, sure. So, firstly, at one level, I think we've been very positive on pure play digital companies. It is important to understand that a lot of these are actually direct beneficiaries of kind of consumption growth. A lot of our digital companies in our portfolio do actually benefit from this. That said, in terms of other sectors, you clearly have kind of consumer durables being a fairly large kind of a winner here, because these are larger ticket kind of consumption items, and consumer durables along with auto clearly are big beneficiaries. Auto is a space that we are not as bullish on from a longer term perspective, primarily because we aren't very clear in terms of the EV transition risk, how that will actually impact longer term market shares and profitability in the sector, and which is why it's a space we've been quite cautious about. But I think consumer durables is clearly quite interesting. FMCG is another space that certain segments have actually clearly benefiting from that 18% to 5% reduction. And that again is a space that could you are likely to kind of see a bounce back of volume growth, because this will kind of reduce prices for the consumer. Largely consumer-oriented insurance on the margin will be slightly positive. But I think it's really the whole auto, consumer durable, and kind of the FMCG pack that we're really focusing on in terms of the GST reforms.
You know, Ashi, call me being the devil's advocate here, but 2 points that you mentioned, we were not so bullish on the auto space because of the uncertainties around the EV transition, but the companies are still making or increasing their EV exposure as a part of their portfolio. Or something on those lines, and the EV adoption is increasing in India in comparison to a lot of other countries. That's point one. And point two being the fact that, yeah, daily essentials, yes, the GST rate cuts could act as a benefit, but for consumer durable names, we are entering into a seasonally weak period as well. So does a GST rate cut necessarily translate into increased demand? Because that is something that you would want to see on the ground first as well, right?
No, sure, absolutely. So the two separate questions, let me just take both of them. Firstly, just coming to the GST kind of cut, right? And in terms of the impact on the ground on consumer durables. Now, one of the big durable segments has actually been kind of air conditioners and refrigerators, etc. These depend on a strong summer season, and this summer season has been weak. There is kind of channel inventory sitting on the ground. So I don't think GST cuts on its own is going to be enough to lead to an immediate recovery in the sector. But really, when you are looking at kind of companies, you aren't necessarily just looking at this quarter, the next quarter, but more in terms of the short to medium term kind of growth dynamics. And if you are kind of looking at the GST cuts in consumer durables, this has kind of clearly reduced the kind of price. The entry price for an AC would have reduced by substantially. The same for TV, for fridge, etc. As kind of seasonal factors play out and demand starts to come back, this is clearly a big positive. And the moment you take the combination of GST cuts, interest rate cuts, and kind of money in hands of consumers, especially at the lower segments because of the income tax cuts, it lays a strong foundation for a growth recovery. I mentioned a second half because there currently are some kind of headwinds, and which is why the growth recovery may not be imminent. With regards to kind of auto right now, this is something you kind of have to get a bit segment and kind of company specific. I think the segment we are the most concerned about is really two-wheelers. Now out here, if you're just looking at what's happening in the market from a slightly longer term perspective, over the past few decades, it's been a two-player market.
Okay. All right, Ashi. Thank you so much for joining in today and giving us all those details and the fundamental outlook on the markets as well. With that, we'll slip into a short break. We'll get you excerpts of Rahul Joshi's interview with Union Minister Piyush Goyal. Stay tuned for that conversation. Welcome back. Let's get to a Network 18 exclusive. Commerce Minister Piyush Goyal says the India-United States relationship is the most consequential. He also said India is a patient country, believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration. He also said GST reforms are transformational for the economy and the industry has committed to pass the GST cuts to consumers. Listen in.
When the housewife goes out into the market, almost every product of daily use, all food products, all processed goods, foods, all material that is required for her kitchen, foodstuffs, utensils, everything will see a transformational reduction in prices. And industry has committed to us that they will make sure that the full benefit is net of input taxes is passed on to the consumers. So consumers are in for significant gain, and I'm very, very confident. Industry has, across the country, every sector, assured the government that they will be with the government. They recognize lower taxes, lower prices will give buoyancy to demand. And higher demand leads to higher taxes, and ultimately higher demand also promotes more investment because the demand leads to more manufacturing in India. So it's a virtuous cycle of growth, and the multiplier impact is what will give India a big boost.
Okay. Let us also talk a little bit about the revenue implication or the revenue impact that this might have. You know, by one estimate, about 48,000 crore would be the revenue impact. Do you see that, you know, we will be able to take care of this, and, you know, any kind of fiscal slip that you see, you know, going forward?
Rahulji, we are currently collecting nearly 2 lakh crores every month. And with this boost in demand, the revenue will probably go up rather than being a revenue
So
loss.
you're expecting some amount of revenue buoyancy as a result of this?
So it is always so. And I think every theory,
right,
economic theory suggests that.
So will it give some comfort to the markets as well? They have been slightly soft over the last few quarters. Do you think it will also give market men a reason to celebrate because bold reforms are on the way, that this government is not hesitant to take risks?
I think very clearly the market recognizes that we are in safe hands. I am very confident that this and the impact of this starting on the first day of Navratri on 22nd September will give a big leg up to the economy, to GDP growth, will ensure that Indian investments continue to power on, will attract more people to set up base, because ultimately when there's demand, there will be interest in investment to meet that demand. And a growing demand means growing jobs, growing number of people required in the supply chain. More investments will lead to jobs in the manufacturing side. Services is already growing in a double-digit level. You saw the numbers, the services PMI is at an all-time high almost. So I think all in all, India is poised for a very bright future.
You know, till about July 6th or 7th, things seem to be going fine with in our negotiations with the US. Then in a matter of weeks, you know, we had a tariff of 25%, then another 25% on top of that. What went wrong in these few weeks?
Well, I think the US-India relationship is one of the most consequential relationships on the globe today. We are two very large democracies. We believe in the rule of law. We are allies and friends for long. We have had certain blips, like we had the sanctions post the nuclear tests in 1998.
Yes.
I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come.
And how soon do you expect things to resolve?
It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship where we contribute to each other's economies in different dimensions and will continue to do so.
It's comforting to hear these words from you. And we also picked up that you said somewhere that things could happen as soon as November. Is that a correct?
Well, if you recall, when Prime Minister Modi and Honorable President Donald Trump met in February, they had tasked the two teams to conclude the first tranche of a bilateral trade agreement by fall of 25, which is about November 2025. And I'm sure we will continue to be engaged to try and find solutions to reach that outcome. If at all it's give and take a few days, a few weeks, a few months, in a nation's history, such small periods will not define long-term objectives and goals.
I think what surprised and even shocked some people was the erratic and incendiary language that was used by, you know, some of the officials of the Trump administration, you know, calling it Modi's war or, you know, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
The exclusive conversation there with Piyush Goyal. Just before we take that break, just pull up the Nifty IT index again, down another, now closing in on that 2% fall after a brief recovery that we had seen. So that recovery is also getting sold into currently. So at the low, not at the lowest point of the day, but nearing the day's low is the Nifty IT index, almost a quarter to 1 3/4% lower now, Rima.
You know, there's a company called Endava. It's a mid-sized company. It's headquartered in UK, and it is a competitor to the Indian IT companies. And they came out with the numbers yesterday, disappointing set of numbers, and the stock was down 30%. So there is a rub-off impact on account of Endava too. But get into a break. On the other side, our conversation with the Métis Secretary. Stay tuned. Welcome back. Let's get you more important opinions. Secretary of the Ministry of Electronics and Information Technology, Métis, tells CNBC-TV18 GST is a forward-looking reform. Downstream players will stand to benefit from the GST cut. He spoke to our colleague Ashmit Kumar on GST, semiconductors, US tariffs, a lot more. Listen in.
There are 2 or 3 things which are important here. The first and most important thing from an industry perspective is that a rate simplification in GST and reducing the number of effective rates is a huge ease of doing business improvement. It ensures that problems of classification, other issues that companies typically have are reduced considerably. So I think from that perspective, this is a very forward-looking, much-needed reform. And I think it's a very significant reform. Now, it also so happens that when you've eliminated the 28% rate and you've brought it down substantially by 10% to just 18%, a large number of goods, particularly in the electronics sector, fall within that category. In addition, a large number of white goods and other goods of mass consumption which use various electronics parts as inputs also fall within that categorization. It should, as you pointed out, coming as it does just on the eve of the festive season, certainly help consumption and lift the spirits in terms of consumption. And it plays on the idea that India is a big market and Indian consumption itself can contribute significantly to the growth momentum in India. So, and for the electronic sector, that is important as overall volumes of consumption increase, as more gets consumed, and downstream all the players in the industry clearly will get benefited. So I think that's a big plus.
On a slightly different tangent, while in keeping with the semicon, the Prime Minister made a recent visit to Japan, then subsequently he went on to China. Commentators say there's now a thaw in relationships between Delhi and Beijing. Can there now, perhaps, is there a case to be made for a potential collaboration, perhaps more cooperation between the two countries when it comes to focus areas like semiconductors, like electronics?
See, I think we need to be clear. China's primary strengths is in the electronic space. Sure. They, of course, have some strengths in semiconductors and they're working on it, and clearly those are efforts they're making. But semiconductor-related technology we can get from other locations. China's strength is in manufacturing of electronics, and that is something which we would like to see how at least some of that is something which comes into India, because it's not just about Chinese companies investing in India to make for India or make in India for the world, but it's also about all other companies, whether it's an American company, a Taiwanese company, a Korean company, and a European company, which currently manufactures in China, wanting to look at an alternate location, and that alternate location hopefully should continue to be India. And for that, you still need to collaborate with China to make sure that the shift happens.
We take a leave on this edition of Trading Hour. From Rima, Sonal and me, thank you for watching. We leave you with the Nifty just 30 points away from the lows of the day. The IT index continues to maintain its losses. Halftime report on the other side.
Stocks trade ranged on Dalal Street. The Sensex and the Nifty trade flat with a negative bias. Auto and healthcare stocks gain, while realty, FMCG and IT, all of them drag. The mid-caps fall in line.
HDFC Life Insurance, ICICI Prudential Life Insurance and SBI Life Insurance assess the impact of GST revision on their embedded value to be less than analysts had estimated, boosting their stock prices. The street also eyes a rise in penetration.
Commerce Minister Piyush Goyal says the India-US relationship is the most consequential, adds that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with Trump administration. He adds that India will make every effort to come to a greater understanding within the framework of international trading laws.
Axis Bank's Neelkanth Mishra says that after having brought down the cost of capital for enterprises through fiscal discipline, the need is now to improve the ease of doing business, a point also highlighted by business leaders on the GST reform. Hello, good afternoon. You've tuned into Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well. Mangalam, good afternoon. And surely a day where we started in the green, then we saw a bit of a correction. Now coming back from the day's lowest point, but just around that level, right? Not much of a recovery. Even the broader end of the market is not doing. And the bank also is down 0.5% right now.
Yeah, but it's a very interesting scenario for the market, where fundamentally there have been inundated with good news after good news, but every rally is being sold into. This morning as well, we saw the GIFT Nifty, which was up around 80 points. We opened higher, but that was immediately sold into. The only solace is the fact that we are seeing some support at lower levels. So, barring, say, the auto stocks, which continue their rally from yesterday, or something like the healthcare stocks, which are doing well in today's trading session, we've seen some bit of profit taking, understandably, on the consumer names. So the FMCG index comes up for you. And IT stocks, they've been under pressure despite strong tailwinds coming in from the US markets overnight as well. The question is where we go from here, and that is something that we'll most definitely watch out for. The other part that I'm looking out in particular for the market, two data points. One is the advanced decline chart. That comes up for you on the screen. They've been, flitting between red and green on the top for most part of the day. And right now we have 1,500 stocks which are declining for just about 1,200 stocks which are advancing. So there's a bit of a tug of war out there. And the second thing that I'm looking at is the India VIX. As the market's moving lower, the India VIX is moving higher. So that's telling you that an element of call writing is fairly active in market today. So whether we see some resistance at important technical levels closer to 24,700 or not is something I'll be monitoring very, very closely.
Absolutely, Mangalam. Key to watch out for. But I just want to highlight one stock, that is Network Technologies, right? Last 5-6 days of gains continuously coming in there. And, it's up more than 20% in just these 6 days. There was an announcement which came in terms of an order. And when seeing that buzz in the stock continue even today as well, 6% up as of now. But which are these other stocks that are moving in today's trading session? Let's go across to Vivek for that. Good afternoon, Vivek.
Well, good afternoon. What a seesaw session we've seen, highlighting and mirroring the kind of move that we saw yesterday as well. Quite a few stocks continue to see up move, and top amongst them is the key GST cut beneficiary, which is the entire auto pack. So if you look at the auto names, have a look at M&M, Eicher Motors, Maruti, Tata Motors, cooled off a little bit, but most of the auto stocks continue to see the move higher. M&M, one of the top beneficiaries, that stock continues to see a 2% up move today. The other stock on the radar is GMDC, or Gujarat Mining. Now, this particular name on very strong volumes today, up almost 11% at one point of time. Again, almost 11% higher, the top gainer as far as the NSE 500 index is concerned. More clarity required in terms of rare earth mining and the opportunity for this name, but clearly the street likes this particular name. BSE Limited, again, 4% higher, very strong up move over here. Yesterday was the first session where in this particular week you saw the Thursday expiry for BSE. Options volumes were very strong yesterday, and that has aided the kind of recovery that BSE has seen today. And SKF India, not a stock we discuss too often within the bearing space. This stock in the broader end of the market is one of the top gainers today. On the other hand, quite a few laggards as well. You cannot look past the IT pack. News flow coming in, but despite that, you're actually seeing quite a bit of selling pressure, and volumes here are quite high. Persistence, one of the top laggards in the session today. The other set of stocks that continues to witness selling pressure is actually the realty pack. Most of the realty names under pressure today. Look at Godrej Properties, Prestige, Oberoi, all of them down over 2.5%. Sri Digvijay Cement, you did see the news flow coming in yesterday, one from the broad end of the markets. P promoters are planning to exit, selling to another set of investors. That stock down 4%. And Varun Beverages, for the second straight session, continues to witness selling pressure today.
Take that point, Vivek. Thanks a lot for that. In fact, we'll take off from where you spoke about itself. Varun Beverages, the stock currently at the low point of trade over the last few trading sessions. It has been at the lower end of the trading range, and that perhaps could be on account of fears that the street has that there could be an increase in the overall tax incidence for carbonated beverages. 28% plus cess goes into 40% minus cess. So let's talk about that itself. We have an exclusive conversation right now lined up with Ravikant Jaipuria, who's the chairman of Varun Beverages, joins us on the phone line to discuss these very factors itself. The first point that we'll discuss with him, the impact of GST rate cut on carbonated beverages. In fact, the GST rate increase for carbonated beverages. Then the second thing we'll see is whether they benefit from the lower rate on water and non-carbonated drinks, which include the likes of fruit juices, etc. And the third, most important, because of the products that they sell, festive season demand outlook and competitive activity right now in the market itself. Thanks a lot, Mr. Jaipuria, for joining in. The street seems to be a little feared about overall increase in tax incidence. So I just wanted your thoughts on one, 28% plus cess versus 40% GST minus cess. How does that change the overall tax incidence for you on the carbonated beverages side? And on the non-carbonated beverages side, there has been a reduction in water and reduction in taxes for fruit juices, etc. So net-net, would this be a positive for you, no change, or a negative? In all these cases, if you could put a number.
Well, I think it's been a very positive budget for us. I mean, we would have hoped if we could have got even better on CSD. But if you look at it, it used to be 40%, it was 28% plus 12%. And government has again put it at 40%. So there's no change in the soft drink, which is CSD market. But we have got huge benefits on water, which has come down from 18% to 5%. And in our juice and value-added dairy, which has come down from 12 to 5%. And this is about close to 30% of our volume. So on 30% of our volumes, the GST has come down, and which we are going to pass to the consumers, and we feel it is going to fill up the volumes, and this will make us look at how we are going to expand our capacities and take it forward. So I think it's a very positive budget. We would have hoped that it could be even more positive by getting some reduction on CSD, but we are very happy with the budget overall.
Okay, very happy with this rate cuts, Mr. Jaipuria. And 30% of your volumes is where you're going to be seeing that additional benefit, right, coming in. Good afternoon, Mr. Jaipuria. What could that additional benefit be, incremental, anything for FY26 that you could highlight, whether in terms of value or overall in terms of revenue that one could expect to see?
Well, I think revenue, I don't think will change because of this, except with the volumes growing, I think the revenue will automatically change. But I think the capacities will get used, and with 30% of our mix, which is going to be, we are going to pass the consumers with the benefits. I think it will be very positive for the whole industry.
Right, it will be positive for the whole industry. So 70% is, carbonated, 30% is non-carbonated, which is fruit juices and water, on which you get benefit. The other 70%, there has been no change. So net-net, it should be a positive as per your understanding. Could you give us a sense on the overall demand, Mr. Jaipuria? The second quarter for you, which is basically second quarter calendar 2025, saw India volumes decline by 7% due to unseasonal rains. How has the current quarter panned out? And is there any outlook that you can give to us for the festive season, given these rate cuts?
Well, I think this effect will only come by the end of this quarter practically. But overall, this has been an unprecedented year where, the rains, the whole summer has been rained out. And our industry is very seasonal to the point of very relevant to rains and weather. So, but even after looking at that, we've not really had any negative impact, which is very positive. And I think with the little change in the weather, I think we only see upside going. So we don't see any negativity, and I think going forward we see reasonable growth coming back, and we are looking at further investing and enhancing our production capability.
All right, just a two-part question, Mr. Jaipuria. One, on the full year, what kind of volume guidance can you give us for the India business? And secondly, you are saying that you will take the incremental savings from GST and put it back into CapEx. What would that number be according to you?
Well, you see, the question is, if you look at it, the first quarter, we grew at close to 15% when the weather was normal. The next second and third quarter, both have been rained out practically. Except September, we still don't know. But otherwise, even with the rained out, we are still looking at flattish numbers, which are very good for the industry after having such heavy rains. And I think as soon as the rains reduce, we see the numbers coming back to normal and double-digit growth coming back.
Right, Mr. Jaipuria. Also, just want to understand, right, in terms of competition. Now, Campa is claiming to have more than 10% market share in few regions that we are highlighting. Now, they are saying, now, what about Coke and Pepsi? Both have responded with lower SKU price points. And what's your outlook now in terms of market share, competitive intensity? How does that shape up for the company? And also in terms of penetration, if you could highlight that now.
See, we are adding penetration every year. We are adding about 8 to 10% more outlets, which is about 400,000 to 500,000 outlets are being added every year. And that's why we are very bullish. And if you look at the industry, there are 13 million FMCG outlets. And we are only reaching to about 4 to 4.5 million outlets. So the scope is so large for everyone, Campa, ourselves, Coke, everyone to grow this industry. And our per caps are still very low in the world. So I think there is no reason to worry with new entrants, and it will only enhance the market. And I think there will be more visi-coolers going in the market, which is chilling equipment, and there will be enough for everyone to grow.
Got it. It will enhance the market, but in the near term, it may impact margins, right? Because of the competitive pricing that we've seen.
It's not impacting our margins. So if you look at even our last quarter results, our margins have not come down. We are quite healthy and very happy with the margins which are going, because our volumes are not coming down, and we have put up large plants which are giving us a lot of capacity utilization is working, and they're giving us margins which are much healthier than with our smaller plants.
So this 28% margins is what you will sustain, right, for the year as well?
Well, 28% was a very high margin, which is, we have never said that. We've always said margins in 20 to 25%. So
okay,
we've never, but we've had very good margins, and if we can continue with these margins and with the growth coming, we'll be very happy.
Got that. Take that point. Thanks a lot, Mr. Jaipuria, for stopping by and giving us an outlook on the overall impact that companies like yours would have because of the GST. So net-net, 70% of your business, which is that of carbonated beverages, has no change in tax. The earlier rate was 28% plus 12% cess. That was 40%. Now that has been subsumed in the new GST, which is 40%. So no change out there. The other 30% that there is, which is water, juices and all the others, on which there has been a reduction from either 12 or 18% down all the way to 5%. And that is something that you believe will be passed on to consumers and be volume positive for you. Thank you so much for that clarity. Take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States, and I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific.
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Welcome back to Halftime Report on CNBC TV18. Now we're going to talk and bring on our fundraise segment, which is a special segment where we're going to be focusing and talking to the partner at 8 Roads Ventures. Now, this is a company which invests in tech side, med tech, healthcare tech, I beg your pardon. And that's what the focus is, right? Because healthcare in India is the focal point. Where are we going to be heading from here? Where is their penetration required? What are the trends that are going on? We're joined by Prem Purva, who is the managing partner at 8 Roads Ventures. Prem, good afternoon. Thank you so much for coming to the studios. And, let's start by talking about this industry where, overall in India, healthcare hasn't had that much of a penetration versus the globe. Now, over the years, how have you seen this change? What is the market that you're seeing for whether health tech, med tech, overall consumer health side? Where are you seeing that moving?
First, thank you for having me, Vinny and Mangalam. I think it's a matter of when and not if that the market expands. Healthcare as a market has expanded close to 7 times in the last 20 years. It's a roughly $250 billion market that is poised to double to $500 billion by 2030. And as you see a few things change, India will catch up to countries like China, which is today a $1 trillion market, and to the US, which is a $5 trillion market. Sooner than later, you're seeing detection of diseases happening earlier, thanks to better diagnostics. Folks both in the cities and outside are totally oriented towards wellness and preventive health. So that helps. You've got insurance penetration going up, affordability is going up, and access is going up, both through, the smartphone where you see 80% penetration, but also through brick and mortar infrastructure on the ground thanks to all our private equity peers investing in hospital chains.
You know, what's interesting is that I track the consumption space, so pardon my ignorance about the numbers on the healthcare space, etc. But I want to know, intuitively, they should be pretty similar in size, right? Because the same consumers who are consuming stuff from the FMCG, D2C players, etc., are the ones who will eventually, you know, at some point require some sort of healthcare. It's a human sort of market, so to say. So why is there this divergence in innovation, investment, and you know, the buzz around healthcare versus the consumer sector? And what is it that investors and PEs, you know, are doing to increase the growth here or accelerate the growth here?
Give it time, Mangalam, is the answer. In terms of...
By give it time, do you mean as we age, we require more healthcare?
I hope not that, and we focus more on wellness then.
And hopefully you get younger as you age. But I think that it is all changing on the ground. You are seeing a bigger push towards consumer and wellness products, which are all driven by brand. You are seeing a real change towards people wanting and preferring organized healthcare and branded healthcare, and we are seeing this change after the pandemic. People want to go to doctors who are known, people want to go to institutions that are well known, and so the importance of the brand, also take drugs that are branded, so the importance of the brand is only accelerating within the healthcare community, which of course has been a mainstay for the consumer business. So we are also seeing that in a lot of our consumer healthcare investments, where you saw a slight dip after the pandemic as people went back to their old ways. But now you're seeing a re-acceleration and a resurgence of interest in both products and services that are branded.
So in terms of investments, if you could throw some numbers, you know, earlier we had the wave of D2C investments, then there was tech investments, there was manufacturing, etc. What proportion of PE in VC investments are now going into healthcare, and what does that mean for the growth here?
Healthcare has become the largest sector for VC and private equity investments in the country. For a person who has been focused on the sector for the last 18 years, it's a joyful moment for me. In the investment quantum has doubled from pre-pandemic levels, so from 3 billion a year to close to 6 billion, and it has stayed steady at that rate, if not moving up. For the first time, exits for venture capital and private equity are keeping pace with realizations. And for anyone, therefore, who is investing into these funds or funds like us investing in these sectors, that's the holy grail where you're able to invest and exit at the same momentum. So it's all creating a virtuous cycle for the sector.
Prem, while these investments have doubled, post pre-pandemic to now you're comparing, I want to understand in terms for the pharma where there's maybe drug making, manufacturing, that's what is going on. We've spoken about this China plus one strategy for the pharma pack as well. Has that now been significantly playing out? Are we, moving towards maybe a scale to achieve or compete with China?
You are seeing a perceptible change on the ground with multinationals wanting to think about a China plus one hedge and diversifying their supply chains, and India is an obvious choice. So the number of RFPs for contract manufacturing organizations and for other manufacturing entities has significantly moved up. One of the things that I find intriguing is that it's very hard or will be harder for India to compete on scale when you think about the size and the scale of China manufacturing versus Indian facilities. But what India has begun to do very well and innovatively is to innovate on process. So for example, one of our partner companies called Enzene makes biologic drugs, but instead of making it in these large several thousand liter reactors, they make it in a continuous fashion, so they're able to shrink the footprint to the size of a room. We have another partner company called Laurus Bio, which is beginning to make products for the FMCG companies globally, but using a biomanufacturing platform. So process technology is really working to the country's advantage.
All that. Quickly, before we let you go, two sectors in the healthcare space that you're betting big on right now. which you believe can become extremely big? Because the last time you joined us, you said protein would be one, and the second would probably be, preventive injury prevention. Now, what are the things that you're betting on?
You have to come to our conference next week called Scale Up Health. We are in our fourth edition of the conference. But if I had to pick two, I would say one is innovation for the world coming out of India. Can India catch up to China and then the US in terms of drug discovery and innovation? And the second is there a version 2.0 for digital health and health tech in the country? Will large language models and AI disrupt the way we think about
What are some of the companies that you're talking to right
primary care? If I told you that, I'd have to kill you, Mangal. That is, as you know, our IP. But and also, can India innovate from services to products when you think about, healthcare IT?
Thank you, Prem. Thank you so much for joining in and giving us an outlook onto that. We'll obviously stay tuned to the outcome of the investors meeting that you do over the next week, and we'll watch out for that as well. That, ladies and gentlemen, was Prem Pavur of 8 Road Ventures investing into the healthcare space. What we'll do is take a short break, come back on the other side. We will have Manisha Gupta joining in with R.S. Sodi, the president of Indian Dairy Association, on the GST cuts. Stay with us. Welcome back. You're watching us here on Halftime Report on CNBC-TV18. Just keep an eye on a couple of these stocks at the bottom of your screen. BSE is definitely one of the top buzzers in today's trading session. A lot of open interest decline has happened out there, which implies that there is a lot of short covering on BSE. The other thing that we're looking at is a remarkable amount of profit taking that we're seeing in all the consumer names. So be it Dabur, which is at the low point of trade, we have Colgate, which is at the low point of trade as well. So all these stocks which had seen a big buzz in anticipation of the GST cuts, and yesterday also post the GST cut announcement saw a bit of a pop, are now seeing some bit of profit taking after the up move that we've seen already. Can't say the same for all the other indices as well. We're currently at the low point of trade. So we have the Nifty, which is at the low point. We have the Midcap index at the low point as well, and the Nifty is actually dragged lower by the Nifty bank itself. So we do have a bunch of stocks which are in focus today. So let's talk about the F&O space right now as we speak. We do have, the frontline indices. They come up for you on the screen, which is the Nifty as well as the Sensex currently at the low point of trade. But if you look at all the other indices as well, the IT index not helping the cause of the Nifty, down about 1.5%. The Nifty bank down about 0.5%. And we are seeing, the FMCG stocks also see some profit taking. The only thing which is carrying its momentum from yesterday is the auto pack. So the Nifty auto index comes up for you on the screen. That's the one which is still in the green, holding on to gains that we saw yesterday and building on a little on that as well. But if you look at the broader markets as well, the number of decliners are a little more than the number of advancers. So as a result of which we have those crisscross lines up for you on the screen, and the India VIX too has moved higher. Important levels to watch out for on the Nifty right now as we are at the low point of trade. We're looking at the Nifty below the 20-day moving average. Yesterday, we went all the way up to the 50-day moving average from where we saw a bit of a sell-off and closed around the 100-day moving average. So on the way up, closing about 24,700 would be extremely crucial, which the call writers believe may not happen. Why do I say that? Because look at the 24,800 call, 40 rupees premium on offer there. So 24,850 thereabouts, there is resistance. 24,700 put has seen some writing, and the 24,700 call has also seen some writing. 24,700 call has a premium of 80 rupees. So 24,780 to 24,850 is where the resistance is. Support comes in closer to 24,600. So that's something that we will watch out for too. In terms of individual stocks, I'm looking at RBL Bank. The RBL Bank stock has been a buzz, but remember it is in FNO ban. So what really happens out here is something we will watch out for. A lot of short positions added in a couple of these IT names that I spoke about earlier. So Persistent Systems, for instance, comes up for you on the screen. We're seeing Prestige Estates, which is a real estate name, seeing some short positions being added on it and some short covering on BSC. So that's about the FNO setup of trade this morning. But we do have Manisha joining us and the promised conversation with RS Sodhi. Manisha.
Thank you so much for that, Mangalam. Yes, we have Mr. R.S. Sodhi, who's President, India Dairy Association, and he joins us on the show. Mr. Sodhi, I have to give it to you because as soon as the GST consultations had started and the date was yet decided, you had already started pitching out on the GST rationalization when it came to dairy, and almost everything that you had presented and asked for, would you say, has been given?
Yeah, thank you, Manisha ji. On behalf of 80 million milk producers of India, we are thankful to Honorable Prime Minister, Finance Minister, and the GST Council, because dairy industry for the last few years have been asking for good rains. But luckily, we got cloud burst as far as dairy is concerned. Very good benefit. And most of our dairy categories got very good reduction in GST, and right from ghee, which is the biggest category and biggest benefit, from 12% to 5%. Ice cream got from 18% to 5%. Cheese got from 12% to 5%. Paneer, zero, from 5 to 0. So overall, if you see the benefit to the dairy industry, total GST deduction will be around 11,400 crore based on the current market size. But we are very sure with this reduction in GST and some products going to zero duty, the unorganized dairy sector will shift to the organized pack category. So we are very confident that total collection of the GST may not reduce.
Okay.
But more people will shift towards, because I'll give you just example of ghee. 12% GST means 42 rupees per kg of ghee. So sorry, not 42, it is around 75 rupees or 80 rupees. So
okay.
What happened, because 600 rupees and 12% this, so 72 rupees. So what has happened, lot of people were doing business, I'm very frank, number 2, without invoicing. And they were investing 2 or 3 rupees for doing this illegal unorganized business. But now with coming GST to only 5%, all of those manufacturers, small manufacturers, will have to get into the GST invoicing
regime. Absolutely. Mr. Sodhi, it's not just about unorganized to organized. Would you say that a lot of analog paneer or mixings and blends, all of that perhaps would also find its way into a more proper regime here?
Yes, definitely, Manisha ji, because till now, unpacked, unbranded paneer had the 0 GST and packed had the 5%. And when you have to sell unpacked, unbranded, you have not to declare anything. So most of the paneer sold loose were adulterated, made out of vegetable oil and the starch and other thing. But now with 0 duty on packed paneer also, so consumer is going to get the branded paneer. So when you brand it, naturally you can't do adulteration. So it will definitely reduce the adulteration in paneer considerably. So it's good for the paneer, it's good for the ghee, it is good for the whole dairy sector. Only 2 small things have been left. which we are again representing to the GST Council. That is the buttermilk and curd, and of course lassi. These three categories had no GST about 1.5 years back. It recently shifted to 5% GST. So we are again requesting that please exempt these three essential categories also, because these are common man product: buttermilk, lassi, and curd.
Mr. Sodhi, going forward now, this is also the festival season, and we haven't heard from anybody in the segment that there is any price rise on milk being expected, anticipated in the near term now. How have you seen the monsoon, the flush season, the procurement availability, etc.? And would you also say that price rise as of now is really not part of the conversation?
Well, Manisha ji, if you talk about price rise in dairy or particularly milk, last 3 years, every year, price increase has been only 2 rupees per liter, which is 3 to 4%, much lower than the food inflation. And we have been getting very good milk production. And when price increase is not much, so demand is also good. And fortunately, farmers' cost of production also did not increase, because feed cost, the feed ingredient cost ruling price is lower than the previous year. And I foresee that in the coming few months also, there's no chance of price increase in any of dairy product. I believe with this reduction in GST, most of the products prices will reduce, and which is good. So demand will definitely grow. So what we expect in the coming year, rather than the price increase, very good volume growth. So that farmers are going to get very good price for their product, and more farmers will shift towards the organized sector of dairy, where transparency is better and efficiencies are better.
Okay, Mr. Sodhi, thank you so much for joining us, because expecting more volume growth is going to be something to watch out for, especially during this festive season, a boost coming in for the industry as well. So thank you so much, Manisha, as well as Mr. Sodhi, for joining us on the show as well. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back and we'll be chatting with Varun Berry, MD at Britannia Industries, and we'll talk about the sweeping GST changes that have come in there. So stay tuned.
Welcome back. 100 points lower for the Nifty. We have the Nifty bank lower by about 300 points as well. The Midcap index is where the pressure is right now. It's building 1,600 stocks in the red for about 1,100 stocks in the green. But let's go across to another big exclusive that we've lined up for you after the big changes that have been announced by the Finance Minister and the GST Council on GST. We have Britannia. The stock did extremely well in yesterday's trading session. Varun Berry, the MD, joins us now. We can see him on the screen. Three major talking points that we have with him. Impact of the GST rate cuts on overall business for him. Outlook on commodity and prices in the second quarter. More importantly, growth in the non-biscuit part, dairy and cheese, due to these cuts coming by as well. Mr. Berry, always a pleasure speaking with you. And I think you and your ilk are having a good day, literally, on account of the treat that the Finance Minister and the GST Council have given you. But for a sector which is as price sensitive as yours, 60% coming in from price point packs at 5 and 10, etc. If you could give us a sense on how much could the incremental volume growth be because of these cuts. And earlier you had spoken about a delta of 6 to 8% between price and volume. How does that narrow in the coming quarters for you?
So I think the volume growths are going to be a lot more than what we've seen in the last, let's say, 3 or 4 months. So what usually happens is that if you take a price increase, that sort of delta becomes much larger in terms of volume. So now, if we are going to increase, let's say, a 10% volume, I would say that volume and revenue growths would be, sort of neck to neck in the coming months.
So does that mean we see higher single-digit volume growth in the coming months because of this, as against the low single digits that we've been seeing over the last 3 to 4 months?
Absolutely, absolutely.
And do they touch double digits as well at some point?
Well, we always are hopeful that it should get to double digits, and I'm sure they will. It's a big initiative, Mangalam, and I do think that this should create the demand scenario that the Honorable Prime Minister has envisaged for the country.
Right, Mr. Very good afternoon. So obviously we're hoping for better volumes coming in for the company going forward. Let's just talk about any disruptions that we should be watching out for, maybe due to the stock that is there at the dealers, anything that we should watch out for in the near term?
Yeah, no, so we'll have to figure it out. See, this has come just a couple of days ago. We are in the process of planning how we take this forward. So if you were to think about it, you've got stocks in the factory, you've got stocks in the warehouses, you've got distributor stocks, then you've got laminates which are there, which are lying in every factory, which are packaging material, etc. So all those we've got to figure out. We usually keep a very tight leash on all our stocks, but we'll have to plan out all of these and figure out how we can get to market as quickly as possible with the increased grammages or with the decreased prices.
The increased grammages and the impact of that we're likely to see immediately, because the second quarter obviously is done with. These changes come into effect from September 22nd. So I suppose the second half of this year is where we should expect higher volume growth?
Yes, absolutely.
By how much?
It will take a little bit of time, Mangalam, to get these out in the market. And we will obviously make sure that we try to do it as quickly as possible. But, the grammage changes usually take a little bit more time than price decreases. So part of the portfolio will be done immediately, and a part of the portfolio might take a month and a half to get it to the consumers.
Right. Ex of GST, if you could give us a sense on the current consumption environment, what the general understanding is that the GST is boosting an already upward moving or improving consumer sentiment. Would you be able to, concur with that? And on the other side, we have these heavy rains, the kind of weather impact that has happened, that is actually putting a bit of a lid on what could have been better growth. How has sentiment been right now? And how much do you think will these cuts boost sentiment at large?
No, so that's a great question, because the sentiment for the year, for this financial year, started off really well. And then came this entire period of heavy rains, etc., which I think is temporary, because a good rainfall also impacts the economy, and I'm sure that as we go forward, it's only going to impact the economy positively. So leaving out the temporary stagnation in the last couple of months due to heavy rainfall, I do think that overall impact is going to be very, very positive from a consumption standpoint.
Okay, positive impact from the consumption standpoint. Mr. Berry, could you give us an indication just in terms of overall the commodity pricing? How has that been in Q2 as well? Any significant changes, or what are we watching out there?
It's within a band. It's not like what we've seen in the last 2 or 3 years where there was significant inflation. We are now operating within a band, which is good. It's always good to operate, between 3 to 5% kind of a band, because that's manageable for most companies. And I do think that that's going to continue. I don't think I see any major inflation coming, in our way as we move forward.
Right, but you've taken some of the price hikes already. Now volume improvements will happen. The GST rate rationalization has happened. Raw materials are in a bit of a band. First quarter, your gross margins were lower by 300 basis points. Have we seen the worst of them? Second quarter onwards, do we see improvement in gross margins and subsequently EBITDA margins?
Mangalam, it's very early to comment on that. I do think that it's only going to be positive. But I do think that, passing on everything that we have to the consumer and taking in mind the inverted, taxes that we have, plus some of the state benefits that, will become much lower in our factories, the state GST benefits that we have. So keeping all that in mind, we'll have to do our numbers and then give you what the overall impact is going to be. But yes, I think it's going to be a very positive impact on consumption and probably a positive impact on the trajectory of most FMCG companies.
Right, sir. Also, just in terms of, let's talk about dairy and cheese as well, right? Why leave them out? Because they have seen a reduction coming in. So overall, what are we expecting and what are you expecting in terms of synergies here because of this cut? Anything in terms of increase, and how will this price cut also be passed on? Will it be similar that grammage increase or price cuts?
Well, in dairy, it's mostly going to be price changes, straight price changes. And that can be done very, very quickly. And I do think that that's also going to have a very positive impact because, cheese is not such a well penetrated category. It's still less than 30% penetration. And the consumption is also not as often as other products are. And a price correction will certainly, give it a boost from a consumption standpoint, and that's what we are hoping for.
All right, so dairy does well, which was anyway doing well for you on a very small base. You have had the capex, etc., out there as well. In terms of the distribution, you had in the first quarter said that you are looking at internal restructuring of your distribution, and as a result of which there were some market share losses. Has that ironed out right now? How is the second quarter and the subsequent quarters looking when it comes to that?
No, we didn't see any market share losses, but yes, we are in the process of, getting to our route to market 2.0, which is, making sure that we create more bandwidth in our sales system to be able to handle more categories and more SKUs. And that's going really well. We are partnering with Bain on that, and we are about midway. And I think by the end of the year, we should have completed that entire restructuring on distribution.
Right. Market share losses, I meant in particular in the eastern region and not at the overall level because of this internal distribution. But, since we have you with us, you're a champion for the industry. You speak for the industry as well. The government has given an income tax rate cut in the budget. Thereafter, the RBI has followed it up with a lot of interest rate cuts as well that have come by. Now there is this GST rationalization. Despite that, even if you expect all the other FMCG companies' commentaries post this GST, they believe that the increase in volumes could not be more than, say, 3 to 5%, or in some cases, about 600 basis points. What else does the industry have to do, or what else do others have to do for the industry to get back to its glory days?
I think we are on our path to get back to the glory days. The government and the Honorable Prime Minister has done exactly what was necessary to give this industry the boost. And I'm 100% sure that in the next 6 months, we are going to see the fruit of all that's been done, in the last 6 to 8 months, and especially this GST change. I think it's a big initiative, and it's going to give us big results.
Mr. Bede, just a quick one in terms of, are there any challenges that you're facing, anything more that you require from the government? And does this, 5% GST and all those fillip that are given by the government right now give you a level playing field on the unorganized player competition side as well?
Well, I would say the only other thing that is required at this point in time, I think, is the entire inverted tax that we have, the input taxes. Obviously, some of the input taxes have been rationalized as well. We still haven't done our numbers. If there's a negative impact of that, if that can be looked at, would be one. Second, we've made big investments in our plants, right? We've been investing in a lot of states, and the states have been really kind to give us GST incentives. Now, with the GST rate going to 5% and the state GST now getting to 2.5%, we would request the state governments to give us a longer time to utilize the incentives that have been given to us, because we will not be able to consume them in the time that has been given at the higher 18% rate. So those are the things, those are the two things that we would request the government to look at. Otherwise, I think we are in a great place.
Got that. Wonderful. Varun, thank you so much for joining in and giving us your outlook on business, the impact that it would have on consumption because of the GST rate rationalization, and some of the queries that you had with regards to inverted duty structure as well. What I'll do is actually take the liberty to invite you once again at 4:30 today, if at all you have the time, because we are having a mega CNBC TV18 GST town hall where we are speaking with the GST officials, the CBIC chairperson, and all queries like, you've just put would be put forth to them as well. In case you can't join us, we'll obviously take this query for them as well. Take a short break. On the other side, we will get you more on the markets and stock-specific action. Stay with us.
Welcome back to Halftime Report on CNBC-TV18. As of now, the market is trading at the day's lowest point. 24,600 is just managing to hold on to that. Sensex is down almost 329 points as well. And even the broader end of the market is trading at the day's lowest point. Bank down 0.6%, like you can see at the top of the screens as well. But with that, we're going to wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, to Business Lunch.
Markets are back to the lowest point of the day with the Sensex and the Nifty trading with a negative bias. Auto and healthcare stocks gain while realty, FMCG and IT are the big drags. The midcaps are falling in line with the benchmarks.
HDFC Life Insurance, ICICI Sept Prudential Life Insurance and SBI Life assessed the impact of GST revision on their embedded value to be less than analysts had estimated, boosting their stock prices. The street also eyes a rise in penetration.
Commerce Minister Piyush Goyal says that the India-US relationship is the most consequential, adds that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration. He adds that India will make every effort to come to a greater understanding within the framework of the international trading laws.
Axis Bank's Neelkant Mishra says after having brought down the cost of capital for enterprise through fiscal discipline, the need is now to improve ease of doing business, a point also highlighted by business leaders on the GST reform.
The last 150 minutes of what has been an action-packed week. You're watching Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormus Fatakia. With me, as always, is Vamakshi Dhoria. The only difference being today she's birthday girl, Vamakshi Dhoria. Vamakshi, good afternoon. A very happy birthday to you. And well, the markets are back to the lowest point of the day. Some extremely choppy moves seen since 11 a.m. and the market does not seem to have recovered from that.
Well, absolutely. Thank you so much, first of all, Hormas, for that. You know, I would have hoped the markets would probably celebrate with me, but clearly that's not the case. The Nifty is down almost 91 points to 24,640 odd levels is where the Nifty is trading at. You know, the Bank Nifty is actually pulling it lower. Nifty Bank is down almost 0.6%. The broader end of the market too is not doing too well. The Midcap index though is trading in the red, but it is you know, slightly better off as compared to the benchmark index. It's down 0.3%. The advanced decline ratio largely in favor of the declines. Now, you know, sectorally speaking, you know, most of the sectors are in the red, barring Nifty Auto. Nifty Auto is up almost 1%, and that is being led by Ashok Leyland as well as M&M. Both of these counters, Ashok Leyland and M&M, are up in trade. The auto index, though, has done very well this week. In fact, if I'm not wrong, it's the best. It's the top sectoral gainer this week. But on the flip side, you know, what's not doing well is realty. We are also seeing some profit booking come in FMCG because that too is down almost 2%. And IT names as well not doing too well, Hormas. You know, there was, you know, this sort of misinformation spread about, you know, tariffs on the IT sector by US President Donald Trump. And, you know, we did reach out to Bloomberg as well. Some clarifications. We did see some uptick, but nevertheless, the IT index continues to remain under pressure.
Still not managing to recover from that, and Bloomberg did confirm to us that they have not reported any such story with regards to the Trump administration's plans to impose tariffs on the IT sector. But once the index fell, there was a brief recovery, but then that recovery has also been very swiftly sold into, still 600 points lower on the Nifty IT index, be it large cap IT, mid cap IT, all of them taking a bit of a knock in today's session, be it Infosys, TCS, Persistent, Coforge, most of them having the US market as their biggest geography in terms of revenue as well. So understandably so, that even a misinformation like that has created significant damage and has sowed the seeds of uncertainty. More importantly, that even if this had to happen in a hypothetical scenario, what might just end up happening to the IT index. The other one, of course, is some profit booking seen in the FMCG space. The FMCG index is down 1,000 points. Of course, the index had run up significantly after those potential GST announcements that were made, than 1.75% lower for the FMCG index as well. So these two indices being the big drags on the Nifty today, Vamakshi.
Absolutely, Hormas. Now, you know, let's also take a look at commentary from experts and corporates. You know, they continue to trickle in post the GST reform. In fact, earlier today, we spoke to Nilkant Mishra of Axis Capital on the possible impact of GST on consumption. Take a listen.
I was expecting that by November, December, some credit growth pickup will start happening, and that is absolutely critical for the economy to revive. I think what the GST changes do, while the primary objective, I think, is reform. It was not supposed to be a catalyst primarily, but it ends up being one. So I'm quite confident that the measures taken so far are sufficient to lead to a growth revival. Beyond the 8-10% boost that comes from reduction in prices and growth in volume, I don't think there is anything more to be read from what is happening. So fundamentally, I think global exposure is something that I would stay clear of. And the big change in the next 12 months is going to be a revival in credit growth, revival in discretionary demand, and revival in construction, etc.
Now, Nilkant Mishra also believes that the new GST regime will improve the ease of doing business, something that was also mirrored by Mahindra Group's Anish Shah. Listen into what they had to say.
I think that the need is to improve ease of doing business. So all that, you know, Team Lee's RegTech keeps putting out 65,000 regulations, so many filings, so many with criminal penalty. Yes. I think all of those need to be brought down. All the challengers will come from the small and mid caps, and so the smaller firms, which will make use of this environment. To help them grow, I think deregulation has to be among the most important things. That seems to be the government priority as well. How quickly the state and the central governments can resolve that becomes very important. I also think that, and here I'm being more prescriptive, that I think simplification of government structure itself is required.
The overall impact on the economy, and to me that is the biggest factor in this change. It is a very dramatic one. It ushers in a new era of simplification and possibly a new era of ease of doing business as well. It will have a very significant impact on consumption, and this is something that should in some ways create that momentum that we were looking for in the economy. A lot of the fundamentals have been in place, but I think this is a very significant move that will create that momentum and propel India to an 8 to 10% growth rate overall.
In fact, let's also listen in to what the managements of Titan, V-Mart and Bata had to tell us on the same.
I believe this is a great timing of this move. It sends the right signals, and it will genuinely actually increase the money in the hands of the customer. Therefore, discretionary spends will go up. Now, how well we are able to leverage it for jewelry or for Tanishq or Zoya depends on how imaginative we are with our plans and how we are able to attract the customer.
Right. 20% growth in this festival period compared to last festival, yeah. I really believe that, better acceptability of better fashion and better product is something that we want to drive, and that will come, and price shouldn't be a barrier. But yes, largely our consumers are those consumers who do not have that kind of money to spend. So we also want to keep an eye on their pocket.
Another important segment where GST rates have been rationalized is the footwear segment, where of course the price point above 2,500 rupees is still 18%, but the threshold for the 5% rate has now been raised to 2,500 rupees. Now, we earlier spoke to Gunjan Shah, who's the MD and CEO of Bata, to understand how these new reforms affect their company and consumer demand as well. Listen in.
We do expect this to have a significant impact on the momentum, which had obviously got negatively impacted when it had moved from 5 to 12. So I think this reduction is very, very welcome. So we are looking for obviously a significant delta driven by volumes. We will have to see how this pans out over a period of time, but I think the festive season and this is timed perfectly well for a significant jump ahead.
Well, the management of Chalet Hotels also believes that the GST cuts will give an impetus to consumption. However, they believe that they do have a few recommendations for the government. Take a listen.
This will definitely spur growth, give an impetus to the Indian economy, and we believe consumption is going to increase multifold from here onwards. For Chalet itself, as you rightly pointed out, we do not get either negatively or positively impacted. It's a welcome move that we move to 5% for the lower end of the market. ITC is, I believe, a miss, an anomaly that still needs to be corrected. My three recommendations are get back the ITC for hotels that are in the slab of 5% GST. Two, increase the 7,500 limit to 12,000 rupees limit. And then, because we don't want to go on big, talking about it every year, I think the cutoff limit of room rates should be linked to CPI, and therefore an annual adjustment can happen automatically without needing a GST council meet, because this can then be directly linked to that.
Take a short break here on Business Lunch. More news and updates on the other side. Stay tuned.
Welcome back. You're watching Business Lunch on CNBC-TV18. Now on to a Network 18 exclusive. As relations between India and China show signs of thawing, Commerce Minister Piyush Goyal says that it was only natural for both countries to reset ties, especially after the resolution of the Galwan issue. Listen in.
Prime Minister Modi in Japan said that, China and India have to come together for a new global economic order. Can we trust China?
Well, I think we've always had good relations over many years with China. Prime Minister Modi has visited China earlier. President Xi Jinping has come to India. Unfortunately, the incidents post Galwan had brought a little bit of ice to the relationship and created a hiatus. Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties, take them to the pre-Galwan level. And I think attending an SCO summit where many countries were all getting together had a multilateral dimension also, and a dimension of a whole grouping, because SCO is a pretty large group, just like many other groups in the world. NATO is a very large group, the OECD countries is a large group, SCO is a large group. And Prime Minister Modi attending the SCO there has signaled that we have a thaw in the to get back in the frost, get back into better relationship.
Now, India is looking to secure future supply chains of critical minerals as it looks to expand trade with South America. Abhimanyu is here with more details on that.
As part of its trade expansion strategy, India is in talks with Chile and Peru for FTAs to secure supply chains of critical minerals. For the first time, a separate chapter on critical minerals is being discussed between India, Peru and Chile as far as FTAs are concerned. The second round of negotiations with Chile had taken place last week, and the next round of negotiations is expected to take place in October. Now, moving ahead, as the use of critical minerals increases in the Indian economy, India is looking to secure supply chains for critical minerals. India imports gold from Peru and minerals like lithium, copper and molybdenum from Chile. Also, the current per capita consumption of copper in India is nearly half than that of developed countries. So it's expected to rise as the pace of growth increases in India. India is also trying to secure supply chains, whereas both these countries are trying to diversify their trade destinations to prevent a single or a few countries from stockpiling their mineral deposits. So clearly, it's being touted as a win-win situation for both the sides, even as negotiations are going on, and India is seeking preferential rights in exploration as well as enduring rates for lithium, molybdenum and copper as part of the FTA talks.
Thank you so much, Abhimanyu, for bringing us that very important piece of information. But take a short break for now. More news and updates follow on the other side. Welcome back. We're seeing some bit of recovery creep into the benchmark index. Nifty has managed to see a fair bit of recovery, almost 53 points higher from the day's lowest point. And you know what's actually contributing to some of these gains are some of these FMCG names. The FMCG index has managed to recover 250 points or so from the day's lowest point. So there you go. The index now is trading still in the red though, down almost 1.5%. But you know what's managed to slip into the green is the media as well as the metal index. It was only the auto index earlier on which was in the green, but both of these indices are now trading fairly in the green. But moving on then to the US economy, a Nobel laureate Joseph Stiglitz has hit out at Trump's trade deals in an interview with CNBC. Here's an excerpt of that conversation.
If it were just about trade, you look at the size of the European economy, the size of the American economy, how much Europe trades, how much U.S. trades. Europe should be paid to trade with the United States rather than the other way around. Europe should have gotten the better deal. Europe got a bad deal. Absolutely. But what was this about? Defense. Europe is at war. They know they're at war. U.S. knows that it's war. Europe has not gotten the defense capacity to fight on its own. Everybody should have been aware that the U.S. was not a reliable partner back in 2017 when Trump came to power first, but they didn't take on board that lesson. And this is the best deal they could get. But they should remember, any deal with Trump is not worth the paper that it's written on.
All eyes this evening on the big jobs report that is due from the US. Now, the economists that Dow Jones polled are expecting an increase of 75,000 jobs. Now, these numbers could affect the Federal Reserve's next interest rate move 10 days later and could raise more questions on the Fed's independence as well. Now, CNBC's Steve Leisman has more on this.
Controversy surrounding Fed personnel, including subpoenas filed in the alleged mortgage fraud case of Fed Governor Lisa Cook, has markets leaning towards a more dovish Fed outlook. The probability of September rate cut rising to 98% and 56% for October for a second cut that had been in the mid-40s. And for sure, a lot of confidence in a December rate cut at 92% probability for the second cut of the year. Looking out to next year, the Fed funds December 26 contract trades with a 293 yield, suggesting the Fed may have far to go. And that's one of the lowest yields for this contract. By then, 5 of 7 board members could have been appointed by President Trump. In testimony, Fed Governor nominee Stephen Myron told the Senate Banking Committee he supports Fed independence, but he also said he would only take an unpaid leave of absence from his job as CEA chair, returning after fulfilling the 4-month opening in the Fed job. Democrats saw that as a conflict since his job performance at the Fed could determine if the president wants him back as CEA chair. But Republicans, they did not seem concerned, and he could be confirmed before the Fed's September 16th meeting. On the economic front, ADP private payrolls came in at 54,000 versus an estimate of 75,000, and that compares with a non-farm payroll estimate for Friday of government and private sector jobs of 75,000. New York Fed President John Williams sounding a bit dovish in his speech, noting the cooling in the labor market, and said he thinks it's appropriate for the Fed to move rates more towards a neutral stance. Steve Leisman, CNBC Business News.
Steve, thank you so much for joining in with that. In fact, let us also listen in to Federal Reserve Chairman nominee Stephen Moran, who says he will act independently, as the Federal Reserve always does if elected as the new chairman. Listen in.
The president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
Has anyone in the administration asked you to commit formally or informally to vote to lowering interest rates?
No.
Now, US President Donald Trump has also signed an executive order to implement the US-Japan trade agreement. The deal lowers tariffs on Japanese automobiles to 15% and includes a $550 investment commitment from Tokyo. Now, in return, Japan has agreed to expand market access for American goods across key sectors, including manufacturing, aerospace, agriculture, food, energy, automobiles, and industrial products. And as a result of which, a lot of these auto stocks, most of which get around 50% revenues from the US, were all up and about in today's trading session. So that was the US-Japan trade deal. But we call time on this edition of Business Lunch. From Vamakshi, me and the team that put this show together, thank you so much for watching. Wish you all a happy Teachers' Day as well. We leave you with the Nifty off the lows of the day, nearing the mark of 24,700. Midcap radar on the other side.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific.
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Good afternoon. Welcome to Midcap Radar. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's Friday, finally. Nifty, it came off from the highs, did see some recovery, and is managing to be around the 24,685 mark, very close to the 24,700 level. But yes, there is some underperformance which has come by. Midcap's absolutely flat, but we have a lot of stocks to discuss today.
That's right. Quite a lot lined up on the show. It's been a very choppy trading session. Yes. This particular Friday moves all around. And the broader end of the markets, you're actually seeing a little bit of underperformance. The advanced decline ratio there, quite muted. But we have a lot lined up on the show. Some important corporate conversations lined up as well. So let's start off with the top headlines. Stocks trade ranged on Dalal Street. Auto and financial services stocks gain, while realty, FMCG and IT dragged. Mid-caps relatively outperform.
BSE shares surge over 4% in a volatile market on strong volumes after the company completes its first ever Thursday expiry yesterday with strong volumes.
Sri Digvijay Cement under pressure as the company's promoter plans to divest 50% stake. Stock declines over 4%.
Varun Beverages is under pressure as Centre raises GST on aerated, carbonated and caffeinated beverages to 40% from earlier 28% plus cess. Management tells CNBC-TV18 that they will pass on the GST rate cut benefits on 30% of their portfolio.
Realty stocks slip in trade with shares of Prestige, Godrej Properties and Oberoi Realty down up to 3 to 4%. The Realty Index falls 2% in trade.
All right, those are the top headlines that we are tracking. We'll talk about individual names in just a bit, but in the broader markets, the advanced decline ratio is in favor of declines. But we do have some big moves in some of the stocks that we don't talk about so often. We have Moschip, which is up around 7% in trade as we speak. We do also have the one MobiKwik stock that has been doing well for a while now and is up another 5.5% today. We have MIC Electronics. That stock is up around 18% as we speak. There's NetWeb as well, which is up around 8.5%. So a lot of these names, which we don't talk about so often, are seeing big moves, and especially in a market like this right now, where the advanced decline ratio is in favor of the declines as we speak. The mid-cap index did see some recovery from the lows, but it's largely flat with some positive bias. But this is our special segment, Mid-Cap Movers. We have Vivek to take us to the mid-caps that are moving around in trade today. Vivek.
Well, that's right. Like you just saw on the screen, a very crisscross line, a very volatile trading session, very choppy moves, and volumes overall are a little dry. Which are the stocks that are moving around in the session? First set of stocks that we look at is the auto pack. The large cap auto names doing quite well, but look at Ashok Leyland today. After a while, this particular stock up over 2.5%. GMDC, this particular stock, after continuous sessions of outperformance today, has seen a breakout, almost 12% higher, top gain on NSE 500. Again, positive momentum seen from hopes of the rare earth mineral performance. BSE yesterday was the first day where you actually saw the Thursday expiry as far as F&O was concerned. Very good volume seen in yesterday's trading session. That stock seeing recovery from the recent underperformance. The other set of stocks doing quite well. Have a look at SKF India. After a while, this stock up almost 6%. RBL Bank almost higher by 3%, despite the stock being in the F&O ban. And Sirma has cooled off a little bit from the day's high, but up 1% nevertheless. On the other hand, realty stocks continue to remain quite muted in the session. Persistent Systems, Emphasis, a couple of names from the mid-cap IT space under significant pressure. Sri Digvijay, we told you about the promoter PE investor exiting this particular name, down 4%. And Varun Beverages, not as beneficial or not as big a beneficiary from GST rate cuts as other FMCG names. This stock down for the second straight session today, one of the top laggards even in the F&O space.
Okay, all right. So those are some big mid-cap losers that we are tracking, but it's a good time to get a technical check on the markets. Let's welcome Hemin Kaparia from DR Choksi FinServ for just that. Hemin, good afternoon. Thank you so much for joining in. A very choppy trade today. Do you think we'll see some action in the last 1 hour of trade?
Very good afternoon, Sonal. Thank you for having me. It's always a pleasure. We've been down for some 14 hours, Sonal. So a small bounce is around the corner. And frankly speaking, the VIX is sub 11. So I don't think there's going to be a big down move or anything spectacular happening on a VIX, which is sub 11. So stock specific, if you look at the bank Nifty, Sonal, we've gone nowhere. We spent days over here doing nothing in particular. Nifty is slightly different though. Bank Nifty looks weaker. Pockets like I think Vivek also mentioned, I think metals are looking good. Auto as a sector has done well, but yeah, it's all over the place, and it's more stock specific than anything.
Good afternoon, Heyman. Any individual stocks that you like at this point of time? Metals, couple of days did move higher. Anything from that particular space, or anything from broader markets that you like?
Oh, Tata Steel moved fast. I think Hindustan Copper looks very interesting, and now since it's out of FNO, I think the volatility would cool off. But yeah, if I were to give you a couple of stock picks, firstly, I would have a buy call on Indus Towers, Vivek. Deeply oversold, has come off from 430 to 315. Indicators giving crossover buys after reflecting positive divergence. Volume spike, highest volume in maybe last 25 trading sessions at the low. Those levels have been protected. So everything seems to suggest we are setting the stage for a recovery as far as Indus Towers is concerned. So a buy at around 330. It's gone up a bit, but at 330, stop loss 318, target 354. And the other stock, Vivek, there's a sell call on delivery. It's formed a rounding top. There's crossover sales and negative divergence. Everything seems to suggest we are slipping into a corrective phase. We've had a beautiful run from 240 to, let's say, 490 almost. So now we are slipping into a correction. It will get slightly more acute below 460, but yeah, one can sell delivery at 465, stop loss 477, target 441. Vivek.
All right. Thank you so much, Amin, for joining us. Those are some technical picks coming in. With that, we'll slip into a break. When we come back next, management of JK Tyre Industries will join in to discuss the impact of the big GST rationalization. Welcome back. You're still tuned in to Midcap Radar. Let's get a corporate conversation now. Raghupati Singhania, who's the chairman and managing director at JK Tyre Industries, is joining us now. The top 3 talking points, of course, during the conversation will be the price revision due to GST reduction that continues to remain the big story, rubber pricing trend, and outlook on Mexico business as well amidst the tariff tensions. Mr. Singhania, good afternoon. Thank you so much for joining in. Well, I have to start by talking about the big GST cut on tires being supplied to tractors. It's a 5% duty. On the other tires, it's around 18% from 28%. What is the impact that you will see? Will you pass on these price cuts that have come by to consumers as well?
First and foremost, I think is a very welcome step at this right juncture. And it will certainly boost the Indian economy, particularly which is consumption-led. As far as our specific business is concerned, I think it will certainly give a boost to the tire business across the board. In the tractors, we do see some demand pickup because of the cut in excise duty, and the GST, I mean. And also in the overall bigger business, the cutting of GST on trucking, for instance, is going to make a huge change in the country. If you look at it this way, the goods and vehicle movement is the basic delivery mode. That is for consumer goods or whether it's for industrial goods like steel or cement or even food grains. So it is going to reduce the cost of transportation. And trucks are the backbone of industrial movement in the country. So supply chain is completely driven 65% to 70% in India by road transport. And even any GST reduction on the upfront will reduce the capital cost of the trucks, which will, again, according to me, create some demand boost for the trucks. And so therefore it will revive the auto industry as well.
Right. Mr. Singhania, at the end of Q1, you said that you expect the tire industry to grow at 7 to 8% in FY26, and you also upheld your double-digit consolidated revenue growth guidance. Post the GST cuts that have come about, both number one for the auto sector and number two even for the tire sector, where do you see growth as far as FY26 is concerned?
I would say growth will be more or less as you just mentioned, maybe a couple of points higher, because look, the equilibrium is not disturbed. The demand-supply equilibrium is not basically disturbed. It is not a price-sensitive product. Let's be very clear. So this is a consumption need product, and therefore it will not increase the demand superficially, but marginally, yes. And to that extent, the prediction for the demand growth will go up a few percentage points. That's what.
Okay.
Yeah.
So it's demand inelastic for tires in general, and that's why a cut will, of course, improve sentiment, but you don't see that growth will increase so much because the equilibrium is already at balanced levels. Mr. Singhania, this is one part of business, GST cuts that have come by. I just wanted to understand whether there'll be any price cuts that we'll see in products from here on. How do you go about passing on the benefit to the consumers, and how have rubber prices trended so far? How do we align the supply chain all together?
You see, it's a very simple, because the prices, there's nothing like price cut. It is, let us say my price was 100 rupees and I was charging 28% on top of it and billing the customer. Tomorrow onwards, I will do 100 rupees and add 18% and bill the customer. So to this extent, you may say the cost of acquisition for the customer comes down. There's not really a price cut per se.
Actually, when you say price cuts, I think consumers just become happy. So if you put it that way, it just helps selling the product as well, is why I asked you that particular question. But on the raw material side, how are rubber prices trending currently?
Rubber prices are at the moment reasonable, and they're not very high. Of course, this is a season, as you know, off-season with a rainy season. But the rubber prices are more or less stable at the moment, and we don't see an extraordinary hike on the front. And even other raw materials are behaving generally all right.
So, Mr. Singhania, sequentially, can we expect better EBITDA margins Q2 versus Q1? So, the second part of the question is, GST rate cuts, clearly you benefit. What we also want to understand is that when it comes to JK Tornel in Mexico, there was a lot of overhang due to tariffs as far as USA, which was one of the customers was concerned. So, going forward, is there more clarity now?
Yes, indeed. I mean, for the time being, there's only a nominal tariff in the imports from Mexico into US. As a matter of fact, if I may digress slightly, all the tempomaniac which is going on, tariff war, and so that makes our Indian tires going into US a little more expensive because 50% tariff. So in fact, we have strategized to send in more tires from our Mexico plant to US, where the tariffs are very limited. So in fact, it is in a way we have strategized or re-strategized our whole game plan.
Okay, so how has it changed operations for you? Because, you know, selling or sending stuff from Mexico versus other geographies would involve some cost or would involve some reorganization. If you can explain, has it become a little costlier to change or shift that production there or send cars from there? Do you have to add capacities? Because I'm assuming a lot of capacity was taken care of in other geographies.
A very good question indeed. There are two parts to it. One is organizing sales, the other is organizing production. As far as the sales is concerned, we were already, as a company, exporting to LATAM in a big way, Mexico and Europe, and apart from Africa and Middle East. So in fact, it's just a question of diverting or reallocating volumes. So that does not require a new setup of sales. As far as the production is concerned, we have reasonable capacities in Mexico, and that product which we were selling to LATAM, we may divert to US to an extent and supply it to LATAM from India. So, you know, that little bit of flexibility we have, luckily, because of 9 plant locations across the world.
Okay. Mr. Singhania, you know, you had also alluded to the fact that you are in talks with a couple of customers. As far as the premium segment is concerned, have you managed to close any new customer acquisitions in Q2?
Well, this is an ongoing process. So number of customers are going on in discussions and they're evaluating the products and they're visiting our R&D facilities and so on and so forth. But specifically to mention that if we've closed a particular customer in Q2, I can't pinpoint any particular one at the moment.
All right, Mr. Singhania, we take that point. Thank you so much for joining in today and patiently answering all those questions. That's the word coming in from JK Tyre. They'll pass on the GST cut benefits to their consumers. Demand will also see some improvement. Most importantly, transportation costs will see a cut because of the GST rejig. The stock at the day's high, and yes, there is a recovery in the Nifty as well. So let's quickly take a look at that. It's 10 points higher right now. When we started the show, it was down around 50 to 60 points. So we are above the 24,700 mark, and it is led by banking names. So just take a look at the bank Nifty as well. We do have some gains coming in there. There's IndusInd Bank. We have Kotak Mahindra Bank. Reliance Industries also is seeing some recovery. HDFC Bank is the other one, which is aiding the recovery that we are seeing from the lows of the day. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll talk about individual stocks and a lot more.
Welcome back to Midcap Radar. Well, there has been a sharp recovery as far as telecom names are concerned, especially in the star. Rima joins in with more details on what's transpired over here.
Thanks so much for that. So the promoter of Indus Stars, that's Bharti Airtel, which has about a 50% stake in Indus Stars, via the open market towards the end of August, has purchased some shares, about 68 to 69 lakh share rupees, and that translates into about 0.25% of a stake hike. So that is the positive. So this has been done via the open market. So you generally know that whenever the promoters hike stake in the company, it infuses confidence. And plus, Indus Stars has also been beaten down. The all-time high on Indus Stars was 499. The stock today is about 32% off from its all-time high levels at about 338. So the stock has fallen, and now the promoters have come in and added to about 0.25% to their overall tally. Plus, if you just go by the recent notes which came out on, on Indus Stars this week, one of them was Citi, and they said the bear case in the case of Indus Stars is 300 rupees. The stock is not very far away. So their point is the downside from here is limited. So Citi had a target price of 460. CLSA's target price was 520. Today, Ambit also came out with their note. And, this whole thing about their entry into Africa, which raised a lot of concerns, they're saying those risks are overblown. So which is why it's their top pick in the entire telecom basket. They've put a target price at 525. So that's about Indus Stars today. The two triggers that the street watches: one, reinstatement of dividend because they'd stopped giving out dividend. And the second one is any relief for Vodafone Idea. Back to you.
Okay, all right. Thank you so much for joining us with all those details. Rima explains the move that we are seeing on Indus Towers. But let's move on. Swiggy Instamart CEO Amitesh Jha tells Shireen Bhan that festival demand is expected to be multiple times bigger than 2024. Also, as the GST cut will drive consumption substantially. Listen in to that exclusive conversation.
Just in terms of the execution challenges that you foresee as you amplify and ramp up growth from here on, where do you feel the most comfortable today and where do you feel some discomfort in terms of being able to deliver?
I think the one thing that I'm very comfortable is with the team. The team that we have built inside Instamart is a phenomenal team that is ensuring that day in, day out, everyone has the same ambition, same goal, same focus. And that is the reason why we have seen a lot of things that you would be seeing in the last 5 years, essentially, as well. The big discomfort that I always have is is going to be a big festive season.
Yeah.
I believe this festive season is the season. Last year, it was extremely big. Okay, and we thought, we don't know how much it will be after that. The curtain raiser for the festive season, which was Rakhi and Ganesh Chaturthi, we have already seen the glimpse that is going to be one of the biggest, festive season for.
And add to that the possibility of GST cuts. How are you working your way towards that?
Yeah,
because that's expected to give a big consumption boost as well.
We believe a favorable, GST cut will drive the consumption substantially. Festive season is the right time as well. We are well prepared for what we expect. We are absolutely not prepared for what we don't expect. So what is like keeping myself very, very paranoid
But
right now?
are you factoring in the possibility of the cuts coming in and that could perhaps lead
See, we
to
have
higher...
tried, but again, as I said, right, 3.5x in Rakhi was not expected. Okay, so we don't know. I mean, what is going to... So I'm really, really bothered about our inability to serve the consumer when they really come in hordes.
But you're saying you're getting indications that this is likely to be bigger than last year for sure.
Bigger than last year. It's like going to be multiple times of last year.
Multiple times of last year.
The question is, how much are we able to essentially cater to it?
Okay, well, that's good to hear. And that would certainly be music to the government's ears as well, that we're seeing this big consumption boost.
All right, on that note, we'll take your leave on this edition of Midcap Radar. Have a great weekend ahead. Your stocks when we return.
Hello, good afternoon, and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. And surely a good afternoon that we're seeing coming for the markets as well. Recovered from the day's lowest point, 24,778. Around that mark is what the Nifty is trading at. So closer to that 24,800 mark. Now, we're going to be having to watch out for whether this recovery that we've seen will move up further in the last hour or so of trade as well. Will be key to watch out for. Nifty Bank, that's also moved into the green as well. Marginal gains, very, very marginal gains right now is what it's holding on to. But in the last few minutes, you see it's come back on the green side. So that'll be interesting to watch out for. IT continues to be under pressure, but Midcap, what a good recovery from the day's lowest point. Small cap, again, a good recovery from the day's lowest point over there as well. So yes, we are seeing recovery that's coming in the markets. Most of them, in terms of the sectors that were trading in the red, are moving to the green, broader end of the market especially. But that's the market setup that we're watching out for this afternoon. Let's bring on Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Leeladhar, to answer all your stock-related queries. Shaina, as well as Vaishali, good afternoon, and thank you so much for joining in with us as always. Let's get started with all those stock-related queries for today. The first query is coming from Naman Kumar, who's writing to us from MP. He's holding 19,000 shares of Sri Digvijay Cements, and this is at a price of 110 rupees per share. Right now, making a little bit of loss on this one. Wants to know whether he should book the losses or continue to hold at current levels, maybe look to average. Shaina, what's your view?
Unless he's got a long-term holding, really long-term holding, like maybe 2 to 3 years, I don't see the stock moving too much from here, because as we heard the latest, in fact, very recent, there is going to be a change of the promoter group from one P to another P. So there is going to be, open offer also of 26%, but it's going into the hands of another P, whereas the market was expecting it will go into the hands of, one of the large cement companies. So that, at least as of now, is not happening. But valuations, if you hold it for the long term, are still attractive. It's just about the transfer is happening at around $81 per ton, which is, of course, not expensive. And cement industry as a whole is likely to do much better in the current year. The GST cut is going to give a boost to overall demand for cement. Prices also, average realizations also have moved up in the current year. Last year was a very dull year, FY25. FY26 will be a much better year. So if your investor can hold it for at least some stock, part of the holding for maybe 3 years, then he could see a decent return.
Absolutely. And just today also we've seen some announcements that came in as well, where maybe True North, who's the promoter, has agreed to divest some stake in this as well. So that'll be something to watch out for. Overall, cement pack also is something that you're saying keep an eye out on. Vaishali, on the technical front, Sri Digvijay Cement, what are we watching out for in terms of levels here? How is the move expected now?
Hi, very good afternoon, Vinny. So I think Digvijay long-term chart is also good. And today with the news and all, we are seeing some profit booking. But I don't see any cause of concern as long as 85 levels are held on. So now that he's already in a loss, still continue holding, because no point, having a panic sell. So wait, continue. As long as 85 levels are held on as support, this stock can bounce from there on. So in my opinion, not in a hurry should you sell.
Okay, don't sell in a hurry. Just hold on to it, So keep an eye out on Sri Digvijay Cement. Next query for today is coming from PC Achaya, who's writing to us from Bangalore. He's holding 300 shares of Infosys, purchased at a price of 1,500 rupees per share. Is making a loss on this one. Wants to know whether to exit or hold at current levels. Shaina, Infosys, what should they be keeping an eye out on now? Given that everyone suddenly is talking about moving towards those mid-cap IT names, Infosys obviously is the big company where you see, stable moves that have come in the past. Infosys continue to hold.
See, this is becoming very difficult to answer, because what I totally agree with you. There is a shift towards mid-cap. But the thing is, now the valuations for mid-cap and Infosys are, almost the same. So if you really want to be in IT, then why not Infosys? I would say valuations 1 year forward are just about 20 times PE. And also, if you saw the first quarter, the numbers were better than expectation. They've got a good order book position. Now, the problem over here is, I would still say that, since it's close to his buying price, investor can sort of get out of half the quantity. One is because, this is going to be news driven. As we heard some bit of negative news, not, I would say, rumor that, there could be tariffs on IT, and the whole sector saw this correction. So till we have some agreement with the US on tariffs and what exactly some stable understanding of what is the way forward, I think it's better to remain 50% in Infosys. I don't think you need to switch to any other stock in IT, but maybe take 50% off the table for now.
Okay, you're saying just maybe book out some bit of that loss right now, and remaining 50% you can continue to hold. Also, we did have that news flow. Also, my colleague Rima had highlighted there's a company, Endeavour, which is a public listed British company in this IT service pack as well, where they were saying the numbers that they reported were a bit weak. So maybe that concern or that rub-off is also coming in today on those IT companies. So keep an eye out on that. But nonetheless, right now on the fundamental front, book out half of your losses that you're seeing right now. Remaining half of your holding, continue to hold. Vaishali, for Infosys, what are we watching out for in terms of a move? Because last 6 months, last 1 year, in terms of a return, it's not done anything, right? Does it merit continuing to hold, or at least will it come back to the buy price of the viewer in the near term?
So if time is not a problem, I think overall right now the chart looks weak. In all likelihood, right now we are looking at a price of 1445. So I would say there is a possibility of this stock dragging down to further towards 1400, 1380 levels. So if you are a trader, then I of course would suggest that yes, book partial profit and see if the support levels break, or the nearest support that I would look at is 1430. So if these support levels break, then you should be exiting. But if you're not in a hurry, in my opinion, all these stocks are very cyclical. So as I said, the support levels are 1380 to 1400 levels. Start accumulating, so at least you can lower your cost. And when you see a good bounce coming in, at least to start with, you will regain your cost at least.
Okay, surely we'll be keeping an eye out on that. We have some updates coming in from sources, and this is on insurance related. Keep an eye out on this insurance name, ICICI Lombard, New India Assurance, where lower auto GST rates can trim the premium. That's something that I'm reading right now. Insurance declared value on which premium is calculated includes GST as well. So these are some clarifications and alerts that we're putting out right now. Keep an eye out on these names as well. Let's move on to the next query for today. We have Shruti Mishra, who's writing to us from Chandigarh. She's holding 60 shares of PNB Bank, and this is at a price of 70 rupees per share. She's asking whether to remain invested or switch to another company. Shaina, your view?
I would say remain invested. Valuations are very attractive. Price to book is just about less than 1. It's 0.9 times. And, if you see the balance sheet quality also is quite good. They've got a net NPA of just 0.4%. and 0.4 times. And also, if you have the loan growth that we saw in the Q1 was quite decent. They grew about 11% YOY. I would say that you continue to hold. It's not going to give you a runaway return from here on, but I would say it's a steady bank to hold.
Okay. And PNB on the technicals, what is your word, Vaishali?
So I agree with Shaina. Actually, the stock, if you look at the long term as well as the daily charts also, the stock is at a very good cluster of support levels. So I would say 9,800 is a very good support level. And once we see a pickup coming in PSU banks, I think this projected target, what we are looking at is 115 to 120. So in my opinion, please hold and also wait for some, if there is a dip, add more.
Okay, if there's a dip, add more. That's what Vaishali is saying as well. But let's move on to the next query. And this is an investment query that we have coming from Tejvita, who's writing to us from Bangalore. She's saying she wants to invest in pharma companies and is asking if Akkum's drugs is a good bet for the long term. Shaina, your view on Akkum's drugs. There was a news flow when we see the sudden run-up as coming in as well. Is this a company that you would look to bet on in the pharma space, or are there other names in the long-term story?
So actually, I don't track Akkum's. So I cannot give an opinion on that. But the other pharma stocks that you can look at in terms of valuation, you have Aurobindo Pharma, which is attractively valued. Also, though the stock has given you that bit of correction, which you can, in my view, take it as an opportunity to buy because they have announced that huge acquisition in the US, which in the shorter term may see that bit of negative sentiment. But I think it is going to work out well for them. They have got a very strong balance sheet which can support this acquisition. Biocon is another stock that actually can give you a decent return. They've got good products that are to be launched in the US market, where of course we'll have to watch out for what will happen on the tariff front. But as of now, there is nothing. So it's a good bet to hold, to enter into.
Okay. And on the technicals, Vaishali, given that the stock has seen a correction in the last 1 year, and specifically in the 6 months as well, right? There was a news flow, it went up and then again it saw a correction. So is this the correct level to maybe enter the stock?
I don't think so. I don't see any sign of reversal also. So in my opinion, stocks which are already having an established trend, so one of them is Glenmark, even Lupin, fair value, and another domestic play is Mankind Pharma. So I would go choose these stocks which have a better conviction as compared to this. Akum, I would only consider buying or having a positive view only above 500. So if you're ready to wait because it could see some more downside or it may bounce, it is just not in a trend. So only above 500, it would gather some conviction. But till then, I would definitely focus on the stocks that I recommended.
Okay, so right now, maybe just hold on before you buy Akum's drugs. But till then, there are other names that China as well as Vaishali are mentioned in the pharma pack, Tej with us, so you can look at that. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more of your stock-related queries after the break.
Your first reactions on this GST rationalization?
I see this as the most transformative step the nation has seen possibly in the last 50, 60 years. We will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific.
Can we trust China?
Now that we have been largely able to resolve the issues of disagreement with China, I think it was very natural that we should also reset our ties.
Welcome back to your stocks on CNBC-TV18. We still have with us Shaina Mukaddam as well as Vaishali Parekh to answer all those stock queries that you all have sent us. Let's move on to the next query for today, ladies. And we have Arvind, who is writing to us from Chennai. He is saying that he wants to invest in JNK Bank, and this is on the back of its earnings. Shaina, JNK Bank, is that something that you would be looking at?
See, the earnings have improved. If you see in the last 2 years, even in the first quarter, numbers are looking much better. At the same time, I think the price to book is around 1 time. So at these levels, what I would say is that there are better banks that are available. There, I would say, smaller, NBFCs which could be looked at. There are alternates. So I would not prefer buying JNK Bank. Given that while numbers are better, I think valuations being one-time price to book, it is going to limit any major upside from here. So I would say look at some other NBFCs.
Okay, look at some other names coming in there. Vaishali, your view, JNK Bank, or would you also suggest some other names to look at?
Technically, this looks quite right, but I think I would prefer a stock like Bank of Maharashtra or ICICI. That would be my favorite. And in that regard, why not even SBI or Union Bank? I would go more for these banks.
Okay, other bank suggestions that have come in from both our experts. But let's move on to the next query. This is also coming in from the financial side. We have Edelin, who is writing to us from Kerala. She's holding 2,000 shares of Equitas Small Finance Bank. The average price is 55 rupees per share. Right now, it's at 52, so not much of a loss. Now, she's a long-term investor and is asking if she can continue to hold the stock for 3 more years. Does it make sense holding Equitas Small Finance Bank for 3 years, Shaina?
Here also, I would say, the price to book here also is about 1 time. They have actually taken a hit because of their exposure to microfinance, which, they had to take huge write-offs, because of which the numbers were impacted. Now, given that they have cleared their books and it's just about 10% of their overall loan book, at the same time, I think, that is going to remain, a pressure point for them. So I would here again prefer that the investor looks at some other, the NBFCs, other banks, some of the NBFCs that are now being talked about that look pretty interesting. She can switch to that.
Okay. And Vaishali, your view?
So for now, I would surely take it as a trading bet, because I think it's pretty much done with its corrective move. So keep 50 as stop loss, and once we see momentum setting in, this can go towards 55, 58, 60. So till then, I would definitely buy. I would have a relook just above 60 levels, because that would get the stock into a trend. So trading perspective, yes.
Okay, trading perspective, yes, continue to hold on. Let's move on to the next query. Kalyan Jewelers, this is the stock we'll talk about. Tahir Khan from Gujarat is writing to us. He's holding 2,400 shares of Kalyan Jewelers. Price is 541 rupees per share, making a loss. Future prospects of the company, and should he continue to hold? Shaina, Kalyan Jewelers, your bet.
See, long-term prospects are good because they are very aggressively opening new stores. The GST has not actually given them any direct benefit. But at the same time, I think with more money in the hands of consumers, demand is likely to be good. Having said that, I think I still would say that it will take time for him to get a decent return from here, because valuations are expensive, at least for the next 1 odd year. It is now available at about 20 times EV to EBITDA, which in my view is expensive for the shorter term. So I would say a bit of consolidation in the stock, time-wise correction before he gets a decent return.
Okay. And your view, Vaishali, for Kalyan Jewelers, does it merit holding the stock?
No, it's fine, but do keep a stop loss, because there's nothing much happening in this stock. So I would say keep a stop loss of 480 and continue holding.
Okay, let's move on to the next query. We have Shiv Saran writing to us from Kanpur. He's holding 1,500 shares of Bank of Baroda. 248 rupees per share is what he's holding. He's the short-term investor, so he wants the levels that he should keep an eye out on. Vaishali, could you help him with what should we watch out for as a short-term investor here?
Definitely. So this is right now on a corrective mode. I think final support lies at 230. So as long as 230 levels are held on, you can expect a bounce. If you have to buy, keep 229 as your stop loss and buy the stock. And let's hope if it bounces, it can give you around 240. That would be the way to carry on this trade. But exit if 229 levels break.
Okay, and Shaina, your view for Bank of Baroda?
I would agree. Do keep a strict stop loss of between say 220, 229 or whatever that Vishali suggested. But I think at the same time, price to book is about 0.9 times here. And the management is very confident of maintaining a price to return on assets of about 1%. So it's a hold.
Okay, hold coming in there. But with that, we're absolutely out of time on this edition of Your Stocks. So thank you so much, Vaishali as well as Shaina, for always joining us and helping our viewers solve all these doubts as well. And with that, we'll wind down the edition. Remember, you can always email us your queries at the email address fetching at the top of the screen for y'all. And with that, it's a goodbye from me, the team who put this show together. But don't go anywhere. Last hour of trade is still left. And for that, your closing bell.
To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan Index managing to hold on to gains of 0.9%. Hang Seng managing to hold on to gains of 3.
Resistance 24,878, which is the 61.8% retracement. 24,800. 54,170, 54,200, just about finding its feet.
I believe there should be a delta growth in these festive times. We are looking for obviously a significant delta driven by volumes.
So I'm quite confident that the measures taken so far are sufficient to lead to a growth revival.
And it will genuinely actually increase the money in the hands of the customer, therefore discretionary spends will go up.
For the markets, we saw the sharp fall from the opening highs.
You've got huge benefits on water, which has come down from 18% to 5%.
It's always good to operate, between 3 to 5% kind of a band, because that's manageable for most companies.
Nifty, it came off from the highs, did see some recovery and is managing to be around the 24,685 mark, very close to the 24,700 level.
Well, that was the day so far, and it's been quite a momentous week for our markets. With the GST overhaul, and markets have been slowly climbing higher. We haven't seen big gangbuster moves, but week to date, we're still up close to about 1 1/3 of a percentage point. So then let's pull up that 5-day chart. And even today, things have been on the quieter front, though in the last 1-2 hours, we have seen the markets pick up. 1 hour to go to wrap up the day and the week.
Wrap up the day and the week, and that's exactly right. And if you look at the weekly gains, so like we're saying, that you look at the Nifty, you feel nothing's changing, but the week incrementally is positive.
It's positive, yeah.
And if you look at mid-caps, and the mid-cap index has done even better. If you're looking at individual names, say a Mahindra & Mahindra, for example, then even that single stock, M&M, for instance, which is again the Nifty winner, this week Mahindra & Mahindra has given more than 11% gain. So it's been more focused on individual beneficiaries and stocks, not showing up so much at the market-wide level, the GST impact. But it's there. It is palpable. Of course, we will keep you completely covered over the next 60-odd minutes, take you through the end of closing bell. With me is, of course, Rima, and we have Nigel joining in. Prashant joins in a bit. Nigel, not too bad, right? I mean, even from today's lows, we've managed to see some recovery.
Actually good today, because you have a lot of stocks in the broader markets that are doing well, and the broader markets itself are outperforming. That's what will make a lot of portfolios look good. So if you look at BrainB, it's a stock that's bombed out, that's up in trade. GMDC saw a sharp correction from around that 550 mark, went down to around 400 rupees. That as well is popped up in trade. Cross is up close to around 12%, so big move out there. MobiWik, we had highlighted the stock earlier. That as well is doing well, and something's going on with Swiggy. Just take a look at that stock. This delivery-based buying that we're seeing on that one. It's currently at the high point of the day. There's constant argument whether or not that valuation gap with Eternal will narrow out. Well, that one, in fact, is doing well in today's trading session, currently at around 440 rupees. So interesting movement on a couple of those stocks. Well, guys, let's get going with the show then.
Absolutely. So let's run through what we've got lined up over the next hour or so. The market has become a buy on dips today. Several times the Nifty slipped into red territory, but the buyers have come in, and that's what's playing out today as well. So we'll talk about that, and we'll talk about the big movers of the rally. In fact, if you look at it, the FMCG index and the IT index, they're the ones that are still dragging. But there's a recovery continuing in many of the auto names, and the Nifty above 24,700. We'll, of course, talk about the reason why those IT stocks are down, and that's because of a British company and, the kind of commentary that they have put out. Also in focus, BSE. Following the shift in the weekly expiry, how will this impact volumes in the market, and what are the factors at play now? We'll talk about that. Food delivery companies, aggregators, Eternal and Swiggy, surging on the back of bullish expectations coming through from a Motilal Oswal note. We will get you the details in a bit as well.
All right, let's find out how you should position yourself in the last hour of trade. We've got Mitesh Thakkar from Bonanza Portfolio joining in as always. Mitesh, wrap up the day for us, your thoughts, the trends that you've observed, and even the action over the last couple of days, and how does it position us for next week?
Good afternoon, Rima. What I'm observing is the lack of trend, actually. See, the market on the daily and the weekly charts, if you look at the indicators which suggest directional movement or volatility, they're all turning flat. So I don't think this is a market, where you want to explore too much of index trading. But stock-specific trades is the way to approach, and that's what we have maintained for last few days. Right now, I have a buy on Chola Finance That's a stock which after correction is reversing. So recommend a buy here with the stock below 1465 for targets of around 1525 thereabouts on the upside. And if you look at the IT, that's actually looking a bit weak. So sell on HCL Tech could be interesting. It's making new lows, slightly oversold, but the directional bias is negative. So if it gives a mild pullback, say around 1430, sell here with a stop at about 1450 and look for a 1390 kind of a target.
Okay. Let's, in fact, just dwell a little bit more on the IT. In the early part of the day, there was a lot of volatility in the stock price. At one point of time, the Nifty IT index went down nearly 2.5%. And that's because of an erroneous flash by, some of the publications where they spoke about the tariff, the Indian IT export services getting possibly under Trump's tariff watch. That was, quickly denied, and you saw the stocks recover. But separately, there is actually news and there is negative news. There is this company called Endava. It's a mid-cap global IT company. It competes with the Indian IT services in various deals. They came out with their Q4 FY25 numbers, and it was a disappointing set of numbers, which is why the Endava stock price tanked nearly 30%. Their guidance is also weak. The company is saying in Q1 FY26, the upcoming quarter, revenues will fall 5 to 6%. For the full year, they're talking about a revenue decline of -1.5% to +0.5%. What's the problem? So from the commentary, what they're saying is because AI is changing so rapidly, customers are waiting before they commit to any sort of an investment or any project. So for example, if you think that today, the project you're going to give is going to give you 20% productivity benefits, the customers are thinking, well, if I just wait 6 months more with the kind of rapid advancements, maybe the productivity benefit will be 30%. So that's the reason why companies are seeing deal wins. Their AI pipeline is growing, but it's not converting into deals. And companies themselves are investing heavily into AI. So Endava spoke about making that investment into AI and also passing on productivity benefits, which basically means that there could be a margin hit, which is something we started seeing already. Companies talking about or investors fearing on that front. So which is why the Indian IT companies are under pressure because of, there could be multiple reasons, but this is one that's come through from Endava.
So this means that if I'm a, large, a US bank or any entity which is, outsourcing some part of my services, I could hold back discretionary
They're holding back.
Thinking that if Rima, is giving me X amount of benefit today with more advancement in AI, it could be higher. So why not wait?
So why not wait? It's like 1 year back or 2 years back, you had ChatGPT 1, right?
Yeah.
Instead of committing to a 5-year with ChatGPT 1, wait. You've got ChatGPT 5, right? In a couple of years. So that's the thing that's happening. It's changing so rapidly. So customers are holding on to their spends right now. So which is why there is pipeline. But there is no revenue.
Just, guys, hi, good afternoon.
Hi.
Just one thing. So this is not this guidance came this morning, or was it? Yes.
Yesterday. Stock was down 30%.
So the general understanding, and I just walked in, but this is you're saying the stock fall is related to this, not the fake news which we busted, which is.
I think that there was a trading
yesterday.
impact.
This was yesterday.
This was yesterday.
Yeah, there was a trading impact of the fake news of Mr. Trump and what he's doing with software exports, which is completely fake, completely dismissed, and we put out the clarification as well. So there was a trading sort of a...
That may be, the news in any way is not very good in that sense.
Yeah. So I was talking to a couple of IT analysts, and they're saying, I just asked them, I said, do you think it's possible that Indian IT services will get tariffed? And they said, no, it's unlikely. If Trump really wants to make a move, and hurt Indian IT or whatever the word may be, he said there is a possibility he could look to increase the localization requirement. In his first term, he introduced a minimum localization of 65%. Before that, it was understood it should be 40-45%, but there was no rule, is what I've gathered. So he brought in 65%, and there was a scramble. And because the talent offshore is so much, onshore is so much more expensive than the talent here, there was a margin pressure on Indian IT companies. Therefore, there was a scramble. Anyway, H-1B visa rules had gotten tightened. So therefore, if he has to maybe do something, maybe he will increase the localization, say make it 75%, hire more people here in US.
Which is why the overall disenchantment and the pressure on IT stocks is very, very understandable, because you have no idea what's happening next with the US till there is some sign of progress or a thaw or a breakthrough. It's an edgy space. Let's actually take this up with Dharmesh Kant, head of research at Chola Securities. Dharmesh, hi, good afternoon. We have lots to discuss, but let's start with IT. because, there are all of these issues at play, including this AI news that Rima spoke of. Earlier this week, we had some brokers actually put out optimistic calls. I think CLSA was definitely one of them, saying tactically, why don't, it's a good time to maybe buy into large cap IT. But would you be in that camp at all, given the uncertainty?
Yeah, good afternoon, Survey. I mean, whichever way you look at IT companies, it's plagued with, bad news or, flows are not very conducive to their business growth environment. And I hope and pray Mr. Trump has not seen that news flow that he can also tax IT services. In case if that has to happen, it will be, a big negative. I don't think so it will happen. As Rima was highlighting, it will be more to do onshore kind of a job. But again, even if that is put into place, it would be again operating margin dilutive and the margins will be impacted. Anyways, they are struggling to maintain the margins because they are not getting the pricing right there in the US. So pricing is under pressure, margins are likely to come under pressure. The only way to look at IT companies right now is to look into the companies which are into services of technology and application oriented, like ERP, AI. Let the product be developed by some other company, whichever version of the product comes through. That should not be the criteria for the companies, IT companies who are serving them. If they are into the supply chain of product development, then they are getting the business. And there, I think Coforge, Persistent System, and companies like that are doing a pretty decent job, and such falls can be, used to accumulate them. Large cap IT companies, jury is still out, and I think this entire year would be very difficult for them to negotiate too. So we are staying away from all large cap IT companies. In mid cap, select IT companies are looking attractive, and their Coforge, Persistent stands tall, along with Signity Technologies.
Okay, all right. Dharmesh, good to see you in. Wanted your view on some of these stock market plays, and what comes top of mind is the exchange, BSE. Buzzing in today's trading session. Yesterday they played out. After a while, they had their weekly expiry on a Thursday. Vamakshi joins us to tell us why is BSE buzzing today. Vama, before we get to that, a very, very happy birthday to you. Wishing you all the best, prosperity, happiness, and we look forward to the party later this evening. But first on BSE.
Well, thank you so much, Nigel. I think you've gotten the party for today, but let's now focus in on BSE then. NSE and BSE from this week onwards have had their expiry switch. So NSE now has Tuesday expiry and BSE now has the Thursday expiry. Now let's see how the market share for both of these exchanges panned out this week. Now on Tuesday, which is NSE's expiry, NSE had a market share of 88% while BSE had 12%. On Thursday, which is now BSE's expiry, BSE had a market share of 56% and NSE had a market share of almost 44%. Now let's look at how BSE's market share has trended over the previous expiries, which were on Tuesday, that is from 29th of July to 26th of August. The trend will come up for you. The average market share of BSE on these last 5 expiries has ranged at 52%. Now with 56% market share, which came on 4th of September, that is yesterday, this is the highest ever market share that BSE has ever commanded on a day. So that is why, that's a big bounce is coming in today. But apart from that, when we look at the premium turnover itself, the average premium turnover on the previous 5 Tuesdays has been at 35,442 crores. And on Thursday, that is yesterday, the premium turnover surged to 49,265 crore, an uptick of almost 40% as compared to this average. And in fact, this premium turnover is one of the highest that BSE has seen since May 27th, 2025. So good uptick in the market share as well as the actual premium turnover bodes well for BSE. Resultantly, the stock is flying today.
Okay, all right, Bama. We'll chat post market hours and you can tell us where exactly is the venue to party. Thanks a lot, Bama, for telling us about BSE. Dharmesh, we'll inform you as well about the venue. But for the time being, give us your view on BSE.
Yeah, good afternoon, Nigel. Exchanges have been under a lot of volatility of late, and BSE, after rallying so hard, is saying some tough days as well as bounce backs. So what we are recommending to our clients is go for a basket buy. BSE, MCX, NSDL, CDSE are all put together. And if you are having a horizon of 3 years, 5 years, kind of a long-term horizon, then there's, still the valuations are justifiable. And we do see some upside coming in there. However, having said that, one has to be very clear, the day NSE gets listed, this entire space will come in for resetting. And let's see how the pricing goes about. As of now, there's still a huge discount between NSE grey market prices and BSE price, the prevailing market price. So our hope is that somewhere in between it's likely to be settled. So time-wise correction we will still see in BSE. There would be some pop-up days, but the structural uptrend is unlikely for next 1.5 or 2 years or so.
Dhamesh, as we began the week, we were just, began the show, we were just recapping the big moves seen this week. So M&M's right on top, as Surbhi said, 11.5% higher. Then you've got a Tata Steel, 8.3, Eicher Motors, 8, Bajaj Finance, 6.5, Hero MotoCorp, 5.5, Hindalco, Bajaj Auto, also with gains of more than 5%. So broadly, it's your metals, it's your auto names, and even then the consumer finance names, Bajaj Finance and FinServ. Any of these large caps on your buy list at this juncture you would be comfortable buying?
Yeah, good afternoon, Rima. We are still continuing with M&M buy call. So we have initiated way back, couple of months back. Even there was some news flow surrounding that the GST will go up on EV vehicles. Fortunately, that did not happen. And that was our call also on M&M that it's not going to happen and they have to push the EV vehicle in space. If you look at the August month numbers, in spite of GST announcement being through, the numbers were pretty strong for the farm equipment segment. And now with GST cut coming into play, there's a further boost to that. So M&M stands out a clear winner of this. Hero MotoCorp is the second in place, which we are liking. The upside trajectory will still be there. October, the month would be the bumper month for all these automobile companies. That is what the dealer checks are suggesting to us. And post that, we will see where the price is standing and for medium-term outlook, whether one should be booking profit or staying invested. So these are the calls. Basically, we are focusing more on the automobile space right now from the consumption theme. And BFC does look attractive. Eventually, wherever you consume, and if you are consuming by taking a grade, whether it is consumer durable automobiles, so they are the ones who are likely to benefit. And there we are standing with the market leader, and that is Bajaj Finance. So all these calls are tactical in nature for couple of months kind of a perspective, because valuations to our mind is now almost on the peak level. So 5% more upside, and then we would be looking at taking the profits.
Okay. All right. Let's now talk about weekend plans. Well, no, let's talk about stocks that involve weekend plans. I'm talking about Eternal and Swiggy. There's a Motilal Oswal note, and Motilal seems to be fairly optimistic on both. And I think both stocks are a buy for the brokerage as well. Let's bring in Mangalam to understand why. Mangalam?
Well, a couple of things have actually taken place for Eternal and Swiggy over the last few trading sessions. If you look at it, in the last 3 days, two pieces of news have come. One on the upside, where Zomato and Swiggy have actually gone ahead and increased their platform fees by about 15 to 20%. The second was the GST notice that has come in, or rather the GST rate rationalizations increased their overall tax liability by about 150 to 200 odd crores, because now they have to pay GST on food delivery as well, which was earlier a grey area, and now there is clarity. But having said that, despite this little news, Motilal Oswal believes that this is a time to buy Swiggy and Zomato. They have a target price of 560 on Swiggy and about 420 on Zomato. The reason why they say that is over the last few quarters, these companies have seen a perfect storm when it came to demand. But now they believe that this would result in a fair amount of tailwinds in the very near future. So much so that they've gone ahead and increased their growth estimates from 19 to 21% to about 21 to 23% in the food delivery business. And they've also increased their target multiple on the food delivery business from 27 times FY27 earnings EBITDA to about 35 times. So the multiple has increased, growth parameters have increased. And to the GST, they say that it will not impact their food delivery margins by any more than 0.2 to 0.5%. So that's not a major concern. Add to all of this, even the quick commerce business, they believe that peak of investments are over for all the companies. And going forward, they have actually brought forward their profitability estimates, and they believe that contribution margins will only increase from here on for both Blinkit as well as Instamart. So all these factors pointing in the right direction, and as a result of which, Eternal and Swiggy, both of them doing well today.
Okay, all right, got it. Mangalam, thanks very much. Let's ask Dharmesh. Dharmesh, which one? Swiggy, Zomato, or both, or neither?
So from consumption point of view, I would look at the price offering which they have, but from share market point of view, buying neither. None. And the reasons are very simple. I do believe that this volume growth theory will go on, and if Motilal Oswal believes that GST will be absorbed, a part of it would be absorbed by the players in the offering, they can do so. But what I don't understand is when you raise the rating, if you If the valuation becomes very expensive, then how to justify the valuation? You go ahead with, changing the multiple from 27 to 35 times EBITDA. So that is what is, not understandable to my mind. Valuations are very high for both Eternal and Swiggy as well. Swiggy has still to come to profitability path. So we are avoiding it completely. Let the run continue. It may continue for some more time. But I don't think the valuations now looks justifiable from an investment perspective. For new fresh investment perspective, if you are holding it and you still believe in the story that the GMVs will double from here on go in aggregate basis, you may continue to hold. But we are out of that cap.
Okay, all right. So that's Swiggy, Zomato. Very quickly, Dharmesh, one more stock that I had to ask you about because a lot of investors will wonder what to do now is Ola Electric. It's anything but straightforward, to understand what happens. The stock moved from 40 rupees to nearly 70 rupees. And today, suddenly it's down 7% again. What's the advice?
Yeah, it's quite bizarre to see the movements in Ola Electric, and suddenly people are realizing that this GST cut will make it less competitive as compared to ICE player, because now the differential stands only 13% as far as the GST outgo is concerned, and that's the cost of the bike. But for Ola Electric, the last quarter was not great one. If you look at the number of bikes being sold, around 68,000 bikes. And for them to break even, the run rate should go to, on a PAT basis, I'm not talking about the operating profit basis, that to our understanding should be 5 lakh to 5,50,000 bikes per annum. And these are bikes which are being sold, this is not technology. So they have to sell the real bikes in the market, and that's a difficult challenge for them. The run rate, the last number also was less than 10,000 bikes a month. So I have my own doubts regarding when this will pan out. But people are giving it a benefit of doubt. If you just want to stay with this kind of a doubt play, you can go ahead. But we would be looking at it seriously only when, the monthly run rate is 50,000 or more bikes a month. And then it will make sense to look at Ola Electric from its long-term perspective. Because understand one thing, the battery capacity which they have set up, that is for 12 lakh bikes per annum. So still they would have a capacity to go to double their sales, and then the real profit will set up. As of now, we are avoiding this counter.
Very quickly, have you had a look at Urban Company and the valuations at 15,000 crore roughly? How is, is it attractive? Should one subscribe?
No, I have not looked at the IPO of that, so apologies for that.
Got that. Thank you, Dharmesh, for joining in. We will slip into a break on that note. We'll come back and touch base with Tushar Pradhan from Hexagon Partners. Stay tuned.
Okay, absolutely quiet on the indices. The Nifty is barely changed. 3 points up, 3 points down. Ditto for the Sensex. Ditto for the Bank Nifty as well. We need some excitement. That means we need Hormaz in the studio. Let's figure out what's on his buzzers list. Hormaz, over to you.
Well, it's the end of the week, so we'll bring you a weekly special for today's show. We're going to start off with GMDC, and the stock is up 27% this week. This is the best weekly performance that the stock has seen since January of 2022. And this week, we've already seen almost 6 crore shares that have changed hands on the stock. This is potentially the highest volume that the stock has seen in a year. In today's session itself, over 3 crore shares have changed hands. Now look at the 20-day average. That's only 31 lakh shares. And courtesy of this move that we have seen this week, the stock has extended its 2025 advance to over 60% after a negative performance in 2024. The week, though, has belonged to one stock, that is MobiKwik. And the stock is up 35% this week. After the exit from Adia, the stock has only kept on moving higher. And this is the best week that the stock has had since listing. Now, after listing in December 2024, in the 37 weeks that the stock has listed, this is only the 12th instance that the stock has gained on a weekly basis. Now, the daily volume every day this week has exceeded 1 crore shares. And today, we've already had 21 crore shares change hands so far this week. Now, for today's session, almost 4 crore shares have changed hands. 20-day average is 71 lakh shares. And courtesy of this move that we have seen this week, it has trimmed the losses from its post-listing high. At the start of the week was around 70%. It's now trimmed that to around 58%. A stock that Prashant highlighted this morning, Moschip, is up 42% this week. This is the best since June of 2024. There's 1 crore plus share volumes on 4 out of the 5 days this week. And this week has already seen more than 12 crore shares that have changed hands, which is the most on record. And in today's session itself, we have already had almost 3.5 crore shares change hands. And the 20-day average comes up to around 40 lakh shares. The turnover in yesterday's session for Moschip was over 1,000 crore rupees, which is almost what? About around about 4,500 crore market cap and a 1,000 crore turnover seen yesterday. And lastly, Apollo Micro on the list today, 21% higher this week. And this is the 5th straight weekly advance that the stock has seen. It's down today, but in the last 5 weeks, the stock is up 85% from levels of 170 odd. The stock is now up 310 rupees, and 10 crore shares have changed hands every week in the last 3 weeks. And this week has already seen 20 crore shares change hands, which is the highest since June. And today's session, surprisingly and interestingly, 1.8 crore shares changing hands. It's below the 20-day average of 2.2 crore shares. It shows the heightened activity that the stock has seen over the last 5 weeks. That's Apollo Micro for you.
My God, stock gains ranging from 21% to 42%. Who says this is a quiet market? Hormaz, thank you so much. These are weekly gainers that we are talking about. Well, with that, let's go on and welcome in our next guest on the show. Our Alpha manager, Tushar Pradhan, director at Hexagon Partners, is with us. Tushar, thank you so much for joining in. So everyone's asking that same question since yesterday, right? You've got this big GST cut, reform delivered. You have a 7.8% first quarter GDP print. CAD is coming down. The RBI has been fairly generous. Yet the market at the Nifty level remains where it is. What will take, what will it take for the market to make an up move? Your thoughts?
Yeah, I think one of the situations that always confront us is that the market doesn't behave the way that we want it to. It has its own mind, really. But here, when we talk about the market and its ability to move from here, there are two aspects that we have to consider. One is that what are the valuations that most of the companies are trading at, which make up the index? And what is the kind of earnings growth that one can expect from here to justify those valuations? So clearly, from a longer term average perspective, the Nifty is trading still higher than its average multiple. The mid-cap and the small-cap indexes are actually much, much higher than their average multiples. And the delivery in earnings growth, especially for the mid-cap index, has been pretty strong. So it's been trailing 12 months, 21% earnings growth, which kind of justifies its 31 times multiple. But look at the 500. The Nifty 500 has delivered only 7% trailing 12 month. And if you look at the large caps, they've actually not even been very low single digit as well. So I think that's really where the problem is. So no matter what the macro news can be, till the bottom-up earnings momentum starts to pick up, I don't think the market is going to make any move. And I think for that, we need to work and wait for the next couple of quarters.
There's a discernible shift towards consumption, particularly in that auto has been picked out as a favorite. Have you also aligned your portfolio pro-consumption, consumer durables, staples maybe, auto stocks in particular? How has your portfolio changed in the last 1 month in anticipation of the GST reforms, and what's come through?
So I think on consumption, especially on FMCG per se, we are not very excited no matter what is going to happen, because even if there is a change in terms of the volumes, the valuation at which all of these companies trade at are really not exciting from our perspective. When it comes to auto and especially auto ancillaries, I think there is enough excitement there. So we definitely have changed our portfolios to kind of reflect that sort of anticipated consumption coming in. However, the end game is not really very visible. I'll tell you why. Because when we talk of a reduction on GST, there is clearly going to be an increase in demand. But will that translate into something substantial and say multi-year from a structural perspective? That remains to be seen. So there might be a blip, there may be a Diwali dhamaka as they call it, and there may be a surge in bookings, etc. And that's good enough from a sentiment perspective, but I think it also means that we need to be pretty circumspect about what you add and what not to. From that perspective, I think auto looks pretty exciting, and not only the OEs, but I think the ancillary chain is something that we are very interested in at this time.
Hi, good afternoon. Good to see you in. What about the worries with regard to the state finances taking a bit of a pullback? Because GST cut, everyone is celebrating. The center's revenue may not get impacted too much. But at the state level, that could impact various companies, particularly those that are heavily dependent. Do you see that as a worry? And do you see it maybe as uncertain for the next few months at least, which in turn could impact some of these companies?
I don't see how much that will have an impact, because the state finances are clearly something between the center and the state that they will have to work them out. There will be probably a larger share that the states will get from now on because of the benefit which is going away to its treasury. But I think that's not something that companies need to be worried about at this time. I think it's very positive to understand that the whole GST structure has become simplified. I think that is something of a long-standing demand across all manufacturers, where the complexity of the system itself was driving people to the ground. I think the simplicity is something which is going to really take off. And I think going forward, that is something to focus on rather than any dip in the state collection, etc.
Okay, got it. Tushar, but are you in the camp that believes that the single biggest sentiment driver, or the one that can bring back the animal spirits, will be some kind of a resolution on Trump's tariffs? Because in the last 7 days, we've got a good GDP print. We've got this GST bonanza as well, which will be structural in nature. But the market is still, very, very nervous. Earnings obviously will drive everything else. But do you think that will be the big trigger that could see the market yet again get on its way up?
I think so, very much so. Because what you see is that the market always are in the interim driven by news and sentiment. And I think currently the sentiment and the news are bad, given what the headlines are and what we see, largely in our faces. But what is happening on the ground is essentially a change from a macro perspective for a significantly better future. So we are talking about increased momentum in demand. We are talking about rationalization, which is going to be beneficial for a company from a long-term perspective. We are also talking about the surprising level of GDP, which has just been printed in the near quarter. We are talking about an RBI, which is very, very cooperative, I would say, in a sense, allowing for liquidity to ensure that the growth continues. So that's happening on the ground. But actually what's happening on the face of it is all this bad news about the tariff and all the impact and the kind of sentiment attached to it. So if there's any change, and this is really where you hit the nail on the head, that if there is any change, either in the stance that the US currently is taking or an allowance for some kind of in-between, middle ground, then I would think that that will be a tremendous boost for sentiment and it'll change the entire picture altogether. And suddenly all of the things that we talk about which are being ignored will not remain ignored. So for a long time, I think, the news has been pretty depressing. And if there is any change in the news per se, I think we are in for a pretty significant up move from there.
Okay, all right, Tushar, good to see you in. Thanks a lot for joining in. We'll wait by. Hopefully, there'll be some kind of a movement. Mr. Trump goes a little bit easy. Because that seems to be the sentiment driver. Numbers are mattering less, but I think the sentiment driver is definitely what Mr. Trump is going to do next. Slip in a short break, come back. We'll get you some buy and sell ideas. We'll also tell you about what's going on in the F&O market.
Welcome back. Absolutely unchanged on the Nifty now. There's one stock, though, which is doing very well, and that is Indus Stars. The news is that the promoter of the company, Bharti Airtel, has acquired about 69 lakh shares in Indus Stars via the open market purchase. This happened towards the end of August and early part of September. It amounts to about 0.25% in terms of the overall stake increase. But the news is positive because the promoter is buying anyway signals confidence. 2, the stock has fallen a lot. The all-time high on Indus Stars was 499. Current market price is 338, which means a fall of about 32%. And if you remember earlier this week, the stock had fallen when Indus Stars announced its foray into Africa. And at that time, Citi wrote a report. They're saying, in our analysis, the bear case on Indus Stars is 300 rupees. The stock today is not very far from that at 338, which means the downside from here is fairly limited. Brokerages are bullish. So whether it was Citi at 460, CLSA at 520, even Ambit wrote a note today. That's the Ambit note which came today. And they also say all these concerns, risks are overblown. Indus Stars, to their mind, has the best risk reward, the best play in telecom right now, and their target price is 525. And there are 2 triggers to look forward to, and both are, 2 triggers to look forward to. One is reinstatement of dividend, and 2, what happens on Vodafone Idea. And if there is any relief, there will be that rub-off impact on Indus Stars. But the news for the day is that the NSE findings show that the promoter of the company, Bharti Airtel, has acquired about 0.25% stake via open market purchases. So that's just infused some confidence in the stock today.
I don't think the Idea and the Indus move is related, right? Because if Idea sort of finds itself in a better position, usually people bid up Indus as well. But I don't think it works the other way around because obviously, right? I mean, Idea is a going concern, tendency, etc. for Idea's towers. But I'm not sure if it works the other way. I'm not sure what's happening with Idea per se, that is Vodafone Idea, because that is up about 8-9% as well. as we speak right now.
But you know, it could always be read, right? Like if the promoters are confident about Indus Stars and the valuation at here, perhaps again they're confident that Vodafone Idea is going to be in a stronger position. So that's another way to bid up if you have to. Then
but
I mean, you can make the case,
one is
right?
a Bharti company, the other is but yeah. I mean,
you can make the argument.
Make the argument. All right. Well, let's just talk about insurance, right? We were yesterday, of course, focused on life insurance, general insurance. We spoke about health, but what about motor insurance? Yash has been working the phones trying to understand what the impact of the GST sort of changes are on the motor segment. Yash, what are you picking up?
Well, Prashant, yesterday we spoke about the direct impact when it comes to, you know, the GST on health insurance being exempted and how it will increase the cost for various general as well as health insurance companies on every policy they sell. The increase in cost, as we had reported yesterday, was expected to be about 5 to 7%. Now, today, what we've been given to understand, what we understand from industry, is that the other large segment, which is motor insurance, will also have an impact on various general insurance companies. This is an indirect impact, but a big enough impact to talk about. Essentially, GST on cars has been reduced from 28 to 18%. Now, what this is expected to do is it's expected to bring down the insured declared value on which motor insurance premium is decided. So, for example, just giving some numbers, if the price of the car is about 12 lakh rupees with a reduction of GST from 28 to 18%, if the price of the car comes down to 10 lakh rupees, then in that case, the insured declared value or IDV also comes down from 10 lakh 80,000 to 9 lakh rupees, which means the premium which was earlier 10,000 rupees could come down to about 9,000 rupees, it directly flowing in that proportional way. What this means is that it could reduce the premium income for various general insurance companies when it comes to the motor segment. Now, it's a big enough segment. For ICICI Lombard, motor forms nearly 40% of the total business. New India is about 30% of the total business. So, of course, on the health side, we were reporting how the costs could increase for general and health insurance companies. Today, it's a indirect or a second layer impact where the premium income coming from motor could reduce by about 7% because of the GST cut which has been announced on cars.
All right. Thanks very much, Yash, for that. That is the motor companies and motor segments within many of the listed companies which are in focus there. Mayuresh Joshi is with us. He's Director of Research at Mark Smith India. Mayuresh, good to have you with us here. We were just talking about Indus. We were just referring to Idea as well. Any thoughts on what's going on? Price action today?
Afternoon, Prashant. No, I think the promoter buying stake in Indus Stars is something which has propped the stock up. But again, 2-3 key reasons. One, I think the entry into the African markets, it's a hyper-competitive market. And therefore, I think how are they going to place themselves is going to be extremely critical in that aspect. The second element, obviously, is on the core domestic business itself. With its anchor investors fairly, I think, penetrated in key markets, I think the tenancy ratios are going to remain more or less around the same levels that they are at. And therefore, I think an exponential increase in tenancy ratios, specifically from the telecom part of the business, seems unlikely. On the industrial part of the business, obviously, I think there is expectations of steady state growth expected to happen. The third aspect, obviously, I think that the street was probably a tad bit worried in terms of the capex that they have, in terms of their outlay. What probably happens in terms of the overall cash flows and therefore dividend payouts, at least from a near short-term perspective. And therefore, I think putting all these context in perspective, when even looking at the ratings and rankings that we have at Market Smith India, our own sense is that we will be better off waiting for Q2 numbers, seeing what the management commentary is and take a call. Till that point of time, I think largely neutral on Indus.
Mayuresh, if you want to play M&M, but now M&M has run up so much, what's the best ancillary play to M&M, which is a company which caters the most to Mahindra and Mahindra, which one could look at if you want to play this entire recovery and the strength in M&M?
So in no particular fashion related to M&M, but I think within auto ancillaries, I think one of the stocks that we are liking at Market Smith India is SJS Enterprises and Uno Minda both. Our sense is that Uno Minda in particular, I think where they've got a very diverse product portfolio, right from switchgears, seatings, you've got acoustic horns, and the content per vehicle expected to go significantly higher, specifically looking at the new EV technological platforms. Again, from a balance sheet perspective, with input costs stabilizing for most auto ancillaries, EBITDA margins are expected to inch higher. And therefore, Uno Minda's margins at 10.5% can definitely move higher. The expectations from a debt perspective, the leverage on the balance sheet with debt equity at 0.34 times is comfortably placed, and SGS as well. So I think these two ancillaries are something.
Yeah. No, absolutely. Mayuresh, we have the big interview coming up. Network 18's Managing Director, Rahul Joshi, in conversation with Finance Minister Nirmala Sitharaman should be, I think we can cut across to it now.
Nirmala ji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST 2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day. Well, the Prime Minister did announce it from the Red Fort on Independence Day. But even about 8 months ago, he called me once and had a long talk about how GST can be, revamped, looked at, and only from one point of view. He said, look, both from the point of view of the process and also for the common man, the tax rates, is there a way in which we can make it simpler? So I had agreed that I will go into it and come back to him. Then around the budget, when we were talking about many, tax-related issues, he reminded me about the work which has got to be done. And I assured him again that time that yes, the work is progressing and I'll come back to him. So sometime after the budget session was over of the Parliament, I said I'm somewhere close to giving him a proposal, which he can guide me further and so on. And then a bit later, much later, because the developments of May, April, when Operation Sindoor had happened, and after April, priorities have been on very many different grounds. And when next opportunity came, I went, gave him a detailed description. Is that I just want, as I said at the first meeting, the simplistic or simplified, not simplistic, simplified way of doing business. So I don't want small businesses sitting at the computer, getting the auditor to do it. And also, like the way we did in the budget, respecting the middle class, respecting the taxpayer, respecting people who are really the ones out of their salaries giving the tax. We need to do something for the day-to-day indirect tax, which falls on every Indian citizen in some way or the other. So this tax is something which touches the lives of every citizen, and therefore we need to be a lot more sensitive. So I went back with this comment, redid it, sharp focused it, and that's how this proposal came. And we, for the first time in GST's history, Council's history, the centre has come up with a proposal. Till now, it used to be the group of ministers which consisted only of state ministers. Never has the centre been a part of any GOM. This is the first time, both in the case of the compensation cess, where the MOS finance, central government, was the chair to decide how to handle the closure of the compensation cess, and a comprehensive proposal as regards GST being given by the central government. So it's unique in very many ways. Every rule of the House, of the Council, had to be looked at afresh, even to put the proposal. So I'm glad it went through the whole grind, didn't ignore any rule or expectation or the law of the GST, and has gone through.
And taking everyone along, unanimously.
That's right.
At the heart of this is obviously, the common man. In fact, Money Control had put out a tweet saying that how it also impacts, it is the health of every citizen in India, to which the Prime Minister, in fact, said that it is also to do with Swasth Bharat.
Yes.
So what was the driving motivation, behind this bill?
See, I had to do a dredging kind of an exercise.
Yes.
Where every item which comes under the GST, goods or services, had to be looked at, not just by their codes, not just by their names, but to regroup them from the point of view of daily use items, that which is consumed by citizens, middle class, the poor in particular, and then you looked at those which are going to hit the farmers, those which are going to hit the middle class, and so on. Because eventually, daily use items or items which are necessary for this transition of India from a emerging, developing economy to a Vikasit Bharat cannot be on the back of, just the approach of we need more development, bridges, roads, some contracts for works and so on, but also that the aspirations of the growing families will have to be met. So we had to regroup them in such a way, okay, this is essential for, let's say, the families, poor middle class families. Of course the rich will come in. So what do we do as a treatment for it? But even as we were talking about this, we are talking about the classification of goods and services. I, without any hesitation, will bring that example of the popcorn. Why am I saying hesitation? Because I was pilloried on it.
Yes, absolutely.
But that tells you the problem of classification, where we brought in a system, no doubt, which was an improvement of over the pre-GST era, where every state defined its own and had its own rate and so on. So GST in 2017 was an improvement over what was earlier. But it still required some more simplification, and that's why this exercise. And in the case of the popcorn, it led to a lot of litigation, courts coming up with different kind of voices, and states losing revenue because of the classification being different, people chose to have the higher taxed sugary, chocolatey popcorn shown in as a salted popcorn, because that has only very little tax on it. So this arbitrage, because of classification, had to be overcome. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed. Like that, I think it was one of the, for me it was a fascinating exercise. It was rigorous, it took a lot of my time and time which would have gone in for something else. But I think this was absolutely rewarding an exercise, because you brought in that temperament, which is so important, that citizen looks at these things in one particular way. Revenue is not the consideration. So that helped us.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already. through the income tax cut. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah, have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move, to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset, and so on. It is with the agreement of these GSTN related technology managing team related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on September 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. When the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party, finance ministers from Congress ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence, that one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence,
yes,
is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
Nirmala ji, this has been widely hailed as one of the dramatic reforms of this government. Obviously, a dil mange more. So, what next? You know, PM has set up 2 official level committees on next gen reforms. 2 group of ministers have also been formed, headed by Amit Shah and Rajnath ji. What can we expect in the coming months? What is the idea going forward? How do you look at reforms in the bigger picture?
Quite a lot of work was done about the next set of reforms which we need to undertake, even prior to 24 Lok Sabha elections. And then some departments moved, like ours moved faster. There are other departments which are moving faster as well, whether it is looking at the environment-related issues, sustainability-related issues, opening up for private sector, sectors which have been the domain and the privy of the government. These are things where lots of action is happening. Various departments are moving. The science and technology is moving very fast. IT is moving very fast. IT as in semiconductors and other things. So that big area of reform, if you ask me, in which these 2 committees will look at, and also the committee which is headed by former Cabinet Secretary Rajiv Gauba. Right. I expect reforms which will have to now trickle down rather than remaining as a domain of only the union government. The state governments are somewhat also moving towards reforming on very many scales. But the third layer of India's democracy, the urban local bodies and the panchayats, is where the next forceful action has to move. Otherwise, the speed with which we want to move India and the aspirations to be met in India for people to live in a society, live in a country which is fairly developed, and our citizens get their aspirations met. I think we have to take the reform agenda just not to the states, but also to the third layer.
As I move to discussing the GDP numbers for Q1, just before that, another last question on GST, which is how will you ensure that you pass on the benefit to the consumers? We've seen anti-profiteering in the past, so how do you plan to tackle this? Is there a way in which the government is looking at it? How do you ensure?
At the moment, there isn't any particular mechanism that I can say I have, but I certainly am seized of the question. Also coming from many citizens themselves who are saying, it's great that you've done this, it's great that you're bringing in this kind of a drastic cut in taxes, but how will you ensure that we'll benefit from it? And how will you ensure that it's not going to disappear on the course to reach? We'll have to keep talking with industry, we'll have to nudge them, we'll have to... I'm glad in the case of the insurance sector, the public sector insurance companies have come forward to openly say that they will indeed pass the rate cuts to the citizens, those who are taking the insurance for themselves. So I'm sure the private sector would also do it in insurance, and so with other things.
You're expecting them to announce that they will pass on the benefit?
Many of them are doing it.
Couple of them have, some of them have announced. So Q1 GDP numbers are heartening 7.8%, at a time when President Trump said that, India is a dead economy. How do you react to something like that?
I may not be able to comment on, let's say, foreign head of the state commenting on it. But in India, one line which I keep repeating several times, probably even once when I met you once earlier when we chatted like this. It is the cynics within India who worry me. It is the naysayers within India who worry me. Assume somebody had said it, a head of state has said it. Building India together, and all of us together building India, are we going to carry those tales or stories or observations which somebody else says and then repeat that here, oh, you know, so-and-so has said this, India's a dead economy, we knew it, this is happening, that's happening. India requires its citizens to be respected. They are toiling and struggling and working to build their families and their economies, their own personal family wealth and whatever. At this time when we are trying to create more opportunities, do we need the naysayers to even borrow such observations, be it as it may that it is coming from a head of state? Do we need our own people to use these expressions? It is undermining not the government, you're undermining our citizens' efforts. And a responsible opposition, I wished didn't repeat these lines, but I think it is, I would react only to what our people are saying rather than a head of state elsewhere.
No, five quarter high number, I think it gives us a lot of confidence in the Indian economy.
And also inflation coming down.
Yes.
Drastically coming down.
Yes. But it brings us to a related point, which is on the point of tariffs. Now that, you know, tariffs with the US are at 50%, what is the likely impact on the GDP going forward? There are various estimates by various sort of consultancies, you know, from 10 basis points all the way to 100 basis points, some have predicted. Where do you see the impact really of this?
But with the reform like this, many of that should be offset.
Yes.
You know, so it is never a situation of a one fixated point. It's a dynamic situation where you're moving from one to another with newer players coming in, newer factors coming into play in this scheme of things. This one, you have the GST reforms, which is going to make people understand that they can fetch more things with the same amount of money with which they bought some amount earlier. So it is very clear that industries have been speaking about the tariff and its impact. The government has designed something for itself. We will come out with something to handhold those who are hit by the 50% tariff from the US. This has been said earlier. I've met up with the delegations when I went to Chennai in recent past few days. I have said this there and I will repeat it. Government is working.
So will they be like allowed to sell in India, or how do you plan to alleviate their concerns?
No, there is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge. But we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs. Whether in terms of rates, logistics, anything. So where we buy our oil from, especially being a big ticket foreign exchange related item, where we pay so much out of our pocket, highest in terms of import, we will have to take a call which suits us best. So we will undoubtedly be buying.
Another question about, you know, the officials of the Trump administration have been using really hurtful language against India. You know, saying that we are Brahmins profiteering at the expense of, you know, ordinary Indians, or, you know, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government, head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India. Oh, don't you all know, don't you, I mean, you know, dirty, unwashed Indians, you don't understand what this expression means? This is how, you know, this is explained. Who wants these explanations from Indians? Who actually wants us to know better? And who are these people explaining to us, you know, this expression is used in this context? Yes. I'm outraged by that. I don't want explanations to justify that. Whether I'm going to have to deal with them, stand up and challenge them or retort is a different story. Right. But Indians quoting those words and telling us, oh, you dirty Indians, you don't know this colonial justification of the language that is being used against Indians, against such countries which have come out of its colony and from its empire and stood up to build its own country with its own self-confidence. And even now when we are talking about Atmanirbhar, it's not just in terms of producing everything in your country. It's also about being
self-reliant.
There is no self-respect.
Self-respect.
As much as you want everything produced in India for Atmanirbharta, you should have something of a self-respect. If somebody is saying, all of us in one voice should respond to it, rather than have a few of us justify it by saying, don't you all understand it? Are you a part of the imperialists? No. I'm outraged more by that.
Yeah, the opposition picking up this and, you know, making it their own narrative.
And saying...
Like dead economy was picked up by Congress, Rahul Gandhi to
and
say.
Even for this, Brahmins are being are the ones who are benefiting out of it. Oh, you Indians,
us Boston Brahmins.
Yes, Boston Brahmins. Oh, you Indians, you don't understand this Russian oil purchase is to help Brahmins to benefit of it, and you are being fooled. Exactly the same divide and rule principle which the British used here, which the imperialists used here. And even today you have the friends of the imperialists telling us, no, you know, the expression Boston Brahmin is this and not that. Who damn cares? I'm sorry. Yeah. Who damn cares? I want Indians to think for ourselves. I want those Indians who are now defending that language to get up and say, we are free from you all. Now for over 75, 80 years, we'll mind our business, we'll take care of ourselves, refrain from using these words. Should have been that voice. That not being the voice, and Upar say to teach us saying, don't you know the meaning of this expression? Outrageous.
Today we've got to know Nirmala Sitharaman ko gussa kyun aata hai. Now, moving on to economy, any plans to liberalize FDI or FPI regulations further?
I do not want to give a headline, but certainly we are looking at every aspect of reform.
How do we, this is probably the right time to, you know, assure foreign investors to invest in India. What are some of the steps that we should take that would, you know, give them this confidence? You know, I mean, this one was a big one in itself, but going forward.
First thing I think our institutions such as Parliament should debate issues, should question government on the proposals, on the policies, on government's actions. That gives confidence to people saying India's democracy actually literally discusses these issues. Without that, the government can go about doing what is right for the public. But the institution of the Parliament is not being used for its prime purpose. Why is it important? It gives a feeling that both the opposition and the ruling parties are talking on issues. Instead of holding placards and standing in the House, if there is a meaningful discussion, it will convey a lot about the policy strength. That is one thing. Second, our regulatory institutions, and I've said this before, but I'll repeat it here. Regulatory institutions should not go to the extent of micromanaging. I want businesses to do their businesses. They have powerful boards which run them. And the regulator, in consultation with the stakeholders, should allow them to function, of course, keep a watch, and do a soft touch regulation. If regulators across the board, I'm not talking just of the finance domain regulators, all over, should have a open-minded approach, a soft touch approach, above all, not micromanage businesses.
You know, private investment has been a topic of discussion. How do we revive animal spirits, for the private sector to invest? This has been a, discussion that we've been having over the course of many interviews, and you've been also exhorting the private sector. How do we get about?
But I think, to be fair to them, they are moving in.
Okay.
And they are taking decisions about how they want to expand.
So you see a significant change?
I see a significant change, and I see that enthusiasm now in wanting to understand how things will move from the industry. And I'm sure they are conscious that opportunities lie in India and they should do things.
How would you react to S&P's, India's sovereign rating by S&P, which has gone up? High time, would you say?
Yes, and it is, I think, as a result of a lot of work done by the Department of Economic Affairs, the Chief Economic Advisor. They have been persistent with talking with them, giving them adequate data-based information, and their conversations have actually today shown us the result. And I'm glad that they're doing it. They should continue doing it with other agencies also, because with our growth being with what it is, with our fiscal, macroeconomic fundamentals being what they are, with our inflation being under control, with our foreign exchange growing, with our stock market being so buoyant, it is difficult to understand how parameters of similar and comparable nature elsewhere attract a much better rating, whereas ours don't. And conversely, parameters which are worse than ours seem to be having better rating. Just can't explain it. So I think the work of the DEA and the CEA is well cut out in this regard. They will have to work with agencies.
Nirmalji, you're right about all the macro indicators looking up. But revenue growth for corporate India has remained tepid. It's at a 7-quarter low of 3.7%. How do you explain that? GDP on one hand growing at 7.8%. What really accounts for this?
I think it's also a question of how they're deploying their resources and how they're earning out of it. Businesses will also have to look at the way in which their risk-taking capacities can increase, and that's what is going to be the prime mover in terms of revenues for businesses. So, but that's a business call. It's not for me to say.
Right. Nirmalji, India and China are now mending sort of fences. So, right now it is at the level of resuming the flights and giving visas to each other. But what could be the next steps? How could we make the Chinese markets more accessible to Indian companies? There is, of course, a huge deficit of $100 billion here. So how do we do that? I mean, what are the next steps?
There's just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese. Unless we do that, and unless there is a true engagement and not a procrastinating engagement, you may talk as much as you want on these issues. I've done it myself. And to have a conclusion arrived at takes a lot of time with the Chinese. Sorry. Market access is something which has not been realized despite our almost a decade-long engagement with the Chinese. In between, everything had come to a halt. But on both these issues, there should be meaningful conversations. Otherwise, the very products that we want to export to China go through different destinations to China. But why can't it go directly?
Yeah. And will it also be reciprocal? I mean, Press Note 3 prevents investments from China to India. So would you look at, doing something about that as well?
As it is, I think in one or two cases, particular cases, we have relaxed some of them. And in those sectors where their technology has come in and the technicians and also the experts had to come to actually see the projects through. We've not allowed these experts to come. That has now changed. In some sectors, people are coming in. The projects are already on the ground.
So India will be open to that idea?
Of course.
Yes. Nirmala ji, you've ushered in the boldest of reforms. I say this in every interview that we do because you corporate tax cut. I mean, that was a phenomenal sort of move. Then after that last budget, we have income tax rates going down. Now GST2, as I called it. So, one thing that we probably haven't seen enough is on private disinvestment. What would you say to that? You did sell Air India, but after that, things have been slow.
You'll see action in that also.
This year?
Yes.
Oh, that's great news. Any deadline for strategic stake sale in IDBI Bank?
No, I think the secretary has already, DIPAM secretary has already spoken about it. IDBI is moving quite fast.
Okay.
And I expect it to be concluded this
financial year? Okay, and any more banks which could then be looked at after this?
I wouldn't say any more banks. I'm not negating anything.
Right.
But yes, more disinvestments.
More disinvestments, okay. So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely
of course,
fine.
Yeah. So, Nirmala ji, we are again, near an election. Bihar elections are coming up, and before every elections, we have seen all political parties dole out reveries, and we've discussed this in previous, encounters as well. Does this worry you? State after state, promising welfare schemes, doling out reveries, and how does it all really add up for a country like ours?
I think I'll speak for all finance ministers.
Yes.
It is a very, very difficult thing. To have a scheme approved and also budgeted for is not wrong. And I would approve of that, because that at least takes the view of the legislature and also makes it public about how they are financed, and therefore also brings in that responsibility to keep your revenue generation equally attended to. But what most often happens, not so much with Prime Minister Modi's leadership, but I can say what generally happens is you give away a promise. Once you have to come to fulfill it, you're searching and scrambling for resources. And if you're an opposition-ruled party, it is very quickly arsenal in your hand to say central government is not giving me money. That's the biggest unsustainable argument. I'm more tempted to say bogus argument. Because you give a promise, you win the election, you come to power, and then after that you're not able to fund it.
Yeah,
why would you want to?
A lot of cases.
Yes, why would you want to throw the blame at somebody else, particularly the union government?
Yes.
So these kind of sort of recklessness in dealing with public finance has got to be discouraged. There's no doubt on it.
Nirmala ji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
One more question was on the decision to ban online gaming, which came as a surprise to many, especially, after many years when people had poured in a lot of money in that business. What was the thinking behind this? How do you assure people of consistency in sort of decision making at a time like this?
No, what is the time? What is so special about the time like this?
No, what I meant was that, a lot of investments had come into that sector.
No doubt.
Yeah.
We have not banned games which are for recreational purpose.
Right.
We are still online games for these things are not banned. It is only when you start betting with money. And why is it? Not because we want to say we don't like it. It's a question of the number of people who came to say families are getting absolutely shaken up.
Yeah, that's true.
Their monthly bills are shooting up. And children cannot be controlled from the temptation. And many children, in fact, I wouldn't mind even saying this. There was a finance minister who once met me in a very different context.
Right.
And he narrated an incident of his own family, where his own grandson, who's a very good person, the child is a very good child, well groomed and well brought up,
right,
used his credit card for just one day for some other purpose of a family's genuine buying requirement. He helped them because children are very savvy. Post that one another day, he picked up the card and said, I want to just do something. They said, all right, please. Because they never suspected this child as, into games and into betting and things like that. So the boy used the card and played and gave back the card. Again, probably he did it 2 or 3 times more. Phenomenal increase in the bill that month. And that's when the grandfather sat up and said, what's going on? Let's check up. And this grandson told him right in front of him that it was all free. I didn't go into any money playing game.
You didn't know.
So the methodology is, say it's free, you get in, and for the duration of time that you've played, some kind of a charge is put, and again tempts you to go into another round, and so on. So the adolescent child is under the impression that he's playing a free game.
Right.
But he ended up paying through his nose. So that's a classic example, but many people approached us, the PMO and so on, and said, this is ruining our country, ruining our youth, please do something. That's where this bill has come.
Okay. No, understood. The rupee is at an all-time low against the dollar. Does it concern you?
It is, I've said this and I'm going to have to repeat it, it is only against the dollar that the rupee is highly volatile. Whereas rupee is not affected similarly by other currencies. So, and there are countries in emerging markets and even in developed countries whose currencies against the dollar are weakening. So it is an issue on that aspect and at that level about the volatility as a result of the strengthening dollar. It's not rupee getting weakening. I know I've been trolled immensely for saying this, but this is the truth. So.
Okay, thank you. Nirmala ji, one last question. For profitable companies with over 1,000 crore turnover, 2% of their profits go into CSR. Now, at a time like this, when MSMEs are facing a problem because of tariff issues, etc., is there any thought to take a relook at this for a little while?
Nothing before me as yet.
Okay.
If there's anything, I'll tell you, but there's nothing.
All right. Nirmala ji, thank you so much for your time. Thank you for patiently answering all our questions, very candid. And heartiest congratulations on yet another big reform, GST2 or rationalization of GST. Thank you so much for being with us.
Thank you very much.
Hello and welcome to Business 360. I'm Shireen Bhan. The big stories that we're tracking for you this evening. The market ends flat for the week following a range-bound session on Friday. The Sensex and the Nifty regained last week's losses. Both indices up over 1%. All sectoral indices record gains this week, except for the IT index. Finance Minister Nirmala Sitharaman speaks exclusively to Network 18 days after the Council approved the big GST bonanza, says 100% the needle will move on consumption after the rate cuts, clarifies that petroleum and alcohol will stay out of the GST in the near future, adds the government will adhere to its capex plan and its fiscal glide path. Finance Minister says India is open to relaxing stringent rules imposed on Chinese investment, but also calls for a meaningful dialogue with China on improving market access for Indian companies. Says a lot of work needs to be done when it comes to trade and business ties. Captains of India Inc. welcome the GST rate cut. Britannia's CEO says the reform should foster a demand-driven environment, as the company will figure out how the rollout will increase grammages as soon as possible. Titan CEO says the rate cuts will increase money in the hands of the customer. Bata's MD says the GST cuts were timed perfectly ahead of the festive season. The Electronics and IT Secretary S. Krishnan expects a consumption spike in white goods on the back of the GST rate cuts, forecasts a spillover effect in downstream industries, says he expects the industry to repay government's trust by transmitting cuts. That's an exclusive. Top private life insurer expects minimal impact on their embedded value after the GST Council exempts insurance premium from GST. HDFC Life, SBI Life and ICICI Pru forecast an impact of less than 1%. President Trump hosts tech CEOs at the White House. Meta founder Zuckerberg, Microsoft founder Bill Gates, Alphabet CEO Sundar Pichai and OpenAI founder Sam Altman in attendance. Trump calls them a high IQ group leading a revolution in business, vows to impose tariffs on semicon companies not shifting production to the US. Israel claims it's captured 40% of Gaza City, says it plans to expand operations further. At least 44 Palestinians killed in Gaza in the last 24 hours. The Hamas-led health ministry claims children account for 30% of deaths since the war began in 2023. Well, the day's market action to start with, as always, the Indian market closing the day flat after a range-bound session. The Nifty did hold on to 24,700. Auto stocks saw gains continuing, while IT stocks were down in the red today. For the week, let's bring up the Nifty and the Sensex for you, up by about 1% apiece, and the Midcap index higher by about 2.5%, so recouping the previous week's losses. That's where the markets have closed for the week. Now, let's go across to Prashant. He joins us to wrap up the market action for us. Prashant, it's been a big week on account of all the announcements that have come in on the GST. How are we set up now for trade for the next one?
Still digesting the GST announcement, Shireen. The week Friday to Friday, basically we were up, but it didn't feel like it was a big one, just in terms of the price action, right? Individual sectors, individual stocks, of course, there are sharp rallies, etc. But on a headline level, it'll come up on your screen. The Nifty 1%, the Nifty Bank about 0.8, Midcap index ending about 2.25% higher, small cap index about 2.5% in the green as well. Sectorally, there were pockets of strength. So metal index was up about 5.5%, the auto index 5% plus, capital market index up 4.5%, and the consumer index was up about 3.5% as well. So this was basically a continuation of the move, especially in sectors like auto, consumer, etc., which started when the Prime Minister on the 15th of August made announcements, made the promise that GST rationalization will happen. So coming into the GST actual announcements, these rallied happened. Post-GST, the actual announcement, as it so often happens in markets, a bit of sell, buy the rumor, sell the news kind of happened. Not exactly sell the news, but there was, of course, as you put it, I think it is more digesting the gains which had already come through. IT was the only large sectoral index which was down on a weekly basis with about a 1% cut. You look at the big winners this week, stock specific, Mahindra, really top of the list on the Nifty, at least 11%. Tata Steel, Eicher, Bajaj Finance, between 7 and 8% across the board. The cuts coming through largely in IT services. HCL Tech down 2.5%, Wipro, Infosys down about 2% a piece as well. And of course, there are sharp rallies. There always are. Single stocks, NetWeb 34% this week. GMDC 26%, TBO Tech, Bata India, of course, it's a big footwear as a category is a big winner. And we, by the way, had the management of Bata with us on Friday. Keynes, Samman Capital, CNBC story confirmed with regards to top leadership change. BSE was up 11% and Ola was up 11%, even though on Friday it sold off about 7-8%. Cuts, of course, will also come up. Honeywell, Intellect, Vari, but nothing really very large. As you said, what next? There is a lot which is stacked up, lots of moving parts as far as markets go. And it's been more local with GST, but I think the attention once again starts to shift on US Trump tariffs and, of course, the response to those Trump tariffs. So 8th of September, you've got the virtual meeting of the BRICS leaders who will discuss the response to Trump's tariffs, trade policy. There is the FOMC meeting on the 17th of September, so not the coming week, but the week after, where rate cuts are expected. And, of course, the festive season kicks off later on the 22nd of September when these GST cuts also come into effect. So I think, you know, markets will wait and watch for the kind of response that one sees. Remember, Shireen, across sectors, you know, when you get on the 1st of October, when you get monthly sales data for September, it's going to be largely a washout because, you know, companies report out of factory numbers and, you know, there is enough inventory piled up across lots of sectors. So it's unlikely dealers would buy more in the month of September. So I think that is something which in the very near term, markets are cognizant of as well. Back to you.
Well, many thanks, Prashant. And speaking of President Trump, he's tweeting already or truth socialing already. He's posted a picture of Prime Minister Modi, President Xi Jinping and President Putin. And he says, looks like we've lost India and Russia to the deepest, darkest China. May they have a long, prosperous future together, signed President Donald J. Trump. So that's the latest missive there from President Trump. But let's go straight to the big newsmaker of the day. Finance Minister Nirmala Sitharaman speaking exclusively to Network 18's editor-in-chief Rahul Joshi. Days after the GST Council approved the mega GST rate cuts, the Finance Minister said she was absolutely confident that the needle will move, in her words, 100% on consumption after the GST cuts. Clarified that petroleum and alcohol will stay out of the GST in the near future. Remember, they were not part of the centre's proposal. Also added that the government will adhere to its capex plan and its fiscal glide path. She said, my fiscal math is absolutely fine. She also said that India was open to relaxing rules imposed on Chinese investments, but has also called for a meaningful dialogue with China on improving market access for Indian companies. Also importantly, the finance minister saying that the government is working on a package for exporters. Remember, exporters have been hit with that 50% tariff by the Trump administration. And the finance minister said very clearly, we cannot leave our exporters high and dry.
You know, you've put more money into the hands of the consumer. You know, you brought down for the middle classes, the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut.
Right.
The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. Okay. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods. Yeah. So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I mean, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit,
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path.
Right.
I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have
and to... And you don't see that happening in the near future?
Not in the immediate future.
And you can catch that entire conversation with Finance Minister Nirmala Sitharaman at 5 p.m. and 9:30 p.m. right here on CNBC-TV18. Well, the government is working towards finalising a special package for MSMEs to soften the tariff blow. Remember, you just heard there from the Finance Minister that the government was working on putting a package together to alleviate the pain that exporters are facing. Shivani is standing by with more details on what the likely MSME package could look like. What are you picking up from your sources, Shivani?
Well, yes, the government is drafting what sources describe as a comprehensive mega package for MSMEs, specifically the small and medium exporters, who are collectively facing losses of approximately 45 to 80 billion US dollars due to 50% US tariffs. At the heart of the blueprint could be 5 new schemes modeled on the COVID-era credit guarantee programs, but tailored, of course, to the current challenges. The schemes will be designed to provide easy access to working capital so exporters don't run into liquidity crunches. Second, they're also thinking of expanding the collateral-free loan limit to 20 lakh rupees from the current 10 lakh, easing credit flow for smallest enterprises, offer targeted interest subventions to bring down lending costs, unlock equity financing is also one of the plans that is being discussed, allowing firms to raise growth capital without adding to debt, and introducing sector-specific support windows for the most vulnerable industries, which is the textile, apparel, gems and jewelry, leather, engineering goods and agri-marine exports. On top of this, the government is also weighing indirect tax reliefs from recent GST cuts to faster, smoother ITC refunds, which could immediately free up cash for MSMEs. The broader goal is to ease working capital stress, protect jobs and buy exporters crucial time as they search for new markets. In fact, many exporters are already experimenting with nearshoring through Bhutan and Nepal while diversifying shipments to other destinations. Now, the message here is very clear. The centre wants to shield India's employment-intensive export backbone from the external shock and ensure the sector continues to power growth despite global headwinds. Back to you.
Many thanks, Shivani. And you can catch our special coverage on the GST rate cuts, where India Inc. will quiz top policymakers. That's coming up for you at 4:30 p.m. right here on CNBC-TV18, the GST helpline. Stay tuned for that. Up next, Electronics and IT Secretary S. Krishnan expects a consumption spike in white goods on the back of the GST rate cuts, forecasts a spillover effect in downstream industries. An exclusive conversation when we return.
Hello and welcome to this special broadcast right here on CNBC-TV18. The last few hours, we've seen dramatic landscape developments. On one hand, we've seen sweeping changes that have been announced to the GST rate structure, GST Council making a unanimous decision for rationalization of GST rates across various product categories and services, also very many products as far as the electronics industry is concerned. But that's only one side of the story. The other side, of course, we've seen 3 days of hectic action at Yashobhoomi in New Delhi on the issue of Semicon India 2025. We've seen big announcements coming in from the Prime Minister, from the Ministry of Electronics and IT. To tell us about all of these issues and a lot more, I have with me Secretary Krishnan. Mr. Krishnan, thank you so much for joining us.
Thank you for having me.
For being a part of this conversation. Let me begin by asking the latest decision that we've heard from the GST Council. Late last evening, we had the Finance Minister announce that there's a new rate structure in place, 2 slabs only, 5 and 18%, with a 40% caveat for certain exclusive products, sin products, luxury goods. Amongst the rate rationalization we've seen, very many products fall under your ministry, whether that's air conditioners, televisions, dishwashers, photovoltaic cells. What's equally important is that 22nd September is when they're kicking in. I just want to get a sense, what is your expectation, what is your assessment of the impact this will have, consumption stepping in just ahead of the festive season?
I think there are 2 or 3 things which are important here. The first and most important thing from an industry perspective is that rate simplification in GST and reducing the number of effective rates is a huge ease of doing business improvement. Sure. It ensures that problems of classification, other issues that companies typically have are reduced considerably. Sure. So I think from that perspective, this is a very forward-looking, much-needed reform, and I think it's a very significant reform. Now, it also so happens that when you've eliminated the 28% rate and you've brought it down substantially by 10% to just 18%, a large number of goods, particularly in the electronics sector, fall within that category. In addition, a large number of white goods and other goods of mass consumption which use various electronics parts as inputs also fall within that categorization. Now, it should, as you pointed out, coming as it does just on the eve of the festive season, certainly help consumption and lift the spirits in terms of consumption. And it plays on the idea that India is a big market and Indian consumption itself can contribute significantly to the growth momentum in India. So, and for the electronic sector, that is important as overall volumes of consumption increase, as more gets consumed, and downstream, all the players in the industry clearly will get benefited. So I think that's a big plus.
One of the questions that we had been asking on what the fiscal impact is likely to be, the response that the Finance Ministry appears to be giving is that there is a consumption effect that will take place through the rest of the fiscal. What is the kind of consumption-led boost that you're expecting in terms of some of these products that we're talking about that will offset any fiscal impact?
No, you're pushing me back to older memories, but typically in all of this, it follows something called a J curve. So you might have a fiscal impact which is immediate, but I think it will pick up in due course and go up fairly quickly. And clearly, I mean, a decision of this kind would be taken with an eye on the fiscal impact. But in the long run, I think every such reform actually only pushes the growth momentum forward. I think experience has shown us that.
One interesting caveat is that no anti-profiteering provision this time. Is there confidence? Have you had conversations with the industry in terms of transmission of these lower rates?
We have been informing industry and we have been in touch with industry about these measures, and we expect that industry will repay the trust which has been reposed in them by ensuring that they pass on these benefits to consumers, because that's the only way that they will see enhanced demand.
Sure. One final question on the issue of GST, smartphones. An industry-led demand was that we should have 18% go down to 5%. That's not happened, and that's come at a time when the demand for smartphones domestically has been sluggish. Is there room for making a case for lowering?
I mean, it depends. I don't want to go into a case-by-case issue of which goods should be at 18 and which goods should be at one particular percentage. there are always going to be two sets of views on something like this. There's a balance which has to be struck. Clearly, when you're rationalizing the rates, not everything will come down. And not everything will come down to the extent to which you want it to come down. So I think it is all right. I mean, it is something which, and as far as India's demand is concerned, I think we are actually talking about a saturated market, or near saturated domestic market for mobile phones. Annually, in the last 3 years, it's been a little north of 300 million units, about 30 crore units being sold every year.
Yes.
Now, there is a replacement cycle and the population has been covered, so you can't expect that kind of growth now from the domestic market as you did in the past.
Sure.
So the future markets that we need to be looking at are really export markets in this space.
Sure, sir. Let's also talk about Semicon India 2025. A stellar gathering of leaders from across the world. What, to your mind, were the biggest takeaways that you walk away with from Semicon India 2025?
I think the biggest clear and biggest takeaway is the enhanced level of confidence that the world has in the way that India has approached the semiconductor push in this round. And the fact that between last year's conference and this year's conference itself, they can see so much on ground that has actually been achieved in terms of the number of companies that have been approved, in the way the work has gone on, and the fact that the first Indian chips are already out, commercially produced Indian chips are already out. So I think the impression that people have gone away is that we have walked the talk literally in this space. And as a result, the possibility of further investments and further momentum to the sector is clear. But let me make myself clear that I think India is a long way from being a major semiconductor player still. There is a way to go before we get there. That is the vision. And the Prime Minister himself pointed out clearly that there will be a long-term commitment to the sector to make sure that we achieve that vision. So there is, we have to put our heads down and continue to do that work to make sure that the Prime Minister's vision is realized.
Hello and welcome to our special broadcast, the GST Helpline. I'm Timsi Jaipuria. The union government and states undertook a massive overhaul of the country's goods and services tax regime in a bid to boost consumption ahead of the festive season. Here's what happened. The GST Council, India's apex decision-making body on GST, have decided to scrap the 12% and the 28% slab. There is a tax slab for 40%, GST as well, but it would be limited to sin or super luxury goods or demerit goods. Finance Minister Nirmala Sitharaman told us exclusively that 100% the GST cuts will move the needle on consumption. India Inc. has, of course, welcomed the GST cuts. However, they have also sought clarifications on several matters. Today, we welcome two top policy makers to clarify on their queries. I am now joined by DP Nagendra Kumar, former member of Central Board of Indirect Taxes and Customs. Also joining me is Sanjay Mangal, Chief Commissioner of CBIC Meerut Zone. Sai Girdhar, Vice President of Federation of Auto Dealers Association. He also joins us. A very warm welcome to all three of you. Let me first begin by going directly to Sai, because he represents the industry of the automakers. What are your queries, Sai? And yes, we have both Sanjay Mangal and DP Nagendra Kumar answering them.
So thanks a lot first for giving us this opportunity for asking the direct questions from the guys who are mainly in the in charge. So my question is simple, sir. As we all know that the country heads into the peak festival season, and you'll all agree that glitch-free implementation will be the key to ensuring the benefit seamlessly reaches customers. And while GST 2.0 subsumes the earlier compensation cess regime for automobiles, dealer today holds a significant, validly availed compensation cess balances in their electronic credit ledgers. Without a transitional pathway, credit risk lasting, creating an unintended permanent loss and sharp working capital shock for all of us. Sir, you will agree that ITC availed under Section 16 of the CGST Act constitutes a vested right protected by the legal precedents, and more so, the GST framework is designed for seamless flow of credit. Lasping of cess balances would contradict this fundamental principle. And even at the time of the introduction of GST, the transitional credit for excise, service tax, VAT, were permitted under section, if I'm not wrong, 140. A similar mechanism is justified for the cess leaved under the GST. So our prayer is simple, our question is simple. As on day, the press note and the FAQs which have been released by the ministry, they don't talk about any treatment on the compensation cess for automobile dealers. So it's a request from our side that whatever the balance is there, as on 21st of September 2025, may be allowed to be transferred to either IGST or CGST, and such balances may be utilized to discharge the liability against GST.
I would like DP Nagendra Kumar to first answer this. What should the auto industry do to the balances that will remain in the compensation cess account, because that can be set off only in terms of compensation cess? So what should they do?
Ma'am, I'd just like to add one more thing out here. This amount which I'm referring to, it is a substantial amount of working capital of dealers across India. And I don't think under any circumstances anyone can risk for lapsing or probably ignoring or forfeiting this amount.
I think thanks, Timsi, for having me.
What should they do?
Yeah, thanks, Mr. Timsi, for having me in this panel. I think, as you rightly said, I think the compensation cess was levied for purpose of compensating the states who otherwise would have not met with the assured revenue growth rate at the time of introduction of GST. And it had a life of about 5 years, which culminated on 30th June. The cess which continued to be collected is only towards the repayment obligations of the loan taken by the central government, and including the interest obligations. Now, when we are transitioning the cess into the basic rate of GST, I think the cess becomes extinct. Now the question comes with regard to what happens to the compensation cess which remains in the electronic credit ledger insofar as the automobile manufacturers are concerned, or the suppliers. Now, while the industry is facing with a huge challenge in terms of liquidating this compensation cess, but the fact of the matter which we all have to appreciate is this: a tax which is levied under a specific dispensation called the Goods and Service Tax Compensation Cess Act 2017 could be set off against only an output cess, and it couldn't have been set off against a CGST or SGST or IGST, for the reason that it is actually the revenue on the compensation cess went to those states which actually required this compensation. There were many states who were not part of the compensation drawing states, and so also the center. So if today this compensation cess has to be allowed to be set off against those taxes, I think the governments which did not receive the credit tax could not be asked to set off this credit for the purpose of their revenue. While this is basically from a point of view of the government, I must also agree with the colleague from the industry that compensation cess constituted substantial in terms of the payment obligations, because we have compensation cess ranging from 3% to 22%. Now, in automobiles, and particularly those automobiles other than EV sector, had a compensation cess ranging from 17% onwards. So obviously, I think the cess which is going to remain on the stock, on the inventory, is going to be a challenge for the industry. Not only at the manufacturer's level, many a times the inventory moved to the stockists or the dealers until the point of retail. The goods which have already been cleared on payment of basic tax as well as the compensation remains a cash flow problem for them. Yeah.
Mr. Mangal, now let me come to you and ask you another query. This comes from Varun Berry, who's Executive Vice Chairman and Managing Director and CEO at Britannia. He has asked that if there are any additional areas that could be looked at in this GST overhaul, one would be the inverted tax structure on inputs, where some rationalization has already happened, but the impact still needs to be assessed. And the second is around GST-linked state incentives. Since the GST rate now at 5% and state GST will be at 2.5%, he says that they would request the state government to give them a longer time to utilize the incentives that have been given to the industry. What would you like to say to that?
Thanks, Timsy, for the question. I would like to first clarify that number of inverted structure positions have been changed and have been rectified by GST Council in this particular reform, including in textile, including in fertilizer, etc. But as you know, there are a number of inputs which are common in nature and which can be used by any industry. So it will become very difficult to totally remove inverted supply. And to take care of that, government has already announced in these reforms that they will also be processing the refunds of inverted duty structure very fast. 90% of provisional refund for inverted duty structure will be given within 7 days. So this will be a big relief for all those industries where inverted structure is there. But it is true that it is very difficult to totally remove inverted duty structure. As regards your second question for extending the times for state incentives, I think that was out of purview of GST Council and also of the central government. So any such request which pertains to particular state and the particular incentive scheme being generated by or being run by any state, the request has to go to that particular state only. Thank you.
So state incentives, as Mr. Mangal said, are totally different from GST's purview. They do not come under the GST mandate. Thus, Center or the GST Council may not be able to answer those. But yes, when it comes to inversion, many inversions will continue. So that could be a bothering point for the industry, to be precise. For example, another related query, sir, over here. A lot of input services are at 18%, such as works contract services, marketing services, etc. And that is where the industry feels that they might not get the benefit of ITC in case the finished product is currently now under 5% or even in the exempt category. What about those? Because on goods, we understand inversion can be given a refund, but what happens in the exempt category? What happens when inversion is caused due to services? Mr. Nagendra Kumar?
Timothy, I think insofar as the inverted duty refunds are concerned, the current GST law provisions provide for mitigating the incidence of higher input tax on the raw materials going into the finished product, etc., by a formula option. Insofar as the services are concerned, I think the formula was amended somewhere in the year 2022, pursuant to a Supreme Court direction where we said in proportion to the receipt of the input services, the refund formula will accordingly provide for taking into consideration the refund mechanism. But that has fallen short of the expectation of the industry in the sense that equal treatment with regard to the inputs and the way in the input services could be looked into while formulating the formula so that the complete relief is given. This request is still pending before the government, but what we look at from the point of view of the industry is this. Actually, inverted duty structure basically is a mechanism by which, for the reasons what I think Mr. Sanjay Mangal has correctly said, there can be multi-use materials, so reducing the rate of tax quite often will not be a solution. So therefore, this will have to be lived with, and inverted duty refund will definitely provide that relief. We need to look at exactly how the government will examine this request, because inputs becoming cheaper is going to increase the instances where the inverted duty refund could be filed with the government, and how it's going to be responded, we need to look and watch. Certainly, the industry has a case in point to that. In case of inversion, the refund formula, which currently takes adequately the inputs but not adequately the input services, need to be addressed. Thank you.
Mr. Mangal, any response from your side? Do you think these inversions can be dealt with? Because industry definitely is not liking it.
Timsi, I will like to just supplement Mr. Nagendra Kumar in that presently the refund of inverted duty structure is not allowed in case of in cases where the inversion is in respect of a output services. It is only in relation to the cases where the inversion is due to a rate of inputs being higher than rate of outputs. The formula was amended, but that does not resolve the issue which you have raised, that where the suppliers are suppliers of services, and they have got some services which are having higher rates, and they are not able to get refund out of it. This was a conscious decision of GST Council at a time, because in cases of services, generally there is always inversion. The reason being that there is at least one or two services which are at higher rate because of the common nature of such services. And at that time, it was considered that if it is allowed for services also, then it will lead to such refund in each and every case. But the demand of industry is also appears to be quite relevant, and at this stage it was not considered. But maybe there is a time in future when the council is considerate enough of these requests and take a fresh view about inverted refund on services also.
Well, we'll slip into a short break now and we'll come back on these industry queries. We have the government representatives answering those live for us. And yes, a lot more on the other side. We are back with our GST helpline. We are joined by Sanjay Mangal, DP Nagendra Kumar, former member CBIC, Sanjay Mangal, Chief Commissioner CBIC. A very warm welcome to the show again, sir. Another query, and this time it is from the health sector, the services side. The query is that there is a clarity on beauty services, but what qualifies as physical well-being services? Does it mean the consultation fees charged by the doctor will be now reduced from current 18% to 5%? A very interesting query, that, sir. Mr. Mangal, if you could answer that.
Timsi, right now, I am not able to understand the query properly because presently all the doctor consultancy services, they are under medical services and they are under exempt category. So which particular doctor advisory services the question is seeking response, I don't know. But in general, the well-being services are services related to all these things like spas, gyms, yoga centers, fitness centers, etc., which are there and which are covered under these wellness services.
So a definite answer would be that all doctor consultation fees are without any GST. So that's a clarity coming in. Next question, this time for the common man and from the FMCG space. Wheat retail packs have GST at 5%. GST on loose wheat or the 25 kg plus pack is nil. Also, while chapati and paratha is now at 0%, does this mean that the packaged wheat or the wheat flour in less than 25 kg packs are now at 5%? What is the new rate that will kick in from 22nd of September? Mr. Mangal, again coming to you, since you were part of the TRU which was setting the rates, what would be your interpretation?
Timsi, there is no change in rate of such wheat, packaged wheat, which is in packs less than 25 kg, and it continues to be at 5% only. So there's no change in that. The breads, etc., they are exempted, and all the loose wheat as well as the loose atta, loose wheat, as well as packed in the packs more than 25 kg, they are under exempt category. But otherwise, packs with less than 25 kg, they are under 5% category.
So less than 25 kg packs continue to be at 5%. And that was the stated stand even today, and that continues after the rate rationalization. Coming back to Sai, because Sai seems to be having some more questions from the auto sector, and he's seeking a definitive answer on what happens to the cess amount. Will they be allowed to set it off in any other account or not? Mr. Mangal, first, a clarity on that, and then we get back to Sai to ask other questions.
About the cess, although Mr. Nagendra Kumar has spoken in detail, as per the present provisions, as per the present legal positions, the compensation cess, input credit of compensation cess can be used only for payment of compensation cess. So even if you do not take this particular reform, compensation cess was supposed to end on a particular date when all the compensation to states had been given after 5 years, but then it was extended for a certain period by GST Council for ensuring that all the loans as well as interest on loans for discharge of liability of compensation cess is paid fully. So considering that this period of compensation cess was increased, now when a decision has been taken to subsume after completion of this period, they have decided to subsume it within the CGST, SGST or IGST, except for certain items for which it will still continue, like pan masala, cigarettes, etc., till the time all the liabilities are discharged. So this had to come, and at that time, whenever it had to come, whatever was the balance in cess credit ledger, it could not be utilized for any other purpose other than payment of liability for compensation cess only. So present position is that the balance which will be lying in the ledger as on 22nd September on account of compensation cess, that will not be able to be used for CGST, SGST or IGST. And there is presently no provision for transition or refund of such compensation cess to any other account.
Sai, I'm sure now you have a definitive answer from Mr. Mangal from CBIC. Coming to my last question. Yes, Sai, please go ahead.
We know the legal provision, but the only ask or the only question was that, see, the dealers had discharged the cess as on inward supplies with a legitimate expectation of utilization. Now, today, any denial of that amount, because that's the credit balance of the dealers, the stock which is lying with us, because if it doesn't happen, as you rightly say, that it will not happen, then probably the transition of the benefit of the lower GST would probably be not there on the cost of the vehicles, because ultimately that cost has to be recovered through some way or means to other.
Sai, I'm grateful, and I'm sure that your ask has reached the right corners, the right ears. And if there is a change in the legal position, I'm sure the government will come out with clarity. But as of now, that's the legal position. That's the place where we would like to wrap up this show now, because we'll have more such queries coming in. And yes, furthermore, more such helpline shows will be part of our programming later on. But yes, as of now, thank you, Sanjay Mangal. Thank you, DP Nagendra Kumar. And thank you, Sai Giridhar, for being a part of this show. And as clarified by the Finance Minister, 100% is what she said, that these reforms will get the consumption boost to the economy back. That was GST Centimeter. Many thanks, gentlemen, for being a part of this show.
Nirmala ji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST 2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. from the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day. Well, the Prime Minister did announce it from the Red Fort on Independence Day. But even about 8 months ago, he called me once and had a long talk about how GST can be, revamped, looked at, and only from one point of view. He said, look, both from the point of view of the process and also for the common man, the tax rates, is there a way in which we can make it simpler? So I had agreed that I will go into it and come back to him. Then around the budget, when we were talking about many, tax-related issues, he reminded me about the work which has got to be done. And I assured him again that time that yes, the work is progressing, and I will come back to him. So sometime after the budget session was over of the Parliament, I said I'm somewhere close to giving him a proposal, which he can guide me further and so on. And then a bit later, much later, because the developments of May, April, when Operation Sindoor had happened, and after April, priorities have been on very many different grounds. And when next opportunity came, I went, gave him a detailed description. Is that I just want, as I said at the first meeting, the simplistic or simplified, not simplistic, simplified way of doing business. So I don't want small people, small businesses sitting at the computer, getting the auditor to do it. And also, like the way we did in the budget, respecting the middle class, respecting the taxpayer, respecting people who are really the ones out of their salaries giving the tax. We need to do something for the day-to-day indirect tax, which falls on every Indian citizen in some way or the other. So this tax is something which touches the lives of every citizen, and therefore we need to be a lot more sensitive. So I went back with this comment, redid it, sharp focused it, and that's how this proposal came. And we, for the first time in GST's history, Council's history, the centre has come up with a proposal. Till now it used to be the group of ministers which consisted only of state ministers. Yes. Never has the centre been a part of any GOM. This is the first time, both in the case of the compensation cess, where the MOS Finance, central government, was the chair to decide how to handle the closure of the compensation cess, and a comprehensive proposal as regards GST being given by the central government. So it's unique in very many ways. Every rule of the House, of the Council, had to be looked at afresh, yes, even to put the proposal. Yes. So I'm glad it went through the whole grind, didn't ignore any rule or expectation or the law of the GST, and has gone through.
And taking everyone along, unanimously.
That's right.
At the heart of this is obviously, the common man. In fact, Money Control had put out a tweet saying that how it also impacts, it is the health of every citizen in India, to which the Prime Minister, in fact, said that it is also to do with Swasth Bharat. Yes. So what was the driving motivation, behind this bill?
See, I had to do a dredging kind of an exercise.
Yes.
Where every item which comes under the GST, goods or services, had to be looked at, not just by their codes, not just by their names, but to regroup them from the point of view of daily use items, that which is consumed by citizens, middle class, the poor in particular, and then you looked at those which are going to hit the farmers, those which are going to hit the middle class, and so on. Because eventually, daily use items or items which are necessary for this transition of India from a emerging, developing economy to a Vikasit Bharat cannot be on the back of, just the approach of we need more development, bridges, roads, some contracts for works and so on, but also that the aspirations of the growing families will have to be met. So we had to regroup them in such a way, okay, this is essential for, let's say, the families, poor middle class families. Of course the rich will come in. So what do we do as a treatment for it? But even as we were talking about this, we are talking about the classification of goods and services. I, without any hesitation, will bring that example of the popcorn. Why am I saying hesitation? Because I was pilloried on it.
Yes, absolutely.
But that tells you the problem of classification, where we brought in a system, no doubt, which was an improvement of over the pre-GST era, where every state defined its own and had its own rate and so on. So GST in 2017 was an improvement over what was earlier. But it still required some more simplification, and that's why this exercise. And in the case of the popcorn, it led to a lot of litigation, courts coming up with different kind of voices, and states losing revenue because of the classification being different. People chose to have the higher taxed sugary, chocolatey popcorn shown in as a salted popcorn because that has only very little tax on it. So this arbitrage, because of classification, had to be overcome. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed. Like that, I think it was one of the, for me it was a fascinating exercise. It was rigorous, it took a lot of my time and time which would have gone in for something else. But I think this was absolutely rewarding an exercise because you brought in that temperament, which is so important, that citizen looks at these things in one particular way. Revenue is not the consideration. So that helped us.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, right, which popular parlance says sin goods. Yeah. So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments, it will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah. Have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I mean, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move, to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset, and so on. It is with the agreement of these GSTN related technology managing team related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on Sept 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. When the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party, yes. Finance ministers from Congress ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence, that one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence, yes. Is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
Nirmala ji, this has been widely hailed as one of the dramatic reforms of this government. Obviously, a dil mange more. So, what next? PM has set up 2 official level committees on next gen reforms. 2 group of ministers have also been formed, headed by Amit Shah and Rajnath ji. What can we expect in the coming months? What is the idea going forward? How do you look at reforms in the bigger picture?
Quite a lot of work was done about the next set of reforms which we need to undertake. even prior to 24 Lok Sabha elections. And then some departments moved, like ours moved faster. There are other departments which are moving faster as well, whether it is looking at the environment-related issues, sustainability-related issues, opening up for private sector, sectors which have been the domain and the privy of the government. These are things where lots of action is happening. Various departments are moving. The science and technology is moving very fast. IT is moving very fast. IT as in semiconductors and other things. So that big area of reform, if you ask me, in which these two committees will look at, and also the committee which is headed by former Cabinet Secretary Rajiv Gauba. Right. I expect reforms which will have to now trickle down rather than remaining as a domain of only the union government. The state governments are somewhat also moving towards reforming on very many scales. But the third layer of India's democracy, the urban local bodies and the panchayats, is where the next forceful action has to move. Otherwise, the speed with which we want to move India and the aspirations to be met in India for people to live in a society, live in a country which is fairly developed, and our citizens get their aspirations met. I think we have to take the reform agenda just not to the states, but also to the third layer.
As I move to, discussing the GDP numbers for Q1, just before that, another last question on GST, which is how will you ensure that you pass on the benefit to the consumers? We've seen anti-profiteering in the past, so how do you plan to tackle this? Is there a way in which the government is looking at it? How do you ensure?
At the moment, there isn't any particular mechanism that I can say I have. But I certainly am seized of the question, also coming from many citizens themselves who are saying, it's great that you've done this, it's great that you're bringing in this kind of a drastic cut in taxes, but how will you ensure that we'll benefit from it? And how will you ensure that it's not going to disappear on the course to reach? We'll have to keep talking with industry, we'll have to nudge them, we'll have to... I'm glad in the case of the insurance sector, the public sector insurance companies have come forward to openly say that they will indeed pass the rate cuts to the citizens, those who are taking the insurance for themselves. So I'm sure the private sector would also do it in insurance, and so with other things.
You're expecting them to announce that they will pass on the benefit?
Many of them are doing it.
A couple of them have, some of them have announced. So Q1 GDP numbers are heartening 7.8%, at a time when President Trump said that, India is a dead economy. How do you react to something like that?
I may not be able to comment on, let's say, foreign head of the state commenting on it. But in India, one line which I keep repeating several times, probably even once when I met you once earlier when we chatted like this, it is the cynics within India who worry me. It is the naysayers within India who worry me. Assume somebody had said it, a head of state has said it. Building India together, and all of us together building India, are we going to carry those tales or stories or observations which somebody else says and then repeat that here, oh, so-and-so has said this, India's a dead economy, we knew it, this is happening, that's happening. India requires its citizens to be respected. They are toiling and struggling and working to build their families and their economies, their own personal family wealth and whatever. At this time when we are trying to create more opportunities, do we need the naysayers to even borrow such observations, be it as it may that it is coming from a head of state? Do we need our own people to use these expressions? It is undermining not the government, you're undermining our citizens' efforts. And a responsible opposition, I wished didn't repeat these lines, but I think it is, I would react only to what our people are saying rather than a head of state elsewhere.
No, five-quarter high number, I think it gives us a lot of confidence in the Indian economy.
And also inflation coming down.
Yes.
Drastically coming down.
Yes. But it brings us to a related point, which is on the point of tariffs. Now that tariffs with the US are at 50%, what is the likely impact on the GDP going forward? There are various estimates by various sort of consultancies, from 10 basis points all the way to 100 basis points, some have predicted. Where do you see the impact really of this?
But with the reform like this, many of that should be offset.
Yes.
So it is never a situation of one fixated point. It's a dynamic situation where you're moving from one to another with newer players coming in, newer factors coming into play in this scheme of things. This one, you have the GST reforms, which is going to make people understand that they can fetch more things with the same amount of money with which they bought some amount earlier. So it is very clear that industries have been speaking about the tariff and its impact. The government has designed something for itself. We will come out with something to handhold those who are hit by the 50% tariff from the US. This has been said earlier. I've met up with the delegations when I went to Chennai in recent past few days. I have said this there and I will repeat it. Government is working.
So will they be allowed to sell in India, or how do you plan to alleviate their concerns?
No, there is a package which consists of very many different ways in which we want to help them. So we'll wait for the cabinet to clear it, but there is something coming to help them so that this tirade of the tariff is something which they can face, and also suddenly having to look for newer markets is also a challenge, but we'll have to help them out on that.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs, whether in terms of rates, logistics, anything. So where we buy our oil from, especially being a big ticket foreign exchange related item, where we pay so much out of our pocket, highest in terms of import, we will have to take a call which suits us best. So we will undoubtedly be buying.
Another question about, the officials of the Trump administration have been using really hurtful language against India. Saying that we are Brahmins profiteering at the expense of, ordinary Indians, or, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India. Oh, don't you all know, don't you, I mean, you know, dirty, unwashed Indians, you don't understand what this expression means? This is how, this is explained. Who wants these explanations from Indians? Who actually wants us to know better? And who are these people explaining to us, this expression is used in this context? Yes. I'm outraged by that. I don't want explanations to justify that. Whether I'm going to have to deal with them, stand up and challenge them or retort is a different story. Right. But Indians quoting those words and telling us, oh, you dirty Indians, you don't know this colonial justification of the language that is being used against Indians, against such countries which have come out of its colony and from its empire and stood up to build its own country with its own self-confidence. And even now when we are talking about Atmanirbhar, it's not just in terms of producing everything in your country. It's also about being
self-reliance.
There is no self-respect.
Self-respect.
As much as you want everything produced in India for Atmanirbharta, you should have something of a self-respect. If somebody is saying, all of us in one voice should respond to it, rather than have a few of us justify it by saying, don't you all understand it? Are you a part of the imperialists? I'm outraged more by that.
Yeah, the opposition picking up this and, making it their own narrative.
And saying...
Like dead economy was picked up by Congress, Rahul Gandhi to say.
And even for this, Brahmins are being, are the ones who are benefiting out of it. Oh, you Indians.
Us Boston Brahmins.
Yes, Boston Brahmins. Oh, you Indians, you don't understand this Russian oil purchase is to help Brahmins to benefit of it, and you are being fooled. Exactly the same divide and rule principle which the British used here, which the imperialists used here. And even today you have the friends of the imperialists telling us, no, the expression Boston Brahmin is this and not that. Who damn cares? I'm sorry. Yeah. Who damn cares? I want Indians to think for ourselves. I want those Indians who are now defending that language to get up and say, we are free from you all. Now for over 75, 80 years, we'll mind our business, we'll take care of ourselves, refrain from using these words. Should have been that voice. That not being the voice, And upar se to teach us saying, don't you know the meaning of this expression? Outrageous.
Today we've got to know Nirmala Sitharaman ko gussa kyun aata hai. Now, moving on to economy, any plans to liberalize FDI or FPI regulations further?
I do not want to give a headline, but certainly we are looking at every aspect of reform.
How do we, this is probably the right time to, assure foreign investors to invest in India. What are some of the steps that we should take that would, give them this confidence? I mean, this one was a big one in itself, but going forward.
First thing, I think our institutions such as Parliament should debate issues, should question government on the proposals, on the policies, on government's actions. That gives confidence to people saying India's democracy actually literally discusses these issues. Without that, the government can go about doing what is right for the public. But the institution of the Parliament is not being used for its prime purpose. Why is it important? It gives a feeling that both the opposition and the ruling parties are talking on issues. Instead of holding placards and standing in the House, if there is a meaningful discussion, it will convey a lot about the policy strength. That is one thing. Second, our regulatory institutions, and I've said this before, but I'll repeat it here. Regulatory institutions should not go to the extent of micromanaging. I want businesses to do their businesses. They have powerful boards which run them. And the regulator, in consultation with the stakeholders, should allow them to function, of course, keep a watch, and do a soft touch regulation. If regulators across the board, I'm not talking just of the finance domain regulators, all over, should have a open-minded approach, a soft touch approach, above all, not micromanage businesses.
Private investment has been a topic of discussion. How do we revive animal spirits, for the private sector to invest? This has been a, discussion that we've been having over the course of many interviews, and you've been also exhorting the private sector. How do we get about?
But I think, to be fair to them, they are moving in.
Okay.
And they are taking decisions about how they want to expand.
So you see a significant change?
I see a significant change, and I see that enthusiasm now in wanting to understand how things will move from the industry. And I'm sure they are conscious that opportunities lie in India and they should do things.
How would you react to S&P's, India's sovereign rating by S&P, which has gone up? High time, would you say?
Yes, and it is, I think, as a result of a lot of work done by the Department of Economic Affairs, the Chief Economic Advisor. They have been persistent with talking with them, giving them adequate data-based information, and their conversations have actually today shown us the result. And I'm glad that they're doing it. They should continue doing it with other agencies also, because with our growth being with what it is, with our fiscal, macroeconomic fundamentals being what they are, with our inflation being under control, with our foreign exchange growing, with our stock market being so buoyant, it is difficult to understand how parameters of similar and comparable nature elsewhere attract a much better rating, whereas ours don't. And conversely, parameters which are worse than ours seem to be having better rating. Just can't explain it. So I think the work of the DEA and the CEA is well cut out in this regard. They will have to work with agencies.
Nirmal ji, you're right about all the macro indicators looking up. But, revenue growth for corporate India has remained tepid. It's at a 7-quarter low of 3.7%. How do you explain that? GDP on one hand growing at 7.8%. What really accounts for this?
I think it's also a question of how they're deploying their resources and how they're earning out of it. Businesses will also have to look at the way in which their risk-taking capacities can increase, and that's what is going to be the prime mover in terms of revenues for businesses. So, but that's a business call. It's not for me to say.
Right. Nirmalaji, India and China are now mending sort of fences. So, right now it is at the level of resuming the flights and giving visas to each other. But what could be the next steps? How could we make the Chinese markets more accessible to Indian companies? There is, of course, a huge deficit of $100 billion here. So how do we do that? I mean, what are the next steps?
There's just a lot of work to be done in that area. There's no hiding it. We need to have trade conversations, market access conversations, non-tariff barrier conversations with the Chinese. Unless we do that, and unless there is a true engagement and not a procrastinating engagement, you may talk as much as you want on these issues. I've done it myself. And to have a conclusion arrived at takes a lot of time with the Chinese. Sorry. Market access is something which has not been realized despite our almost a decade-long engagement with the Chinese. In between, everything had come to a halt. But on both these issues, there should be meaningful conversations. Otherwise, the very products that we want to export to China go through different destinations to China. But why can't it go directly?
Yeah. And will it also be reciprocal? I mean, Press Note 3 prevents investments from China to India. So would you look at, doing something about that as well?
As it is, I think in one or two cases, particular cases, we have relaxed some of them. And in those sectors where their technology has come in, and the technicians and also the experts had to come to actually see the projects through, we've not allowed these experts to come. That has now changed. In some sectors, people are coming in, where projects are already on the ground.
So India will be open to that idea?
Of course.
Yes. Nirmalaji, you've ushered in the boldest of reforms. I say this in every interview that we do because you corporate tax cut. I mean, that was a phenomenal sort of move. Then after that last budget, we have income tax rates going down. Now GST2, as I called it. So, one thing that we probably haven't seen enough is on private disinvestment. What would you say to that? You did sell Air India, but after that, things have been slow.
You'll see action in that also.
This year?
Yes.
Oh, that's great news. Any deadline for strategic stake sale in IDBI Bank?
No, I think the secretary has already, DIPAM secretary has already spoken about it. IDBI is moving quite fast.
Okay.
And I expect it to be concluded this
financial year? Okay, and any more banks which could then be looked at after this?
I wouldn't say any more banks. I'm not negating anything.
Right.
But yes, more disinvestments.
More disinvestments, okay. So we've seen that since June this year, the yield on 10-year bonds have risen 30 basis points since June, to more than 6.5%. Are you concerned about rising borrowing costs?
Yes. I wouldn't say I'm concerned, but I'm observing it. It is not affordable. And also at a time when interest rates are otherwise low,
yes,
bond yields becoming unsustainably high has a big bearing on the government. Not just our union government, states are also up against odds in getting affordable,
Also your fiscal math?
My fiscal math is as of now absolutely
of course,
fine.
Yeah. So, Nirmalaji, we are again, near an election. Bihar elections are coming up, and before every elections, we have seen all political parties dole out reveries, and we've discussed this in previous, encounters as well. Does this worry you? State after state, promising welfare schemes, doling out reveries, and how does it all really add up for a country like ours?
I think I'll speak for all finance ministers.
Yes.
It is a very, very difficult thing. to have a scheme approved and also budgeted for is not wrong. And I would approve of that, because that at least takes the view of the legislature and also makes it public about how they are financed, and therefore also brings in that responsibility to keep your revenue generation equally attended to. But what most often happens, not so much with Prime Minister Modi's leadership, but I can say what generally happens is you give away a promise. Once you have to come to fulfill it, you're searching and scrambling for resources. And if you're an opposition-ruled party, it is very quickly arsenal in your hand to say central government is not giving me money. That's the biggest unsustainable argument. I'm more tempted to say bogus argument. Because you give a promise, you win the election, you come to power, and then after that you're not able to fund it.
Yeah,
why would you want to?
A lot of cases.
Yes, why would you want to throw the blame at somebody else, particularly the union government?
Yes.
So this kind of sort of recklessness in dealing with public finance has got to be discouraged. There's no doubt on it.
Nirmalaji, India holds about $227 billion of US Treasury securities. It also holds a lot of gold in its reserves. Should we diversify away from US Treasuries for reserves?
To some extent, I think the Reserve Bank of India has already started doing it. I wouldn't want to divulge more by saying how are they doing it. But I think Reserve Bank has taken a very considered decision, and they've also done by purchasing gold. So I think the bank is competent and they're taking a fine call on it.
One more question was on the decision to ban online gaming, which came as a surprise to many, especially, after many years when people had poured in a lot of money in that business. What was the thinking behind this? How do you assure people of consistency in sort of decision making at a time like this?
No, what is the time? What is so special about the time like this?
No, what I meant was that, a lot of investments had come into that sector.
No doubt. Yeah. We have not banned games which are for recreational purpose.
Right.
We are still online games for these things are not banned. It is only when you start betting with money. And why is it? Not because we want to say we don't like it. It's a question of the number of people who came to say families are getting absolutely shaken up.
Yeah, that's right.
Their monthly bills are shooting up, and children cannot be controlled from the temptation. And many children, in fact, I wouldn't mind even saying this. There was a finance minister who once met me in a very different context,
right.
And he narrated an incident of his own family, where his own grandson, who's a very good person, the child is a very good child, well groomed and well brought up,
right.
Used his credit card for just one day for some other purpose of a family's genuine buying requirement. He helped them because children are very savvy. Post that one another day, he picked up the card and said, I want to just do something. They said, all right, please. Because they never suspected this child as, into games and into betting and things like that. So the boy used the card and played and gave back the card. Again, probably he did it 2 or 3 times more. Phenomenal increase in the bill that month. And that's when the grandfather sat up and said, what's going on? Let's check up. And this grandson told him right in front of him that it was all free. I didn't go into any money-playing game.
He didn't know.
So the methodology is, say it's free, you get in, and for the duration of time that you played, some kind of a charge is put, and again tempts you to go into another round, and so on. So the adolescent child is under the impression that he's playing a free game.
Right.
But he ended up paying through his nose. So that's a classic example, but
yes.
Many people approached us, the PMO and so on, and said, this is ruining our country, ruining our youth, please do something. That's where this bill has come.
Okay. No, understood. The rupee is at an all-time low against the dollar. Does it concern you?
It is, I've said this and I'm going to have to repeat it. It is only against the dollar that the rupee is highly volatile. Whereas rupee is not affected similarly by other currencies. So, and there are countries in emerging markets and even in developed countries whose currencies against the dollar are weakening. So it is an issue on that aspect and at that level about the volatility as a result of the strengthening dollar. It's not rupee getting weakening. I know I've been trolled immensely for saying this, but this is the truth. So,
okay, thank you. Nirmala ji, one last question. For profitable companies with over 1,000 crore turnover, 2% of their profits go into CSR. Now, at a time like this, when MSMEs are facing a problem because of tariff issues, etc., is there any thought to take a relook at this for a little while?
nothing before me as yet. Okay. If there's anything, I'll tell you, but there's nothing.
All right. Nilwaji, thank you so much for your time. Thank you for patiently answering all our questions, very candid. And heartiest congratulations on yet another big reform, GST2 or rationalization of GST. Thank you so much for being with us.
Thank you very much.
Hello, welcome to Global Eye. I'm Parikshit Luthra. United States President Donald Trump continues his rhetoric against India. This time, he has taken a jibe at the troika of Prime Minister Modi, Russian President Putin and Chinese leader Xi Jinping, who met at the SCO summit last weekend. Here's what US President Trump posted on Truth Social. Looks like we've lost India and Russia to the deepest and darkest China. May they have a long and prosperous future together. End of quote. President Trump's post was accompanied with a photo of Prime Minister Modi, Russian President Putin and Chinese President Xi from the summit in Tianjin, where they were sharing a lighter moment. Remember, the trip to Tianjin was Prime Minister Modi's first China trip in 7 years and amidst the tariff standoff with the US. The three leaders were seen exchanging smiles and even holding hands at the summit. That's not all. Putin even offered a lift to Prime Minister Modi in his Russian-made Urus limousine when the two leaders were headed towards the bilateral meeting. The trip to reach the venue for their meeting lasted about 15 minutes, but they spent another 45 minutes in the car to continue their conversation. Remember, Russia has been one of India's long-standing allies since independence. Beijing and New Delhi's ties had reached a new low post the 2020 Galwan clashes. Two top Union Cabinet ministers, Finance Minister Sitharaman and Commerce Minister Piyush Goyal, have spoken on the standoff between India and the US.
Another question about, the officials of the Trump administration have been using really hurtful language against India. Saying that we are Brahmins profiteering at the expense of, ordinary Indians, or, calling the Ukraine-Russia war Modi's war, or us as Kremlin's laundromat. How do you see all this? I mean, how do you react to something like this?
Very much the same principle as I said earlier. It is one thing, it can be hurtful. It is one thing for a foreign government, head of state or an official or anybody to say all that. And the global diplomatic world is astonished that that kind of an expression is being used against India. And that will have people in the diplomatic arena to respond or to deal with. But what hurts me more is when those very expressions are being justified in India.
So is there a sense in the government that this could be a slightly longer haul?
We hope not, but we really can't leave our exporters high and dry saying it's going to change sooner. We will work with them.
Nirmaji, will we also continue to buy Russian oil?
Yes, that's been made very plain and simple. Whether it is Russian oil or anything else, it's our decision to buy from the place which suits our needs.
Some of the officials of the Trump administration, calling it Modi's war or, a laundromat of Kremlin. I mean, how do you react to this? I mean, are conciliatory noises coming from the other side now?
I think there could be either some misunderstandings or some personal opinions that may be reflected in that. I do not think that deters the US and India from continuing to maintain our strategic alliance and partnership. Our friendship is far stronger than a few comments that may be made by a few people.
And Randeep Jaiswal, spokesperson at the Ministry of External Affairs, refused to comment when asked about President Trump's latest comment on India, Russia and China. But when asked about Trump's trade advisor Navarro's comments alleging Brahmins benefited from Russian oil, MEA spokesperson termed the comments inaccurate and rejected them.
अभी कुछ ही मिनट पहले अमेरिकी राष्ट्रपति डोनाल्ड ट्रंप का एक ट्वीट आया है, एक पोस्ट उन्होंने किया है सोशल मीडिया पर. उन्होंने लिखा है कि looks like we have lost India and Russia to deepest, darkest China. May they have a long and prosperous future together. President Donald J. Trump. इस पर आपकी पहली प्रतिक्रिया.
Okay. Regarding the post, I have no comments to offer on this post at this point. पीटर नवारो के कमेंट के बारे में हम लोगों ने कुछ गलत और गुमराह करने वाले कमेंट या स्टेटमेंट श्री नवारो की तरफ से देखा है और साथ ही साथ हम ये कहना चाहते हैं कि ये हमारे लिए अस्वीकारनीय है, इसको हम अस्वीकार करते हैं.
To take this forward, we are now joined by Arun Kumar Singh, former Indian ambassador to the US, Ashok Sajjanhar, former diplomat, and Shashank, former foreign secretary, and Raymond Vickery, senior associate at CSIS. Gentlemen, thank you very much for joining us on the program. Raymond Vickery, how do you see this statement coming from Donald Trump? Is this a jibe at India? Or is this his understanding of the present situation? This is how the White House really sees it. Are you seeing maybe a softening of stand against India over the last few days?
Well, thanks very much for having me. You know, in order to wage peace like war, you have to have a strategy and you have to have partners. Unfortunately, President Donald Trump does not have either of those in mind. He is a transactional person coming from a real estate background, and everything is a transaction in which there are winners and losers. So for him, it's all right to take some sort of extreme statement in hopes that that will disorient the other person that you're dealing with and you'll come out on the other end. On the other hand, I fear that this is really a reflection of President Trump's deepest views about international matters, that there is some sort of fortress America which has its own domain and does not need the rest of the world. I think that's a very unfortunate statement. There are many, many ties between the U.S. and India, going from democratic values enshrined in our constitutions to people. Indian Americans are very prominent in positions in the United States, to strategic interests vis-a-vis China. And those are strong ties, and we hope that there will be people with calmer, saner heads on both sides who will see that and not allow this my way or the highway approach of President Trump to be the last word. On the other hand, it seems to me that there must be evaluation in India. Many in India, or some in India, have said, well, we don't need the rest of the world. They reflect the Donald Trump view, only it's Fortress India. And that's not going to get us to peace and prosperity either. So it's a time for reflection and going forward in that mode.
All right. Let me get in Ambassador Shashank at this point. Ambassador Shashank, how do you see the statements coming from Donald Trump over the last few days? He's been posting on Truth Social almost on a daily basis since the SCO summit. Clearly, the pictures coming from there are playing on his mind. What possible reaction could we see from the White House when it comes to India in the coming days?
Well, there are a couple of points I can make. One is that President Trump does not want to talk against China. He has decided that anything against China directly will hurt the American interests. Secondly, with regard to Russia also, he knows that he will not be able to move the opinion of President Putin. So therefore, the easiest target is India. And that becomes even easier when he has business interests in Pakistan. So Pakistanis have become his best advisors. So what else do you expect? But I'm still hopeful that earlier only people like Raymond Vickery or many other experts on international relations were talking about the values shared by India and USA. But now I find that there are some advisors also to President Trump who are talking in a very positive tone about the bilateral relations and not to disturb this relationship in a very long-term manner. But I think there are a few people who are advising President Trump, and they need to be either made to be quiet or be removed. I think that is the important thing for President Trump to decide. But if he really goes with the advice of only the naysayers and Pakistani advisors, then I'm sure that the period would be much longer for India and USA to come back to a positive trend.
All right. Let me now go across to Ambassador Sajjanhar. Ambassador Sajjanhar, in the last few weeks, one thing is very clear. When it comes to even the trading relationship with India, Donald Trump is now viewing it through the Russia-Ukraine lens. Can you help me bring the war to an end? Will you stop buying Russian oil? And any kind of trade deal or understanding is now contingent on that. Everything is revolving around that. But in the context of this, how do you see this statement? Looks like we've lost India and Russia to the deepest, darkest China. May they have a long and prosperous future together. Donald J. Trump. He's just posted this on Truth Social a few hours back. It has been said a lot over the last few months that we need to take Donald Trump seriously, but not to heart. But we have to take him seriously. So how do you read these comments? All right. Ambassador Arun Kumar, if I can put that question to you till the time we get Ambassador Sajjanhar back on.
No, thanks, Parikshit. So, it's unfortunate, but there is really no factual basis to what President Trump has put out in the tweets. And if he were not the president of a major country, nobody would have paid attention to it. If a student had written this at a university, I think teacher would have given them a failed grade. Or if one of the policy analysts has said this, I think they would have lost their credibility. Because if you really look at it, Russia and China now have had a close relationship for a long, long time. Many people have pointed out that in February 2022, before the Russia-Ukraine conflict started, when President Putin had made a visit to China, the joint statement that came out at that time had spoken of a no-limits partnership. And then later, when President Xi had visited Russia and he was leaving from there, the open mic caught a conversation of President Xi telling President Putin that changes are coming that we have not seen in 100 years, and we are together driving those changes. So Russia and China, for various geopolitical reasons, have now had a very close relationship for a long, long time. And therefore, to suggest that something new is happening at this time, I think it's just a justification, because there was a narrative creation in the US that there was justification for President Trump to reach out to President Putin and try and generate pressure on Europe, on Ukraine to compromise as a way of breaking Russia away from China, doing what was called a reverse Kissinger, when in 1971, Kissinger had contributed to the process of sharpening the divide between China and the Soviet Union. Now, when that is not seen to be working at this stage, there seems to be no imminent progress on the Russia-Ukraine conflict, despite a recent meeting between President Trump and President Putin in Alaska. I think he's trying to shift the attention from that failure to suggest that now there's a sudden deepening of Russia and China partnership. Similarly, as far as India is concerned, clearly the SCO summit and Prime Minister's visit to China was not set after the difficulties arose in the India-US relationship since May, because SCO summits are an annual feature. They're planned well in advance. Schedules of leaders have to be coordinated. Now, of course, the meeting takes place in the context of a certain international atmosphere, but the scheduling of meeting was not related to the challenges in the US-India relationship at the moment. And the fact of some easing of tension between India and China is something that was started since October last year, when the Indian Prime Minister and President Xi met in Kazan, and there's been some progress. But still, you can't rule out that, suddenly there may be some incursion along the LAC, creating new challenges for the India-China relationship. Therefore, to suggest that suddenly a whole new situation has arisen, is just, playing on the optics and emotions of the moment.
All right, let me go across to Ambassador Sajjanhar. Welcome back on Global Eye. Ambassador, right now, the MEA spokesperson has said that we've seen inaccurate and misleading statements by Mr. Peter Navarro and obviously reject them. Now, Peter Navarro has been particularly harsh on India, calling India a laundromat for the Kremlin, saying that we're flipping, oil bought in the black market. We're profiteering from Russian oil. We're supporting Putin's war as well. So some very strong comments, unlike even Donald Trump. Donald Trump has been hard on India, but he's not used that kind of language. Do you think India can literally cut off Peter Navarro from the overall equation, and currently he does not reflect the view of the White House or the US administration?
At the moment, I think he would be reflecting the view of President Trump, if not of the US administration, definitely as far as President Trump is concerned. And I'm sure he couldn't be making all these statements without either express or indirect approval from President Trump. But I think what has also happened is that most of the appointees in the White House and around Mr. Trump, they owe their positions to Mr. Trump. So I think they are looking at what Mr. Trump would like them to say or do. And they are doing exactly that. And, in terms of what they say and how they say, they have huge amount of latitude. But I think we have stated very clearly that if the whole idea, as far as Mr. Trump is concerned, is that Russia should be punished because India should be punished because it's buying oil from Russia and Russia's coffers are being filled, then of course there are so many other contenders for this. As far as China is concerned, as far as EU buying LNG from Russia is concerned. And as Mr. Putin told Mr. Trump in Alaska, that the trade between Russia and the United States had increased by 20% over the last 4 or 5 months since Mr. Trump came to office. So I don't think it is, doing more trade with Russia and giving it more funds to continue the war with the Ukraine. As I think it has been stated often in your program, I think it is some personal pique and, related possibly to the fact that India has declined to support President Trump's nomination for the Nobel. That is what is, it's a personal issue, ego issue, personal pique that is making him do that, because otherwise he would be acting against all the others. As far as Mr. Navarro's statement is concerned, the MEA has rejected it totally, as you have mentioned. I think as far as Mr. Trump's statement today is concerned, I think that's very inaccurate, because India still values its relationship with the United States. We have said this very many times, irrespective of what Mr. Navarro has said or Mr. Scott Bessent has said. We have adopted a very balanced, a very sober, a very measured tone in responding to all these comments. We have not moved to that level. So I think I'm hopeful that going forward in not too distant a future, we'll be able to bring the relationship on track.
All right, we all hope that, but I'll request all our guests to stay with us. We're taking a short break. We'll be right back. Welcome back. You're watching Global Eye, and we are analyzing latest statements made by Donald Trump, who has said, looks like we've lost India and Russia to the deepest, darkest China. May they have a long and prosperous future together. The Indian Ministry of External Affairs has not commented on this statement, but let me take this across to our guests. We have our special panel of foreign policy veterans and diplomats right here on CNBC TV18. Let me go across to Raymond Vickery at this point. Raymond Vickery, do you expect more US pressure on India in the form of additional sanctions after this additional penalty tariff? Or would this be a lowering of temperature that you're expecting?
Well, I think it's important to recognize that India and the U.S. Have a problem here, which is broader than just U.S. pressure on India or the India-U.S. relationship. It is a broad problem of world peace and prosperity. As you may have seen, Donald Trump has moved to rename our Department of Defense the Department of War. This adherence to the great powers each having their own domains is the essence of what happened prior to World War I, which led into World War II. And you throw into that mix the question of nuclear weapons, and you get an extremely difficult and volatile situation. India is a great nation. It is time for India to step forward and provide leadership. One wonders whether or not it's in India's interest to be clubbed so closely with China and Russia, whether it's in India's interest to really turn a blind eye in regard to what Russia has done in terms of transgressing the values of the UN Charter against the invasion of a neighbor. Now, will there be more pressure?
Right.
This is a tactic of Donald Trump.
Okay.
Forget Peter Navarro. Peter Navarro is a very fringe kind of guy. And he's basically going to do, if Donald Trump tells him to sit down, he's not even going to look for a chair. So I think,
all right. Raymond Vickery, I'll quickly take closing remarks from all our panelists. Ambassador Shashank, your thoughts? You know, we were speaking to S&P guests earlier today, and they said 50% tariffs will not stay beyond the end of 2025. Will Donald Trump come for the Quad Summit?
I think India must keep trying to bring about peace in Asia and the world, and we'll continue our efforts. For that, it is extremely important that we should be considered as credible partners by Russia and China, and also we need to increase our economic strength. And for that, Atmanirbhar Bharat campaign, Viksit Bharat campaign need to be continued. As regards the US-India relations, I think we need to keep in mind that in USA we have many friends also. So it is not a question of either or. It's a question of how soon can President Trump change his mind about the value of India-US relations.
All right, let me take closing remarks now from Ambassador Sajjanar and Ambassador Arun Singh as well. Ambassador Sajjanar, India has been now making efforts to show that it's concerned about the Russia-Ukraine war. Yesterday, you had the External Affairs Minister speaking to his counterpart in Ukraine. The Prime Minister has spoken to the Ukrainian President almost twice now. He's held conversations with Putin. Is India now showing earnest efforts towards ending the Russia-Ukraine war? Is this our signal to the Trump administration saying that, hey, we are trying, we're doing what we can, let's put the relationship with India and US on track?
No, absolutely. I think India has been speaking about peace and dialogue and diplomacy right from the beginning. Parikshit, you would recall September 22 in Samarkand, that's what the Prime Minister told President Putin. And we have been speaking about that all along. And I think the world or the countries involved recognize it. That's why Mr. Zelensky spoke to Prime Minister Modi just a day before he was to meet Putin. That is why you have President of the European Commission, Ursula von der Leyen, and the President of the European Council, Andres Costa, speaking to the Prime Minister and requesting him to take a role in bringing peace in that area. So definitely India is trying its very best. India has no role, meaning calling it Modi's war is a total misunderstanding of the situation. The one last comment I would like to make, Parikshit, also is that what Mr. Trump says that India has been lost to China, it is totally misrepresentation of facts. India is standing its own ground. It's not been lost to anyone and will continue to protect its interests, that is to have peace and tranquility on its border and normal relations with China.
All right. Ambassador Arun Singh, anything very quickly? We just have about 20 seconds, sir.
Sure. Just to say that despite all the top-level noise, functional level cooperation has continued. Recently, the 2+2 intersessional meeting was held. The defense policy dialogue between the two countries was held. And the youth Abhyas exercise between the armies in Alaska was held. So that is being sustained to provide a ballast amidst this time of turmoil. So I'm sure we'll come out of this situation.
Right. And that's what everyone is saying. Despite trade tensions, the overall strategic partnership remains intact. Thank you very much, gentlemen, for joining us on the program. That's all we have time for. Goodbye.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Girish Mathrubootham, the founder who led Freshworks from its inception in 2010 to its IPO in 2021, announced he will step down as executive chairman effective December 1st this year, marking his exit from the firm. The board has appointed Roxane Austin, previously the lead independent director, since May 2021 as the new chairperson of the board.
Amazon has completed the acquisition of non-banking lender Axio for an undisclosed amount, securing access to a direct lending business in India. The deal will help Amazon expand its fintech operations here, where it has secured approvals to issue payment wallets and sell insurance policies on its online marketplace.
Co-living platform CoLive has joined hands with Bain Capital and Sattva Group to launch a pan-India co-living real estate platform with an initial commitment of $100 million. Alongside, CoLive has also raised $20 million in strategic funding led by Bain and backed by Sattva to accelerate growth, expand its footprint and strengthen its tech-enabled rental housing solutions across India's major urban centers.
Digantara has announced a partnership with the Japanese firm iSpace Inc. to create a map of the orbit around the moon to look out for space debris that could potentially harm future lunar missions. This brings together Digantara's expertise in space domain awareness and iSpace's lunar landing capabilities, which lays the foundation for sustainable lunar infrastructure, logistics, and resource utilization.
Quantum computing company Quantinuum has raised about $600 million from investors, including NVIDIA's venture capital arm, at a valuation of $10 billion. The funding also saw participation from existing shareholders, JP Morgan Chase, Mitsui, and Quantinuum's majority owner, Honeywell, among others.
Those are the headlines that we're tracking for you today on Startup Street. But in What's Brewing today, e-commerce platform City Mall has raised $47 million in its Series D funding round, which was led by Accel with participation from existing investors. Now, this money is going to be deployed to drive deeper penetration in existing regions, expand into adjacent geographies, and continue to scale distribution infrastructure. Alongside, the company also plans to strengthen its portfolio of private labels and brand partnerships. With this round, its cumulative funding has now reached $165 million. But for more on their plans ahead, joining me now is Angad Kikla, the co-founder and CEO of City Mall. Angad, thank you so much for being with us here on Startup Street. You raised $47 million in this round. Can you break down some of the top priorities as far as deployment of the capital is concerned? And, will it be more towards strengthening infrastructure or geographic expansion?
Sure. Thank you so much, Ritu, for inviting me and having me here. I'm excited to share our journey at City Mall. I think we've raised $47 million. And to answer your question, large part of it is going to get invested into replicating our lowest cost distribution supply chain infrastructure. We'll go deeper into our existing cities. So that is our first area of focus in the next 12 to 18 months. And the other area of focus for us is to continue to build a very strong portfolio of private labels and back-end brand partnerships. From an expansion point of view, we'll continue with our strategy of deepening our penetration in the existing geographies that we are in, while also growing adjacently into nearby states.
All right. Angad, when we talk about e-commerce in India, of course, there's a whole lot of commerce that is going on with giants like Amazon, Flipkart, Meesho, and then, of course, there is other sectors as well. In this $125 billion market, how are you going to defend against competition and avoid being outspent by these larger companies?
Yeah. So we are operating, Ritu, in a very different segment. While there are multiple players in e-commerce, and e-commerce in general is growing very fast. More and more people are coming and joining the e-commerce wagon from a consumer point of view. But the real white space that we've really identified, Ritu, is the fact that while there are more than 200 million consumers who are transacting on e-commerce on an annual basis, the spend of these consumers in the most important category, which is grocery, is extremely low. So the penetration of grocery in e-commerce is super low. This is largely dominated by consumer segments that are low to mid income segments, typically in tier 2, tier 3, tier 4 towns. And that's where we focus on. So we are building, the lowest price online grocery delivery platform for the most value conscious consumers. And it's a space that is complete white space right now, while the other e-commerce players are either focusing on different categories which are fashion, electronics related, or they are focusing on the more affluent part of the consumer base.
Well, Angad, you're talking about being the lowest cost distribution network, 3 times more efficient than your traditional e-commerce. Could you unpack very briefly what operational moves actually makes this kind of a claim possible?
Sure. So we have a very unique model of distribution, Ritu. What we do is that we work and partner with local micro entrepreneurs in these small areas and communities who are largely our distribution partners. These are basically people who are already doing some micro entrepreneurial job. For example, somebody who does milk delivery in the morning but does city mall delivery during the day. So we basically partner with these micro entrepreneurs in these small areas and communities. And by partnering with them, we are able to create an extremely low cost, zero fixed cost infrastructure.
Got that.
It's fully variabilized.
Angad, briefly, what about the roadmap to profitability now that you've raised $165 million? Do you see the company turning EBITDA positive in the near term?
Sure. So, Ritu, we are probably the only value grocery platform that is positive on a contribution margin level. So we basically make money on every order that we deliver to the end consumer. While we are now continuing to invest in growth, we are growing very fast. We are growing 2x year on year. And in the near term, our focus is to continue with our growth momentum while increasing our contribution margins and making more and more money at a unit level.
And we wish you the best with that, Angad. Thank you so much for your time here today. Thank you.
Thank you. Thanks, Ritu.
Well, with that, it's time to move on, and also on what's brewing. Business AI company Uniphore has acquired Orbi AI and Autonomate, 2 AI-native companies that the company claims will enhance the capabilities of Uniphore's business AI cloud. Now, both teams bring top AI research and engineering talent from DeepMind and Google, with enterprises betting their business models on AI-enabled transformation. Umesh Sachdev, the co-founder and CEO of Uniphore, joins me now to decode what these acquisitions mean, how AI is moving beyond chat to reasoning and action, and where India fits into this global race. Umesh, welcome on Startup Street. Uniphore has just announced the acquisition of Orbi AI and Autonomate. What was the strategic thinking behind these deals? If you could elaborate on how they strengthen your business AI cloud, and how soon do you see these innovations making a measurable impact for your enterprise customers?
Shruti, always great to come on your show and talk to you. We are seeing almost an exponential rise of demand from businesses, especially in US, Europe, and also emerging in Asia, for use cases around agentic AI. Our customers, about 2,000 customers that Uniphore has, several of which are Fortune 500 companies, are looking to Uniphore to drive business outcomes through our business AI cloud platform. And these customers, whether they are a big 4 consulting firm, a large insurance company, or a high-tech company like Hewlett-Packard, they're all looking to Uniphore to deliver this innovation at a very high pace. This technology is moving fast. Every week there are new things happening. Okay. And our customers now look to us to bring this innovation at a very high pace. And in that context, Orbi AI, a company headquartered in Palo Alto, and Autonomate, which has most of its team of researchers and engineers working out of Chennai in India, add a shot in the arm to our innovation engine that we can now take back to our customers and deliver even more powerful agentic AI solutions.
Okay. All right. Umesh, like I mentioned earlier, both companies bring top talent from DeepMind and Google. How critical is this AI talent race today, and what edge does this give Uniphore in the global enterprise AI market?
Shruti, what most people who are outside the AI industry don't realize is the intersection of people who understand the deep science of AI, but also how to now apply that deep science of AI to solve real practical business problems. That intersection of talent is very, very tiny in the whole world. And there is obviously a big demand for this talent pool. Now, this talent pool is being split into 2 directions. On the one side, there are companies like xAI, OpenAI, which are investing a lot of time and money on developing super intelligence. And some of the AI talent that we know of is getting very excited with that mission, and they're joining those companies. The
All right,
second type,
yes, go ahead.
I was just saying the second type of AI talent in the industry is getting very excited with fit for purpose AI companies like Unifor, which are all about business outcomes, business challenges. And in Orbi and Autonomate, we had two teams which were also trying to apply their research toward these business use cases. And now they're part of Unifor. They get a much larger platform to play with.
All right. Umesh, you've also spoken about moving beyond chat and predictions to AI agents that can actually reason and act. Can you break down for us how large action models and neuro-symbolic reasoning change the game for enterprises today?
Let me bring this to life through an example. We work with one of the largest insurance companies in the world, and they have not only taken processes like customer support and marketing and agentified them, but now things that are very core to an insurance company, like underwriting or claims, are also being impacted by agents. Now, if you put yourself in their shoes, this is a very regulated industry. And what these customers want is agents obviously bring a lot of value, automation, but they want predictability. They want this agent to do the same thing over and over, not hallucinate, not come up with a new idea when they're underwriting an insurance policy or a claim.
Sure.
To control these agents, to get these agents to be more predictable, is where large action model, a model that the Orbi AI team has trained, which now becomes part of the Unifor platform.
Yes.
And this new area, which most people will tell you is a research area called neurosymbolic agents, we now already have put it in production with some of our key Fortune 500 customers. And so that puts Unifor at the forefront of the business AI race.
All right, one final question, Umesh, before I let you go. You've built Unifor out of India and the Silicon Valley. How do you see India's role evolving in the AI value chain? And with global enterprises looking at sovereign and secure AI stacks, do you see India emerging as a proving ground for enterprise-scale AI deployment?
Well, Shruti, we've always said, even at a government level, that India is going to provide the talent that the world needs for AI. But at Unifor, we are just making that real. With the acquisition of Autonomate, which was this company and team working out of Chennai, out of the IIT Madras Research Center, at which Unifor also had our offices. We got in touch with that team. We realized that some of the work this team was doing in agentic AI was as good as any team in the whole world. And one of the two acquisitions now brings us about 60 engineers from Chennai. And that's a testament to the important role India will continue to play globally in scaling business AI.
All right, with that, it's time for me to wrap up our conversation. Umesh, many thanks for your time on Startup Street and wish you the very best going forward.
Thank you, Shruti.
All right, it's time for us to take a short break on that note. But up next, Amazon has completed its acquisition of digital lending and checkout finance platform Axio, formerly known as Capital Float. We'll get you the details and a chat with the founders on the other side.
Welcome back to Startup Street. Amazon has completed its acquisition of digital lending and checkout finance platform Axio, formerly known as Capital Float. With regulatory approval in place, the deal deepens Amazon's commitment to transparent and innovative credit solutions and building on a 6-year partnership that powered Amazon Pay Later. The venture says it is one of Amazon's largest acquisitions in India, marking a sharper play in digital lending. Axio will now operate as an independent NBFC subsidiary under Amazon's umbrella. Joining me now are Mahendra Nerurkar, the Vice President Payments at Amazon, and Shashank Rishabh, the co-founder of Axio. Also with me is Ritu. Mahendra, let me start with you. Take us through the contours of the deal. Can you confirm if this is a $200 million all-cash acquisition? And with Axio now part of Amazon, how does this fit into your long-term digital lending strategy? And if you could also tell us how Axio's tech and risk capabilities strengthen products like Amazon Pay Later and unlock new lending solutions for Indian consumers.
Thanks, Shruti, for having Shashank and me on your show. It's a pleasure. So while we don't disclose the financial details of the deal, I just wanted to reiterate how this acquisition really plays into the strategy of Amazon and Amazon Payments to expand the financial inclusion vision in India. We've been in deep partnership with Axio over the last 6 to 7 years, building a trusted relationship with the team as well as with the founders. And we have co-created products like checkout financing through Amazon Pay Later, which customers can today use on Amazon. We have built a franchise which is about 10 million users, close to 2,200 crores in assets under management, and about 1.8% of GNPAs. And we are really proud of that portfolio. But what's really exciting for us is the ability now through this partnership to extend credit solutions to millions more of consumers and small and medium-sized businesses. So whether it is about taking the existing Amazon Pay Later checkout financing product beyond Amazon to other use cases and merchants such as quick commerce, food delivery, commute, that's very exciting. And also extending into new consumer products beyond checkout financing, such as term loans, is the next horizon of growth for us. And then beyond consumers, it is about serving the small and medium-sized enterprises, which really helps us work on both sides of the supply and the demand side of the flywheel. So that's really what's exciting.
Got that. Well, Shashank, Axio already has about 10 million customers, or had rather. With Amazon's reach and balance sheet strength, what opportunities do you see in terms of newer products and financial inclusion?
We're very excited about the future with this acquisition and with this deal. As you know, we've been on a mission for the last decade to expand and transform access to credit in India. And I think we're just getting started, right? You asked about where we see areas of expansion. Let me share 3 with you as a start. The first is being able to deepen our proposition for our existing customers, create a seamless, unified experience for customers across Axio and Amazon, wider acceptance across merchants, and the ability to actually meet their credit needs as they evolve through the product that we're offering them today. The second big vector for us is expanding access. We do have 10 million customers, but we see this as an opportunity to deliver digital credit to the next 100 million consumers in India. And these consumers are in tier 2 and tier 3 cities, where Amazon is actively expanding its reach and distribution. And we're excited for the potential of this partnership to go really deeper into the credit pyramid in India and deliver financing in a way that is responsible. And the third point is around expanding the product portfolio. We serve consumers today across Pay Later and term loans. We're equally excited about extending credit to merchants and SMEs, who are the beating heart of e-commerce and GDP growth in India.
Well, Shashank, what exactly does customer-first integration mean in practice? And how are you going to balance Amazon Pay's integration with Axio's standalone brand and services as well?
Amazon brings synergies such as reach, unparalleled reach, deep technology capabilities around serving customers and designing customer interfaces, and importantly, customer relationships and trust that have been built over several years. I think with these synergies coming together, there is really an opportunity here for us to build out credit access in India but more importantly, build it out in a way that is responsible and transparent for the customer, and with a shared ethos of complying with all the extant regulations.
All right, Shashank. Mahindra, coming back to you, and my final question, this is one of Amazon's largest acquisitions in India. What does it signal about the strategic importance of India's credit ecosystem in Amazon's global financial services vision?
I think it's a great question, and I feel like it starts with working from the customer backward perspective. Today in India, about 1 in every 6 customers have access to unsecured credit in terms of checkout financing, and we see that as a huge unsolved or unmet need that we need to work on. And so, unlocking access to credit in a responsible and scalable way is a very fundamental problem that we are focusing on and trying to solve. It's something that we've been trying to solve with Axio over the last many years. And I think what this acquisition signals is a strong commitment towards that vision of driving financial inclusion by expanding credit responsibly, by serving various different cohorts of consumers, as well as small and medium-sized businesses. And I think what it also tells you is really kind of bringing together of 2 different teams that have a very shared ethos around regulatory compliance, risk, governance, and growing credit responsibly. Because I think what's very important when it comes to growing credit in a landscape like India is really about this approach of what we call as low and grow, is to really address the different pyramids of consumer segments that exist in India in very bespoke ways, starting them small, letting them use credit responsibly, and then gradually grow it over a period of time. So it requires a tremendous amount of resilience, patience, and a commitment to that mission over a long period of time. And that's what excites us about Axio and the team.
Well, Mahindra and Shashank, we leave it at that. Thank you so much for your time. And on that note, we're also going to wrap up this edition of Startup Street. From Shruti and me, it's a goodbye and thank you for watching.
To have you join us here in Delhi. He doesn't spend a lot of time here anymore now that he's not leading CII, but I know that through the course of his CII tenureship, he was spending a lot more time here in Delhi, so we do miss having you here in the city. But, we're talking about global uncertainty, and of course, we're all accustomed with the term VUCA world, but you have your own coinage, Sanjeev, and I want the audience here to pick up on what you believe is your philosophy. That's TURN: turbulence, uncertainty, rapid change, and novel strategies. Take me through what TURN is about. How are you using TURN to steer and navigate ITC through this period of turbulence and uncertainty?
Thank you, Shireen. It's always a pleasure to be on your, interact with you. So, TURN really reflects what's happening in the world. We have this business about geoeconomics, geopolitics. In fact, if we look back and see from the time we had COVID, it's been events and events. And then we have climate crisis, which was always there, but it's got more severe. It's right on the face right now. We have also the large changes that are happening on account of technology. AI is another chapter that's opening up, and all this is happening while social inequity is rising. I think the market is also getting transformed. Market is getting transformed because on one hand we have new marketplaces getting created, like the quick commerce and so on and so forth. On the other hand, consumer trends are changing. You have the millennials, you have the Gen Zs, their outlook and their needs are evolving, and their voice is being felt now. And regulations are also shaping products because of sustainability. So things are changing quite fast on account of many of these issues. And coming to the second part of how do you really embed this in enterprises? So at the end of the day, I think it's back to basics. But it's the right now it's really I would say the agility and the rigor of some of these facets that change. So to my mind, three, four things are very important. Portfolios need to be contemporary. So portfolios need to transform much faster than they ever did.
Okay.
So you need to be, and in ITC we talk about not only trying and scaling up the core that we have or using the core to address adjacencies, but continuously looking at vectors for the future. Like in the paperboard business, sustainable packaging is a future vector. So that's a continuous process, because that is what will take over in a much shorter time than it ever happened before. And to do that, I think investments in R&D have to go deeper.
What is the current R&D investment that ITC is doing? And I know that this has been something that has been part of the culture and the DNA at ITC for many years now, Sanjeev.
Okay, before I come to that, let me just finish the last leg of this. I think the third aspect that is very important is the aspect of resilience in supply chain. And resilience because of trade-related issues, trade-related barriers, geopolitics, and resilience also because of climate change. You can have one supplier somewhere, I think it was in 21 or 22, when the water levels in the Rhine River went down and people could not transport. So if you had a supplier there, your supply chain would be disrupted.
Right.
So your supply chains have to be, so I think these three are the facets that are very important. Now, R&D for us is very important. In many of the categories that we are there, we are challengers. So we realize we cannot just succeed by, doing the same thing. So innovation and differentiation is very, very important for us. And we have a large R&D center at Bangalore. We are incidentally some years back, a private research identified that the ITC Life Sciences and Technology Center was the largest private sector innovator in India. And we are, of course, not in the kind of sectors where R&D index is of a very high order. We are not in those kind of sectors. Yet, we were classified as the largest private sector innovator. Now, you had an interesting debate just a short while back on deep tech and balance sheets, etc. So, yeah, there is some stuff that happens in our R&D which I don't understand, and you need PhD, so I don't know whether it is deep tech.
It qualifies as deep tech or not.
But what I can say is that, in our research, there is stuff that takes 5, 7, 8 years to come to the table. Even when I'm developing, plantations for our paper business, which are disease resistant or weather resilient, by the time the whole thing gets commercialized is about a decade. So there are long-term investments there. When we made chocolates, it took several years to get something that was, we believe, better than what is available in anywhere, right? We launched a brand recently called Right Shift, which is for people above 40 years. It's nutrition-dense products with proprietary extracts. This has been in the offing for several years. The solutions were there. I think we were waiting for the right time, and I think this was the right time, so we brought it into the market. So there is a lot of work happening on R&D, and long-term also.
Enough patient capital at work.
Yeah, there is no hesitation from investing that. I think it's about citing the opportunity and the business case, and we remain committed to that.
Sanjeev, talking about citing the opportunity, let's talk about the big change that everyone is anticipating. And of course, that meeting is currently underway, and hopefully we should have clarity by tomorrow on which way the GST Council votes as far as GST rates are concerned. But the assumption is that for a large part of your portfolio, which is in the FMCG space, there are going to be significant reductions. I don't know about the cigarette basket. That's a different story altogether. But from the FMCG point of view, from a consumption, larger India consumption point of view, what could this potentially mean? What kind of unlock do you anticipate?
So I think this is a very bold step that the government has taken. It's the Honorable Prime Minister announced it on the Independence Day. And I think it's going to have multi-dimensional impact, because it's not just about rate reduction. It is also about simplification. It is also about ease of doing business. So the the changes are multidimensional and impacts are going to be even more profound. I think it's certainly going to make things cheaper for the common man. So it will fuel consumption. It will lead to a lot more formalization of the economy. It's going to make life simpler for corporates, for MSMEs to comply with simplicity in structure, and some of the processes, etc., getting streamlined. So I think it's a significant step forward, and it will remove a lot of friction and provide good momentum to the economy over a period of time. Yeah.
But, in terms of, I understand taking away the friction, which is to do with the compliance-related procedures that we expect the government to act on, and I believe some of those decisions have, in fact, been cleared by the GST Council today. But on the consumption momentum, given the reductions that are expected, are we expecting a big pickup? Because that's the expectation, that if there is any potential revenue loss, it'll be made up by a boost in consumption. What are you working with? Because for FMCG, the last several years, volume growth has remained largely flat. Do you believe that this could be the kicker that you were waiting for?
I think it'll be a very significant intervention to grow volumes. If we step back and see, in a country like India, where the penetration levels are low, per capita consumption is lower, why is it that consumption has been slow? I think it's simply because of the elevated table of costs. Between pre-COVID and today, things have changed. A lot of factors are external, and the other factor is to do with climate change and food inflation, which has been sticky. So in a common man's budget, you see, food is a significant part of the wallet, and that inflation has been sticky. So that's the reason why the consumption, we believe, has been under stress. But now that, if with the taxes going down, prices are going to go down, I think it's going to make a significant boost to consumption. Also, and it's not just one step, interest rates have eased. I think fortunately the inflation is also under control.
Yes.
The experience in the recent past with farm incomes has been better. So a lot of factors are coming together, and this is going to provide, I think, a significant more impetus.
A significant impetus, that is the hope. But on cigarettes, what's the expectation? There is a demerit slab of 40%. Do you expect that that's where it will hold, or that's where you will find yourself? Or do you anticipate that there could be more cesses and levies on top of that?
Well, I was just waiting for that question. So, you see, I am very well informed by what is stated in media. So I guess you know it better than I, but my understanding is that, what our expectation and understanding from whatever I'm reading is more that it's revenue neutral. What percentage will be here, what will be in some other form, or what will go back to, some other form of taxation to make it, how the bucketing will happen. I can't really comment. That will be very speculative.
Yeah.
But that's what we hear, and that's what we hope and believe will happen.
Well, the expectation is that it will perhaps be status quo in terms of rates. We may, in fact, see a higher incidence. I don't know if the demand for an additional levy that many states have moved to cater to revenue protection, but one will not speculate on that.
Historical data has shown that actually does not lead to revenue protection.
Yeah.
It leads to revenue depletion. Because of the illicit
market picking up. But, we talked about consumption. Let's talk about investment, because one of the peeves of the government has been that we haven't seen private investment, private capex picking up, despite the fact that we put lots of sweeteners and sops on the table. But in the case of ITC, you are actually putting money into investments. You've got a 20,000 crore rupee capex plan for Bharat, so to speak. What are you seeing as trends on the investment side from an ITC perspective as you build out for the future?
So we are very optimistic about the potential in the Indian market for the reasons I alluded to, the headroom to grow. At the end of the day, the economy, despite all the global challenges, Q1 was 7.8, which is brilliant, and we have been, the forecast are around 6.5 or so. So it's a significant growth there, and that opens up many opportunities. And that is why we are investing that kind of money. Although we are not in a I would say, capital intensive sectors, though paperboard a little bit, but others are not that capital intensive. But still we are putting that amount of capital because of the opportunities we see in FMCG, in agriculture, in paperboards, and tourism. So all of these sectors have enough headroom to grow. If I was to just give you an example of paperboard itself, we are the fastest growing market on paperboard. Of course, we do have challenges right now of dumping from some countries. Leaving that aside, as far as domestic demand is concerned, we need to add about 1 million tons every year.
Tourism is the big unlock that the government is hoping will also drive both investments as well as consumption, will also be a big job creator and a job generator. And I would imagine that one of the reasons for the demerger to finally take place as far as ITC Hotels is concerned is the fact that you finally saw this opportunity kind of unfolding and opening up. Where do you now see that business over the next 5 to 10 years, Sanjeev?
So, I think from India's development perspective, you're very right. Sectors like tourism are very important. You know, there is this whole concern on AI and automation and all of that. So some of the real brick and mortar business models is where a lot of jobs can come. So tourism is one. Agriculture is a very big one. Wood-based industry. So all of these are important areas. And tourism, certainly there is a huge potential. And we decided to, of course, demerge because there was potential.
Yep.
And our businesses had matured to a level where it could, stand on its own feet independently. And when we were, talking about listing, which is we listed just about some months back, we were talking of 200 hotels. Now in the last presentation, it's already 220. So obviously, the target needs to be substantially upped. We should be, it's 220 for 2030, but I think we should exceed that far more. We will set a new target soon because the headroom is huge. See, our rooms per thousand is 0.3. Globally, it's 2.2. And the many of the steps that the government is taking to promote tourism some are in place, some are in the making.
Yeah.
So all of this is really going to fuel tourism, not only in metros, not only in leisure destination, tier 2, tier 3 towns. So huge opportunities will come.
I can't let you go without giving us that headline. When do you announce that new target for the hotels business? If it's not going to be 220, it's going to be 220 plus. When do you announce that new target?
Oh, we should do it sometime, maybe when we make next year's plans, etc. We'll change it that time, yeah.
New opportunities. We just finished talking to Sanjeev Bikhchandani and Ashish Dhawan, and they're big supporters of the Indian startup ecosystem. But I don't know how many of you know that ITC is equally a big supporter of India's startup ecosystem because they're actually going and acquiring some of those D2C brands that have come up, and you've done a bunch of them. What do you see from a value point of view? How value accretive is this going to be? Are these acquisitions going to be for you in the next few years, Sanjeev? What's the thesis there?
So, as I said, the consumer market is transforming. And while we are scaling up our core and using the core to address adjacencies, but there are newer spaces that are emerging. And those such important spaces is where we are making the acquisitions to strengthen our portfolio, where we believe there's going to be a huge tailwind in future. So if you look at the sectors we have gone for, behind health and wellness. So Yoga Bar is a premium healthy products portfolio, everything natural. We've gone to a 24 Mantra, which is an organic brand. Organic has got a huge future. We've gone then also for Mother Sparsh, where consumers are today looking for specialized solutions in areas that are important for them. So baby care is a very, very important subject for the mother. So she's looking for specialized solutions, natural solutions. So that's where Mother Sparsh comes in. Frozen again is a category. It's a galloping category. It's going to become huge in future. So that's where Prasumma came in. And it's not that, we are building this portfolio inorganically and organically. So whilst we have done this inorganically, organically we launched a brand called Right Shift, which I spoke about.
Yeah.
We launched a brand called Prana, which is for aromatherapy and wellness. So
how much of all of this wellness stuff are you using? As a CEO today, having to deal with all kinds of uncertainty, how much of your own wellness stuff are you using, Sanjeev Puri?
Whatever.
Aromatherapy every night.
Every day in the office.
Every day in the office is aromatherapy, is it?
Yes.
What essential oil are you using to keep the stress away?
So these are earth-inspired ingredients. So these are formulations that are nature-based and actually give you the aroma that can keep you a little calm and peaceful.
We could all collectively do with some calm and peace. But you talked about the changing Indian consumer, and I think most businesses are grappling with the changes that we're seeing in the consumer market. What are the 2 or 3 big shifts that you're seeing? One, of course, I think what quick commerce has done is just disrupted fulfillment expectations. Now everybody wants everything in 10 minutes. What are some of the other big shifts that you're seeing in the consumer market?
So I think I alluded to some of the important ones. One is, of course, lot more niches are developing. Lot more niches are developing because the model of, the go-to-market model for the consumer is such that a lot more variety is accessible to the consumer, and therefore a lot more niches are developing. And the areas where niches are developing are areas of health and wellness, areas related to nutrition, areas related to hygiene, areas related to beauty, areas related to things like baby care that I spoke about. And these are the areas that are evolving. At the same time, there are markets that are evolving in the luxury and premium segment, which were missing from India. I think India is maturing as a market. These segments are evolving. And on top of it, because of the advent of D2C, the advent of e-commerce, segments are also getting far more competitive. So that's the kind of transformation. A lot is happening in that sense.
A lot is happening, but are there profits in the niches, Sanjeev?
Absolutely, yes.
There are?
Yes.
At this point in time?
You see, you have to bet for the future. These are some of the niches are categories of the future, so you have to invest for the future. So you have to, when these categories get scale, yes, the returns will be there. Yeah.
What about global aspirations? And we're all talking about Make in India brands going global across different categories. How much of that is something that ITC is working towards over the next 5 to 10 years?
Yeah, so far, I'll confess we haven't done too well in that. We've been more India focused, but we are starting to make our presence felt outside of India. I think in FMCG, the first step was to establish distribution setups in various countries, which has happened. We are exporting to 70, 80 countries now, and we are starting to invest. We are also starting to develop focused approaches in some countries. A small one, we've started with proximal markets, and then we will go beyond that. Similarly, in hotels, we have taken the first step in Sri Lanka.
Sri Lanka, yeah.
But yes, over the next 5 to 10 years, this is definitely on the agenda. This is one area that we haven't done too much, but it's a big opportunity for us, and we will pursue it. Yeah.
So besides going global, which you've identified as a priority or area over the next 5 to 10 years, what would the other top 2 priorities be for you that you intend to focus on with a laser sharp eye? Well,
I think we have opportunities in lot of sectors that we are into. So we will continue to focus on building the portfolio in each one of the sectors, so that not only we partake in the markets of today, but we are also building our portfolio for tomorrow and day after. So what happens when you are chasing the quarterly numbers or the yearly numbers, the tomorrow and day after gets forgotten.
Yes.
So this is an area that I'll really spend a lot more time, that every business of ours is building a portfolio for tomorrow and day after. And if you look at agriculture, we are talking of attribute specific, sustainable, value added. We are talking about biological extracts. Paperboard, we're looking at plastic substitutes. In FMCG, I already spoke about many of the things. So that's the kind of focus I'm going to be having. And the second area that to do this is going to be around innovation, our capability to innovate, capability to bring better solutions to the market. And the last one, I mean, it's actually three, which I spoke about also in the beginning, is about making sure that our supply chains are resilient. There are too many risks to the supply chains. Trade barriers, climate emergencies, disruptions, extreme weather events. So these are three areas where we will be putting in a lot more focus.
Yeah. This is the Leadership Collective, Sanjeev Puri. So I'm going to end by asking you, distill for us the top lessons that you've learned over the last few years of running ITC, that have helped you navigate the uncertainty and the difficult times, the ups and the downs.
Okay, let me put it in two buckets. One is I'm a firm believer on what we call the 3 V's: vision, vitality, and values. And in large organizations, or for that matter, any organization, I think people really engage and give their best when they see the castle that is being built. If they only have a line of sight of their activity, the level of engagement is not that high order. So everybody must align with the vision. And in today's world, we need a lot more empowerment because the circumstances are very dynamic, fast changing. But when you empower people, of course, you need to define degrees of freedom, but there has to be something that is guiding everybody forever, and those are the values. Those become very important. And in our case, if I look at one very strong facet of our value, and I think that has deep impact in the way that we work, is this whole belief that businesses have both a social and economic purpose. And businesses are, after all, economic organs of society. They are, in a way, we say, trustees of societal resources, social, environmental, and financial capital. And as trusted role is to preserve and nourish them. That's the role of trustees, right? And that is what guides all of our actions. That's what guides all of our actions with responsibility. And that's what creates the value of trust within the organization. So trusteeship and trust go hand in hand. And as a leader, you need to instill trust. You need to earn your trust. And that flows from the whole principle of trusteeship. And when there is trust, I think people also align with the vision well. So you can have a vision if people don't trust leadership. And when I'm saying leadership at various levels, the alignment may be in form, not in spirit. So these are important facets to look at. And when we are looking at the third aspect of vitality, I think one is the piece on empowerment, I think, which is very important, which I spoke about. Secondly is to have a clear set of directions or strategic directions which are very simple and clear on how the organization will grow and how the organization will remain competitive. So that's where, the definition of portfolio, and that's where the definition of the competency areas or capability areas to invest in, like, innovation I spoke about, digital is another, and so on and so forth. That's very important. And teams must have access to the resources they need. We can't expect people to innovate and create the best products if we do not have that R&D center which is world class. Or you cannot be cutting edge in digital if you don't have the cutting edge skills, talent, and the resources. So these are, it's just these building blocks need to come together. And that's what I believe in, and that's what I focus on.
Well, since vision, vitality, and values, the 3 V's that you spoke about are in place at this point in time, and you spoke about being category creators, but also looking at opportunities of the future. Leave us with what could potentially be a category that you hope to get into, that you hope to disrupt, or you hope to create?
Well, there are several categories that we are, which we are looking at. Now, for competitive reasons, I don't want to name too many of them.
Okay.
But one area certainly that it's a well-known, area, and I think India needs a lot of it, and India needs India-centric solutions, and I think that's the area of proteins.
So proteins that is going to be the category that ITC intends to disrupt as the next big thing.
In future, yes. Because we want to create an Indian solution. We want to create an Indian solution.
And that's where the R&D kicks in as well. But when you talk about the future, are we talking about a few months? Are we talking about a year? Are we what are we talking about?
Future, this will require, when we are trying to create a unique solution which is India specific, it will be a medium-term effort. It's not going to be a 2, 3, 4 months or 1 year effort. It's going to be a medium-term effort. You can't create disruptive solutions in 3 months and 6 months, and you have to be patient.
You do have to be patient. What is the one thing that's most exciting to you today as far as the India story is concerned?
I think what is exciting to us is that there are very strong structural drivers in India, a huge amount of opportunities, and we have a government that has, of course, done a lot of things and has very clearly stated the intent to do a lot more. And the first demonstration is the GST. I think that really adds to the excitement and dynamism in India. That's what excites us.
Sanjeev Puri, a pleasure speaking with you. Thank you very, very much for joining us and giving us a very broad and comprehensive look into what is happening at ITC, what's shaping the future of ITC, and what's shaping the future of India. Truly appreciate your time. Ladies and gentlemen, a big round of applause for Sanjeev Puri. Thank you very, very much for joining us here this evening.
Thank you, Shireen. Thank you.
Even after spending billions of dollars, we are unable to solve the cybersecurity problem. And one of the reasons for that was that we were always using yesterday's technology to solve today's problem.
So how long did it take to build the computer?
For quantum computer, we took around 1.5 years. The way it was so exciting was when the fridge came. Fridge was from Glucose and we did fabricate outside. People were on the truck from the airport, Bangalore airport to office, and we were all waiting in the basement for this to arrive. And that moment, it was unbelievable. Okay, finally we have this here, because we were waiting for 3 years. And the bigger moment will be next few years when we fabricate it here.
And that moment is a couple of years down the line?
No, next year.
Next year.